You are about to opt in to Monerotopia, a show for the Monero community where all are welcome to join. From noob to maxi, no matter what bags you hold. Just sit back and relax to the sweet sounds of Monero's latest progress. Or if you're feeling inspired, join us on stage. Remember, the only thing that can stop Monero is a false belief that it can be stopped. And if you want to win the revolution faster, we recommend you remove your XMR from all custodial exchanges immediately. Warning, voting accidents are common around here. Don't forget to properly secure your private keys. Monerotopia starts now.
Alrighty.
Hey, good morning.
What's up, Tony?
Good, doing good.
How's it going? No tux today. You're sitting in on a big one. This is a big show today. You got a lot going on.
It's a lot going on, yeah, for
Right?
sure. Yeah.
Big week with number go up. Perhaps not so much in price, but in terms of transaction count, that's for sure.
Yeah.
I think everybody has had their eye on that. I know I have been checking that daily, checking in on everybody's responses. So we'll be talking about that today quite a bit for sure. We got ArticMine who's going to be coming up. I don't think we could find a better expert to chime in on the what we're seeing here with Monero's response to increased transactions. We've seen dynamic block size kick in, so that's extremely exciting. And I'm sure we'll get a really good overview with regards to how Monero handled this spike in traffic. From my perspective, it appears to have handled it pretty well. I mean,
For mine too.
Transaction fees are low. Some are saying obviously maybe that's part of the problem. Maybe they're too low. We'll get into that with Arctic. I know there was some delay in terms of people waiting, right? If your fee was too low and you didn't bump it up a little bit, there was a delay, right? People stuck in the mempool, but that seemed to be clearing out pretty fast. I don't know. Maybe I'm wrong. Arctic will give us the overview as to whether or not things worked as intended and worked well. Obviously, too, the other, there's a lot to talk about there. Like, what was this? Right? Was this organic traffic? Most likely not. There's some speculation that maybe it was a darknet market that went down. I forget the one that recently went down, that rug pulled. I think it's like Incognito or something. Recently rug pulled. So there's speculation that maybe they were, clearing out, sweeping all their Monero wallets. I don't know. That seems a little far-fetched to me, right? I mean, I don't understand. I don't know well enough like how these dark markets function. Would that even be the case where they're just like clearing out thousands and thousands of wallets in that manner? So yeah, I doubt that's the case. It's probably more of I don't know, somebody giving Monero a run for its money, seeing what it can do. My understanding, it doesn't cost much to do what they did in terms of somebody who knows what they're doing. Just a couple of XMR a day to send all those transactions. Two, is it two?
To Monero, yeah. I've seen some calculators on Reddit. Yeah.
So more likely that somebody playing around with Monero, whether it was nefarious or they're just trying to test the network themselves. Who knows? Maybe Vic was just bored and he wanted to spam the Monero. The other thing we saw Nano getting spammed as well. A couple I think last week, the week before, which was interesting. We saw them getting spammed. I don't know a lot about Nano, so I can't really chime in as to whether or not that was handled well and as expected, or if they saw problems there. But kind of interesting that Nano got attacked. Then Monero appears to have gotten attacked as well. If nefarious, right? The nefarious conspiracy theory would be that it's an attack to basically gain insight into Monero's ring signatures, right? We could get into that, what that would look like and mean. But yeah, lots to talk about, man. Lots to talk about.
But the thing is, whenever Monero gets attacked, it only gets stronger. So maybe in other communities, when their coin will get attacked, people will get mad and stuff like that. But for us, I mean, me, for example, I kind of like when Monero is being attacked because then it's just going to become stronger. It's kind of like the Hydra. has 7 heads and you cut one off, and then it's gonna grow 7 other ones. So keep the attacks going, and the Monero is just gonna grow stronger.
Yeah. I mean, think of it as it's somebody funding research and development for Monero, right? Yeah, maybe it's only 2 Monero a day, but somebody's doing it. They're funding it, and they're forcing us to learn and evolve. Which, right? As always, right? I think that's kind of always the final conclusion with Monero. Silver lining here is no matter what's happening, the most promising part or response to all this is that the Monero community isn't just like, hands up in the air, like, oh my God, it's over, da 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 da. What are we gonna do? It's oh wow, this is fascinating, right? Yeah. It's the overall response, like the temperament is fascination and awe and interest and let's check the numbers, let's see what it's doing, let's see how it's responding. It's not, people running around with chickens without heads being like, oh my God, it's over, whatever. People fighting each other saying, whatever it is, right? Monero evolves, and that culture exists within Monero where people are curious from a technical standpoint and are excited about moments like these. And saying, like, how can we learn about it? How can we improve Monero if it needs to be improved? Let's take a look under the hood. Let's see what happened. Did it respond well? So that's the most exciting part of this, is just seeing the community come together, get excited about it. I see some talk about whether or not we need layer 2s, right? So it's going to open up that discussion as well. My personal take is, I don't know. Let's obviously stay on layer 1 as long as possible. We'll get into Arctic with that on that topic as well. That does this show that Monero can scale elegantly on layer 1 for the foreseeable future, or does it show otherwise? We got 70 people tuning in right now. Pretty high number. We've been getting high numbers these days. So incidents like this are also bringing in more traffic, I feel like, to the Monerotopia show as well. People are learning about Monero. People are learning too that Monero isn't just like a privacy coin, right? Most people who have heard Monero, kind of noobs, but like have heard the term Monero, they just think, oh, it's that thing that's private, right? It's a privacy coin. They don't know about all these other features that Monero has with regards to being a true cryptocurrency. They don't know about its dynamic blocks. They don't know about RandomX. They don't know about any of this stuff. So these are good moments. They're learning moments. People are watching. They're like, oh, look, Monero's getting spammed. And then they're learning, like, wait, why is the transaction fee going down? Yeah. Right? Like if this was Bitcoin, you'd be paying $50 for a transaction right now. Wait a minute. Yeah. What's going on? Why is it different? So these are learning.
Really funny. Yeah.
Yeah.
They're watching the chart. Haha, they're getting spammed. Wait, the fee is 0.0. What's going on?
I saw somebody doing a talk yesterday. Forgetting the guy's name. He's a good guy. He runs the one that runs the Digital Cash Network, or what's his name? I'm sorry. I apologize for not knowing his name. He's a big Dash guy, but he also talks about Monero quite a bit. I saw him doing a live Twitter yesterday, and it was with regards to the Monero attack and Nano. And yeah, even there, people are interested, right? Outside of the Monero community, I see them talking about it. Even some kind of, people not fully understanding it there. People like thinking that the transactions were going up, like transaction fees going up. Like, no, actually they were going down. No. So it's good to see. It's bringing people in. So 88 people watching, guys. Like and share. Get it out. Let's get it out beyond everybody that already knows Monero, right? It's kind of up to us to do that. Nobody's going to do it for us. They're trying to hold Monero back. Nobody's doing us favors here, guys. Nobody's going to get the word out on Monero. We have to do it. So like and share, grow the show, get noobs in here, get them learning about Monero, get them learning about dynamic blocks. And yeah, I'm bringing up Monerotopia. I got it up on the screen. Monerotopia conference we've been doing for the last, this will be our third one. So we've done 2 before. Yeah. Tony was there for number 1, man. Tony was there in the trenches in Miami. That's when we met you, right, Tony? That was our first run-in.
Such a good time. Yeah, such a good time.
not only were you there, you had stepped up to volunteer, and you basically helped run the AV for 2 days, right? With like a
Yeah.
laptop on your.
Yeah.
These conferences, part of the theme is kind of organized chaos. It's part of what Monerotopia is. It's not like this super well oiled machine, pristine conference that you walk into. It's slightly chaotic, and we like it that way.
Yeah.
Or at least I do. It keeps it open and approachable. It's just about getting people to come collaborate. Obviously, Sunita and I, run the day to day with getting it off the ground, but it's really a community based conference at the end of the day. And anybody who's been watching us knows that we're extremely open minded people, especially when it comes to getting involved, helping out, making it bigger and better. So that's what Monerotopia is all about. It was in Miami the first year. Then we had it in Mexico City last year. It was a freaking blast. A big part of the conference is the marketplace that we have tied into it. That's become a theme. So Monerotopia is about learning about digital cash, obviously Monero in particular. A lot of like Liberty tech talks. Then we also have other crypto, privacy tech, or digital cash related projects involved. Reach out if you're interested, by the way. We're very open-minded in that regard, as long as you're not some like scam project. If you're doing something interesting, that's inventive, and you have a strong community that's like into it for the right reasons, that are also trying to opt out and use digital cash, we welcome you to join us, and you could come teach us about the tech that you're learning, that you guys are working on, and then you can bring your community to come learn about Monero. But everybody there that's at the Monero conference is interested in this idea of opting out and using digital cash outside of the traditional fiat system. Obviously, we think Monero is the best tool to do that for all the reasons we talk about all the time.
Yeah.
And that's a big part of the conferences, but we allow other projects to come and present and tell us what they're working on, and that worked out really well in the past. And it also helps fund the conference and keep it super cheap for tickets. Like we keep it, we don't fund this through expensive tickets for attendees. Rather, we fund it through the sponsorships.
Yeah.
So that's an important part. Like Xano was a big part of the conference last year. Particle, Firo, Oxen/Session. I'm leaving out some, but these guys, they were a big part, and they presented their projects, and in return they acted as sponsors, and so they really helped fund the conference, and it was great. Anybody who was there knows it was great. It wasn't a maxi fest. It was people talking tech and talking about opting out. So I'll just quickly go through it. It's going to be in Argentina, Buenos Aires, November 1st through the 3rd. Hold on, wait. I'm on the wrong screen here.
One more thing that I want to add, actually. So if you want to talk to any of the speakers, it's not like one of those conferences in which they talk on stage and then they go in the VIP section and just sit there all the time. You actually get to talk to everyone. It's like, I feel like you're with your family, because you get to talk to everybody and it's engaging.
Yeah,
so it's not like speakers give a speech and then, all right, gotta go, and then
it's intimate. You're right in there with the speakers. When they get off stage, they're hanging out with you, drinking a beer with you, and you're talking to them. The Q&A is very engaging. It's not like pre-written questions where we're just trying to throw people softballs and they're invited there to shill their stuff. You come to Monerotopia, you're gonna get grilled. Even if you're a privacy tech sponsor and you gave us money to be part of the conference, and we're giving you a platform to come talk about your project, expect to get grilled, but in a good way, right? This is and if your project's interesting, it will survive the grilling, and people will come away more curious about it, not less. But you're going to get grilled by very intelligent people that attend the conference, that will be raising their hand, asking you the tough questions. So it's really cool in that regard too. Tickets are, early birds are $89 for general admission, $249 for VIP. the biggest difference between the VIP and general admission is the speaker dinner. So yeah, once again, that really kind of gets you in the in the room intimately with everybody. On the Saturday night, we all go out for dinner. We all hang out together, and it's really cool. There's other perks with the VIP as well, like different swag, stuff like that. And then we have the local ticket, which is super cheap, $25. It's meant for people. Really, we call it the local ticket. It's for people that can't afford it, right? So this is supposed to be accessible as possible. If you want to come learn about Monero, we don't want to stop you. Even if obviously if you live in Argentina or in the area in South America, and even if 25 is too much for you, reach out. We'll give you a free ticket. You come for free. We're not trying to cut off access to anybody who doesn't have the funds but wants to come learn about Monero. So that's what that is. We ask people don't abuse that. If you could afford it and you're coming down, please buy the regular GA ticket. Most people end up buying the VIP actually because if they're into Monero, they want to come hang out at the dinner. But yeah, that local ticket is open to essentially anybody who can't afford it. We just ask people don't abuse it. And yeah, once again, the way we keep those tickets super cheap is because of our sponsors, our privacy tech sponsors, our big sponsors like Cake Wallet. Cake, we haven't made finalized a deal yet this year, but they've sponsored every conference in the past and have been our biggest sponsor. They're a tremendous sponsor of the show as well. So I have no doubt we'll be working with them on this. Vic is very well aware and excited of the conference. We just haven't finalized things. Scrolling down further, we are going to incorporate a hackathon this year. This came out of discussions with Luke Parker in Mexico when he was at Monerotopia, and he's walking around. He's like, "This is amazing. We should do a hackathon next year." So we're going to do that. What else? We're doing Copa Monero. I won't get into the details today with that because we have stuff that we'll announce soon. But basically, that's going to be a soccer tournament or a football tournament that's taking place in Argentina leading up to this conference.
That's so cool.
The Formosa region of Argentina. If anybody watches the show is familiar with Formosa, Ibarrete is a small town in Formosa, a.k.a. Monero Town. Where a young gentleman by the name of Alessandro has really lit a fire under in his community with regards to Monero, and has a lot of people accepting Monero there. And actually, the soccer thing is not random. It's part of the reason why Monero grew in adoption there. They were originally using it for gambling online, for doing soccer gambling. So we decided to do a Monero soccer tournament, and it'll be held in Monero Stadium in Ibarrete. It's going to be 12 local teams to that region that will be competing, and they'll be playing 15 games over the course of a couple, 4 months leading up to Monerotopia. So that's super cool. And anybody that sponsors the Monerotopia conference will also essentially be will be given one of the teams to sponsor as well. So we'll have, Zano team playing against Firo team playing against whatever, Wownero team playing against IVPN team playing against Cake Wallet team. So it should be really cool. All the games will be live streamed. We got a good company that's going to help us out with that. So it should be actually pretty professional looking. So people will be able to tune in, get excited about that. Maybe there'll be some sidebar Monero gambling taking place. I don't know. Have nothing to do with that if that happens, but I could see that potentially happening. So that will be part of the conference and thrill and leading up to the conference. And then, wow, I didn't realize we're already posting the speakers. All right, guys. So we have these should be familiar names to anybody who's in the Monero community, big names. So we reached out to the people that have spoken in the past that we regard as, kind of critical to being part of this conference. So we got Francisco, ArticMine, who's going to be on today. He's a Monero core team member and much, much more, a Monero scaling expert. He will be there. We got Luke Parker. Everybody knows Luke Parker at this point. He's working on huge things for Monero. Serai decks. He's working on adding full membership proofs to Monero. Justin Berman, also a Monero superstar dev. He's also working on full membership proofs with Luke and other aspects of Monero. Jamptus and Seraphis. These are the guys, right? So this is the Monero part of the conference. We got Rucknium. He will probably be remote because he stays anonymous. All these other guys will be there in person. Rucknium often does research on improving Monero's privacy, kind of studying the potential probabilistic attacks on Monero. So very cool. Amir Taki, one of the original, Bitcoin crypto cypherpunks. This guy's a legend, and it's just it's a tremendous positive sign to me that he's embraced Monerotopia. He really enjoys what we do at Monerotopia, and he'll be coming to this one. He'll be representing DarkFi and talking about that project that they're working on. So Amir Taki's there. Just one of the people you'll be hanging out with at Monerotopia. Pavel Luptek, another what I would consider famous cypherpunk. He'll be there as well. He was at the last one, and many, many more to come. So in summary, get your tickets and reach out to us at monerotopia@protonmail.com if you want to participate in any way. monerotopia@protonmail.com if you want to be a speaker, if you want to come and be a vendor. We're going to have the Monero marketplace that's taking place there. It's a full live marketplace that's already happening in Plaza Serrano in Buenos Aires. And we're just going to get them the weeks leading up to Monerotopia. We're going to get all the vendors to agree to accept Monero and be ready to accept Monero. But in addition to that, if people want to come and vend, they want to come and sell something, some product or even a service, and they want to let the world know that they're out there providing these products and services for Monero, come down to Monerotopia. We'll give you a table. We're not going to charge you for that. If you're like some small time and you just want to come and let the world know what product service you offer for Monero, we'll give you access at the conference, set up a table, things like that. Reach out to us for any other ideas. I don't know. You want to come and do an art installation there. You want to come and DJ, whatever it is. Reach out to us, monerotopia@protonmail.com. Wow, we got 130 people listening right now. This is fantastic.
131, yeah.
Holy shit, I think that's a record.
I think so. Yeah, 134.
Beautiful. So yeah, in November in Buenos Aires, it's gonna be fucking kick ass. It really is, man. I mean, as long as we had a lot of issues last year with internet and everything because where we were doing it, and it was still amazing, right? I mean, well, actually, Tony, you missed last year.
I know.
Holy shit.
Yeah, but this year, I'm actually gonna be able to make it. So
okay,
this year, yeah.
I mean, just the content alone that came out of that thing. We're still posting videos to this day. We had the live speakers, and then we had remote speakers. We had about, I don't know, like freaking 20 hours of content a day for 3 days if you combine the live speakers and the remote. And good quality content. Now, I'm not talking about people just talking about the price of Monero in 10 different ways. And, this isn't a Bitcoin conference. This is an opt-out, free speech money conference where we're talking about the tech. We're talking about actually using it. We're talking about what needs to be done to win the fight. It's thrilling. It's exciting. And the best part is the people that it attracts. Yes. It attracts good people, intelligent, open-minded people that want to just come and learn and engage and build out the Monero circular economy. So that is my rant on Monerotopia. Tony, let's keep it moving because we have a super long show today. Let's bring up Bawdy. We'll do price report. That's gonna take a minute or two because there's a lot going on there, and then we'll get into the super juicy stuff with ArticMine talking about the Monero transaction count going through the roof and what it means for Monero.
I actually have one more thing to say. The Monerotopia content that is being produced in the conference is so good that I'm still going over the PowerPoints from the first conference.
Dude,
I know, and it's such a good vibe. Like you're sitting there listening to people. I mean, ArticMine is behind you, like it happened to me, and like all these people. Then you get to talk to them, and it's just such a good vibe. So, definitely buy your tickets, and I hope to see you there.
Good stuff.
Yep. Now let's go over.
All right. Let's keep moving.
Yep.
Price report. Let's do it.
The Monerotopia Price Report segment is sponsored by Local Monero. Avoid using KYC exchanges. Buy and sell Monero directly for fiat, peer-to-peer.
Alrighty, Bawdy.
Hey, what's up,
going
guys?
on, man? How are you?
Good. How's it going?
Good. Another crazy week, right? It's very entertaining.
I'd say it was definitely more calm this week than perhaps last week.
Well, I mean, in transaction count, right? Price wise,
yeah.
I guess for Monero things aren't too crazy, but still exciting for price. We're at all-time highs for Bitcoin. It's just kind of teetering there. Nobody knows is it gonna fall off a cliff or continue another leg up. Monero, I guess, has kind of come back to its equilibrium, right? It's stuck at 150 again, which is I don't know. I would see that as a good thing, but I guess you'll get into that. So exciting in that sense, I'd say.
Yeah. So I guess we might as well start with the transaction counts just to give everyone a little preview. I know Francis will cover this in great detail. But yeah, yesterday we hit like 120,000 transactions. Actually, that looks like 138,000. I'm sure it depends on where you want to do the cutoff. You know, typically you use Zulu time. That's typically what you'll use for checking your day-to-day numbers. But maybe this chart uses a different time frame. Anyways, yeah, just massive pumping in transactions. So we're not really sure who it is, but maybe it's not an attacker. Hopefully it's just Fiat Jeff making a contribution to the Monero miners.
Oh yeah, if you want to give people like just a quick background on who that is.
Oh, okay, yeah. So there was this guy. His name is Fiat Jeff, like JAF. And last year he had proposed that the best way that they could help Bitcoin was to fund attacks against Monero and Ethereum. And he had a tweet, and then I think he had something on GitHub where he said, "All right, I'm gonna start spamming up the Monero blockchain to bloat their blockchain." And then nothing ever happened, so we were kind of like, okay, whatever. Jack Dorsey thought it was a good idea to fund him, not for that, but for Nostr. Jack Dorsey gave him money to fund Nostr, so I don't know. I guess we thought, all right, so this guy he got his money from Jack Dorsey, and then he went off to start doing Nostr stuff, which is, hey, bro, that's better. Build something rather than go and attack someone else. But it was just kind of like lulz all around. Like, bro, you're going to help the miners, right? You're just giving money to Monero people. And how are you going to get that Monero anyways? You're going to buy it, right? So if you want all the Monero for those transactions, you're only going to help our price at least a little bit. So now that we've got the spam going on, the Fiat Jeff has been sort of resurrected in our mentality here, or in our minds.
Was there like like a recent statement from him, or people are just bringing it up again from when he had originally said he wanted to do the attack?
No, they're just bringing up the original.
Okay.
I think it was a year ago. Maybe it was slightly less than a year ago.
Yeah.
Whenever Nostr came into prominence, that's when he made his semi-infamous tweet.
Yeah.
Hopefully it's just Fiat Jeff. Hopefully he finally got around to trying to spam up the blockchain.
Yeah, hopefully contributing and doing research and development for Monero. We appreciate it.
I mean, there are some questions like, is this just script kiddie level work, right? Is this just a small attacker that's playing around? Maybe they've had some gains recently, so they're like, okay, let's play with the Monero blockchain. Is it perhaps a developer that's like secretly trying to expose something that they know is a bit of a problem? Maybe, I don't know, or maybe they're just testing the network. At any rate, we did find there was a weakness found with Wallet 2, where the automatic fee setting wasn't bumping fees higher as the transactions started to saturate the current limit on the blockchain. That's obviously being fixed. The solution for that now, for everyone that doesn't know about that, just don't set your fees automatically when you're in the Monero, like the regular Monero wallet. And I think also Feather Wallet was affected because I think they use Wallet 2 as well. Wallet 2 is kind of like it's the module that does the wallet work in Monero. I think most wallets integrate that. Anyway, so don't set your fee automatically. Set it high. and that will help the Monero network to adjust the dynamic fees, right? To adjust the block size higher, because part of that I think is based on fees. In other words, if you set a higher fee, then miners are now incentivized to break the block limit, because they're allowed to break the block limit. It's just that they have to pay a penalty for that. So if you pay them higher fees, then the penalty becomes justified for them, and that makes it able to raise the block size overall, where there won't be a penalty for them to include more transactions. But I think all those transactions have now cleared out at this point, or pretty much all of them. I want to say I saw a post late last night by Tux saying that most everything had cleared out by now.
Yeah, I saw. Obviously, we'll talk more about this when we have Arctic up. But Bawdy, what is kind of your overall take? Do you think this showed Monero working as intended? Do you think it showed weaknesses in Monero with regards to its scalability and being able to handle the increased transaction count? What was your takeaway in that regard in terms of how Monero handled this?
I don't think we passed with flying colors. I think there was a few problems that were revealed, particularly with the with Wallet 2 and the automatic fees not being set, or having that bug there, right, where the dynamic blocks weren't able to adjust perfectly. I do think
and to be clear, that wasn't a protocol issue. That was the wallets integrating with Monero kind of having their settings wrong. Is that correct?
Yeah, that's true. At the same time, it's kind of like Wallet 2 is part of the whole project. A big thing that we like to talk about is that Monero is, we develop all the component pieces together. We're not sort of like disparately developing different parts of the Monero ecosystem, or at least at a minimum, there's sort of like at least one fundamental implementation, even though there are other implementations. So, but yeah, I mean, you're right. It wasn't a protocol issue. It was more so the wallet issue. But it does reveal how, if people don't use the protocol, or if the wallets or the primary wallets being used aren't leveraging the protocol appropriately, then dynamic blocks can't work. If the users, quote unquote, to use that term very loosely, if the users aren't using the protocol appropriately. But I mean, it was really cool. We did finally get to see dynamic blocks in action. We saw it. We saw the scaling solution that had been proposed actually get a real, I think we've seen it happen once before, where dynamic blocks kicked in briefly, but we haven't seen it for such a long period of time. So I do think it was really interesting. I do think it was a great thing to see that this actually does work, and it maybe needs a little bit of tweaking, but it doesn't seem like it's something that, like, the problems that we had, I don't think are fatal. They're not major. They were minor.
Yeah, we're obviously not the only ones who think it's interesting. We got 195 people tuning in live. This is, I think, a new record. Guys, like and share. Let's get up to 200. And then on Twitter, we're at over 130 people watching live on Twitter. So it's having a good effect here, right? People are interested. So perhaps the Monero transaction count wasn't organic, but it seems to be, ironically, creating organic interest in Monero, similar to when we had the delisting, right? We saw the Streisand effect there. That was our biggest show at the time. People tuning in. We're seeing a similar thing happen now with Monero. People interested, I guess, in its transaction count and how it's responding. So super cool to see that. We're at 200 right now. We just hit 200, 199. Holy shit. So go ahead, Bawdy. Take it away.
Smash the like and be happy. Okay, so let's see what we were talking about. Where were we starting on? We're on the Monero transaction counts. Where to start today? Oh, I guess the big headline news, not crypto news. Well, the big headline news was that Bitcoin technically made a higher high, technically put on a new all-time high. Where's that chart? And I had that chart pulled up. I'm a little bit disorganized this morning. Sorry about that. Let's just go left to right. That'll make things easy. We'll knock out the macro stuff. Nothing really changed with the macro. The reverse repos, like I talk about all the time, is still sitting here at 440 something billion. Still room down there for this thing to keep going down. Although, as I tell you guys all the time, markets learn. And so people realize now that the reverse repos were definitely kind of a leading signal of the bear market that was coming, that would sort of last for a while. So it could be now that people looking at the reverse repos, it's possible that even before this thing hits zero, that markets might top. That could happen. Again, because markets learn and people front run the big signals that were identified in the last cycle or the last run up or the last drawdown. We also saw the Dixie here, where it had a kind of a reasonable sell-off. It wasn't huge. This is not anything major. We're still inside of that compressing volatility that we've talked about for months now, where the Dixie is making progressively more shallow moves, progressively less violent moves. So probably part of the run-up that we've seen over the past month has been somewhat related to the fall in Dixie, which would surprise no one because inflation, basically, right? If you're going to say, hey, there's more inflation, the dollar's getting weaker, perhaps even relative. The Dixie is technically relative to only other currencies. So I'm sort of really kind of saying something that's not quite true there. I should probably take a step back here. The Dixie is relative to other currencies, particularly the euro, Japanese yen, Canadian. What is it? What are they using? Canadian dollars. I forget what they use. I think the Aussie and then the Swiss franc. Anyways, it's like 60% euros. So in a lot of ways, Dixie is about like where's money flowing. And when people are optimistic, they like to get into the US stock market. So Dixie tends to or they actually, when money's flowing, people, it sort of depends. A lot of times people like to go into the safety of the dollar, right? When markets are going to go down, which is the reason why when Dixie went up so much, that was a sign that people were going to safety. And the dollar is like, everyone kind of knows that in bad times, the dollar is sort of the least bad fiat of them all. And if you don't want to be holding stocks or risk assets, often people just go straight into dollars or bonds. Anyways, yada, yada. The Dixie is really just kind of compressing volatility here. It fell a little bit, and often Dixie tends to be anti-correlated with market gains, with risk gains. So as Dixie goes down, you tend to usually expect that both gold and risk assets will tend to go up. But okay, Dixie, not much to see there. It is kind of hitting a little bit of a boundary here, the lower standard deviations, and also this very long-term line. So it is possible that Dixie's going to take a little bit of a break here, which would probably correlate mostly, if nothing else, with gold. So gold actually put on some fresh all-time highs, and it finally broke out of this pattern that we've been looking at for like a very, very long time. So, but I mean, what are we looking at here on gold's gains, right? 7%. Now for gold, that's a big move, but that's not like when you're talking about crypto where Bitcoin off the bottom went up 4x already, right? What did gold do? At best, might say 36%. So again, gold is a safety play. It doesn't go down that much, doesn't go up that much either. It occasionally can get revaluated massively, but yeah, gold did put on an all-time high, a fresh all-time high. It closed the week above the all-time, and it popped out of this long-term pattern that we've been talking about. So,
dude, certainly an indication probably of bigger things, right, happening behind the scenes. When gold moves like that, there's usually something going on, right, on a global level. No, I mean, what did you thinking there?
The way I'm thinking about this right now is that it's effectively a pressure release valve. So much has gone up so much, right? The stocks have gone up and crypto have gone up and risk assets have gone up, and like everyone's celebrating, right? Everyone's at all new all-time highs basically, or close to their previous all-time highs. And gold had just kind of hung out here doing nothing, right? Like gold made an early peak in 2020 after all the bullshit that happened, or in the middle of all the bullshit that was happening. And then it just like leveled off, it flattened off, and it's just been sideways ever since. Meanwhile, everything else has put on all these new gains. Like the stock market and crypto continue to run massively after, if you look down here, that's August of 2020 when gold peaked out. So realistically speaking, like gold should probably be much higher. This is probably a pressure release valve. Although, yeah, I mean, you're right. Like when you see movements like this in gold, you should definitely suspect what might be happening in the background. Right. Is money moving? What could be going on?
Did we see historically? Did we see a big spike, a big candle like pre-COVID? Did we see something in like February 2020 or like January 2020 even? Before
gold had already started a big, and this is a common pattern that you'll see actually for the last 2 decades. Gold will start a big movement to the upside, and it'll start that movement well before like the big bull market kicks off, or it'll start that movement well before some tail risk type of event happens. So this right here is this is March 2020, where I circled in purple for some reason. Usually I do yellow. There we go. So that's March 2020. But you'll notice that gold had already started rising from kind of like a a very macro sort of low. Let's take a look here. Let's go back a little bit further. This was sort of like the big macro low that happened in 2015. But gold had another like final pullback in 2018. And then from the bottom to the top there, that's a 76% move, about, maybe, if you, I'm not quite doing that right, about 80%, right?
What was the date of that bottom over there, that local? Yeah.
That would be August of 2018. So gold hit a local bottom, August of 2018. And I believe that was right around the time that the markets were doing a little bit of a taper tantrum. Let's go where I have the NASDAQ and take a look at 2018. Let's go to the weekly.
You know, man,
August.
Everything has gone up other than Monero. We'll get to that.
August of 2018. Yeah, so, okay, this is right where the markets were having what they called taper tantrum. It was right before the market started that, and they dropped. But that wasn't all that much. Like, so effectively the Fed said, hey, we're gonna taper our purchases of toxic mortgage assets, and it's going to be like watching paint dry, is what they said. So effectively they were reducing their balance sheet, and the markets were like, oh my God, it's the end of QE that has supported us for the last decade now, and everything is going to go down. So the market sold off to the tune of 22%. And everyone called that the taper tantrum, where the markets were throwing a little hissy fit about the Federal Reserve not pumping their bags as much as they would have preferred. But yeah, interestingly enough, as the market was entering this quote unquote taper tantrum, gold back here was just starting a big rise. It was just starting a large movement. We've seen this happen before too, as well, where gold will actually start a large macro move ahead of markets, and then markets will turn around and rise with gold, and then gold will top early as markets continue to pump. That's just been that's historically the pattern. I even have a chart about this. I don't have it pulled up right now, and I don't want to, it'll take too much time and delay the show to try and find it. But that was a big sign to us actually in January of 2023. It was a big sign that gold was already moving. It had already started a reasonably decent move. If you look back here, right here would be the end of 2022 and the beginning of 2023. Gold had already made a big macro sort of local low, and it was already moving, right? So that was kind of another sign to us. Hey, gold made a macro swing low, and now has started a big move to the upside. That's probably a sign that markets are going to be positive, right? That was one of the many things we looked at back then. So right now, I'm not necessarily sure I would interpret gold movement this way. I think that it's more so, my intuition says, and again, I don't have necessarily like a bunch of data to show this, but my intuition says that right here, this is probably more of a release valve. They suppressed gold, they kept it down, right? They didn't really like let it get too much. Everything else was pumping, and so that sort of, again, it distracts the attention into other assets. And then now, as everything is pumping and making new all-time highs, now gold is, you got Peter Schiff out there, I don't know, I haven't seen his tweets, but I have to assume he's saying stuff like, buckle up, we just made 7%, and everyone's laughing. 7% is a Tuesday for us, for crypto people.
Yeah, then anytime like Bitcoin does any minor any pullback at all, he's like, look, it's it's done, it's over.
He had something that looked like a pro Bitcoin tweet recently. I was like shocked.
Did he?
Yeah, I was like, did Peter Schiff just say something? And then I looked at the his @ I was like, is this the real @ Peter Schiff, or is it a fake? It looked like the real @ Peter Schiff. So did we ever
have Peter Schiff talking about Monero? I don't think he's ever muttered it, because he definitely, if you really break down and listen to what he says, right, and what his his logic is, he would definitely be more a Monero person than a Bitcoin person if he was going to be logically consistent, or if he actually meant what he says, right? Because his ultimate argument with Bitcoin is that it has no utility, no innate utility, right? Whereas gold does, and he even says, for example, you can't even use Bitcoin to send stuff anonymously. He's like, so it doesn't even have that as a utility. So that argument kind of aligns with my personal thinking, and I think a lot of Monero people, right? And that's what gives crypto, its base utility is this value proposition of being able to send stuff censorship resistant without surveillance, and like that's where the base utility really comes in. And he actually aligns with that viewpoint, if he means what he says.
Yeah, there's this kind of silly notion. I understand why they have it, but when you really dig down into it, it's a bit of a silly notion that gold has fundamental value. Gold has innate value, and it's kind of funny because the libertarian position is supposed to be that value is subjective. Value is relative to the
Right.
people that make the valuation.
The true Austrian, right, believes that value is completely subjective.
Now, what's interesting is that if we go back a little bit and we look at gold and we ask ourselves, how did gold become money? Well, if you talk to people, to some of the gold bugs now and the anti-crypto people, they'll tell you, well, gold has industrial value, right? They'll try and make the appeal to the commodity money. And even though technically gold is labeled a commodity, it's not a consumable. It's not a commodity in the sense that it's useful for anything other than ornamentation, right? Jewelry. Now, in the modern electrical age, okay, yes, gold is used for its low resistance properties, right? In the electrical age, we use gold for certain things. But before, say, 100 years ago, 150 years ago, the only purpose gold had was ornamentation, which is interesting because the ornamentation use case actually overlaps significantly with the monetary use case, right? Gold is highly recognizable and it's scarce. So people intuitively understand that, oh, this is a scarce asset, but it's also recognizable and it's also kind of beautiful. There's other stuff that also looks kind of orangish, but gold has this nice luster, but it's also got durability, right? It doesn't corrode like other metals.
Yeah, there's really no other element that checks all the boxes that gold checks. I mean, the closest thing obviously is silver, right? And then the fundamental difference there is that gold is more dense, right? So it could hold. It's easier to even it could transfer more value, right? Per unit, you know.
I would also say that silver is less recognizable. Right, gold is more recognizable. Like you can pretty quickly and easily know that you're dealing with gold. Nowadays, okay, maybe they tungsten plated whatever, but back in the day, like it was a lot easier to be able to tell that you were dealing with gold. So, yeah, I mean, so the ornamentation use case in days past eventually sort of illustrated, I think, in a very organic way for humanity, these necessary properties that money has to have. And so from that, gold ended up transferring into this sort of monetary use case. But money is a shared social abstraction. Now, money needs to have particular properties or something, whatever you're going to use as money needs to have these particular properties to be able to fill that function as money. But overall, money is really just a shared social abstraction, and gold had the sufficient properties, and its use as ornamentation sort of developed that social abstraction, and it helped humans kind of develop further levels of abstraction in terms of what money really is, right? To the point that now we have fiat that's backed by nothing, just pieces of paper that some government says is worth something. But it works, right? Why does it work? Because everyone thinks it works, because everyone shares that social abstraction and everyone operates off that same level, off that playing field. And what's more is that if you're a gold bug, or if you're like, money must have inherent fundamental value, other than, of course, the problem that there's no such thing really as inherent value, it's just subjective to the user. Is that you got this fiat system that's not backed by anything. I guess you could say by the military, but a lot of countries don't have a military. You got this fiat system and it's still functioned for like 100 years now, right? It's still going. So it's like, obviously shared social abstractions, even if backed by quote unquote nothing, can still function and serve as money for some period of time. And you might spend your entire life saying it's going to collapse, and then you might die and it might still not have collapsed. So how is that going to serve you in your life and your children? Like, okay, sure, be prepared for tail risk events and maybe the money will collapse or whatever. But so it's like all of these arguments that these gold bugs and these no coiners try to make regarding crypto about no fundamental value and why gold is different and all this stuff, they end up falling flat when you really understand the basis of what money is. And I actually had a debate with someone recently, kind of private messages. I'm hoping that one day I would like to have a spaces with him and like have this debate live, because, it's one thing to go a few messages back and forth, but Common Sense Skeptic, I don't know if you guys know who he is.
Yeah, but there is kind of, there's a lot of truth to what the true gold believers are saying, and I ultimately agree with it. I do agree. Obviously, all value is subjective, and yeah, money is just it's just a shared abstraction, belief in an abstraction, right? Like religion or language or anything else, right? Like I don't know if you read *Sapiens*. I know probably a lot of people. I don't know, maybe disagree with that author on some things, but he describes those concepts very well, right? And humans' ability to believe in these, have these shared beliefs in these abstract concepts. And the most efficient form of money is just everybody, coming to the belief that something is money, and the thing that they come to belief around is the most efficient thing to use for money, right? Would be what we ultimately approach. And so it wasn't random, like you said, that gold was money after all. It just happens to have all these features. So while it is ultimately people just coming to their own shared belief over an abstract concept, it's also that they happen to come to that shared belief over something that makes sense for that concept. It has certain attributes that bring people to consensus around it, thinking this is money. And fiat, it happens through the form of basically propaganda and through government and through a monopoly over violence. But people are always naturally drawn back to these natural forms of money that exist and can't be destroyed. And I do think, I don't know if you agree with me here, Bawdy, ultimately, but that Monero is a better form of money in terms of the attributes and features that it provides compared to Bitcoin. And that's where I think, these gold bugs, where we could connect with them and start to get them to see Monero for what it is. These gold bugs that don't really necessarily align with Bitcoin, but might see the value in Monero.
The problem is that the primary argument of the gold bugs isn't related to the advantages that Monero has over Bitcoin, although the privacy thing is definitely one. Like that's a place that we could reach out and probably find some common ground on them. And I have found
the
gold bugs
privacy
actually
fungibility thing.
Like the few gold bugs that I've talked to are actually a little bit more open to Monero than they are to Bitcoin, specifically because of the privacy fungibility qualities. But their primary argument against it is more so related to the quote unquote inherent value. That there is no inherent value.
Right. But that's what I'm saying. But I'm saying with Monero, you can make more of the inherent value argument, because its inherent value is a network that lets you send value through the internet digitally without censorship, without surveillance, right? And so that is inherent value. That's the argument that was originally made for Bitcoin as well, but it begins to fall apart because it is not the best protocol for that purpose. And so if you're making the inherent value argument with Bitcoin, it falls apart because it really doesn't have that inherent value. There's something else that does it better, in my opinion.
I mean, I 100% agree with you, right? You're definitely, I'm on the same page with you here. I would just say that in relation to the gold bugs, for them, it's about the physical nature of the thing. They're like, gold is real, gold is physical, gold is atoms in the universe that can't be replicated. You could just fork Monero and make another Monero tomorrow, right? You could just, it's digital. It doesn't really exist. So that's like kind of the thing that we're up against when it comes to gold bugs, which is why I really try and focus on that abstraction, the social abstraction part of it, because that's really the place where their argument falls apart. But they really, really want to focus on that physical aspect of it. So that's where like making those inroads are harder. But I do think that I have found that gold bugs do tend to respect Monero more than Bitcoin, for all the reasons that you outlined.
None your business. Doug, why don't you mention you're actually reading chat, zero interaction? Yeah, sorry, man. I can only do so many things at once. We try to interact with the chat as much as possible. We got a ton of chats coming in here. I'll be putting them up. None your business. So always being a curmudgeon, this guy. We got to hit this guy up one of these days. Has he ever come up? You don't have to show your face, none your business, but you could come up and chat. I've been watching since day one, and it doesn't interact with chat enough. All right. Well, we have 291 people watching right now. Holy shit! Like and share, guys. Like and share. I'm all about bringing up good chats. If I see them, put them up. Guys, just say productive things, and we'll certainly discuss it up here for sure.
Yeah, I'm trying to do a better job. I've actually got the YouTube comments pulled up right next to my charts now, so that hopefully I can.
We're going to be launching that XMR super chat thing on here too. So that'll be super cool. And it'll be a way for us to add more transactions to the network, so everybody can kind of send a mini micro transaction with the comment, and we'll get that going. And the more you send, the more higher likely chance that we'll engage with your comment.
Well, hopefully we've explored a little bit of some more arguments that you guys might bring the no coiners and bring the gold bugs. Try to help them understand a little bit better the more profound aspects of what money really is, and about inherent value. Try and make their own libertarian arguments at them. Just kidding. You don't really want to talk at people. You want to talk with people. But yeah, just some extra material that you guys might be able to use out there.
Towards the end of improving our chat engagement, here we go. We have one. Are there any Monero nonprofits whose sole purpose is to promote Monero as a project?
I would ask Alaska Anon that question. That would be a great question for Alaska later on.
Okay, yeah, we could ask him, but there's none that I know of. I mean, there's the what's that fund called that they were using to raise Monero funds? Not the CCS, but the one that Justin runs. Yeah, I mean that's a non-profit, and they do fund. They're not actively promoting Monero, but they provide a service for people to raise money for Monero. So in that regard, but no, none that I know of. Go ahead, man.
Okay, we're almost through the macro. We got sidetracked on gold. That's fine. Gold's an important topic. Although, one last little bit on gold, guys. Listen, gold performs the least. It goes up, number go up because inflation happens, and eventually it spills over. But when it comes to bull markets, gold goes up the least, and that's like just something you need to be aware of, right? Gold should not be like your sole play. It should probably not be 50% of your plays, just because it doesn't, like, only in certain small narrow time frames does gold outperform everything else. So yeah, just need to put that out there. Fiat has tanked. Everything has not gone up. Fiat has tanked. There is some truth to that. It's very possible that the gains that we're seeing now are still spillover leftovers from the 2020, 2021 printing extravaganza. But let's be real, like, your fiat is down a little bit. We're talking in like a percentage or two, right? When we're talking about Bitcoin making gains of 4x, that's 300%, right? When the NASDAQ is up like 20% over its previous all-time high. Let's take a look at this. The NASDAQ is up 10% from the top, and it's up, let's see here. It's up 70% from the swing low bottom. That's not entirely explainable by the dollar tanking, but it is explainable by leverage. It is explainable by hyperfinancialization. It's explainable by a type of money printing that sort of keeps value locked up into the hyperfinancialized casino. So there is some truth to that. What None Yo Business said. It's just not. It's be careful. Don't take that too far. That's the kind of stuff that Bitcoin maximalists will say. It's like fiat is dying. It's like, well, it's probably not dying, but yes, they do inflate, and that's true. So, okay, there's not much to see here in terms of the macro liquidity. That's the green and the white. We look at this. It's unfortunately like kind of a boring chart to look at. So the white is global liquidity, and then the green is the U.S. liquidity. Overall, the overall like liquidity situation of how much money is sloshing around in the system is basically flattened off. Which is kind of interesting given how much the stock market has gone up. So that might be a signal that we look at. The global liquidity did kind of pump, though, as of the past couple months. We're looking on the weekly chart here, so this is big time frames. Let's go to the daily, actually. Not much. There's just not much happening here with the global liquidity. If neither of these, so if stocks level off here, and if the liquidity situation levels off, I'm going to start thinking to myself, yeah, could this be a top? I have a lot I could say about that, but we won't say it today. I definitely want to keep the show moving here. And we kind of have said a lot about gold. Let's talk about New York Community Bank. This is kind of this is another issue where we have a bank that could be collapsing. It certainly looks like it's collapsing since last year. It has lost currently 75% of its value, right? This is not a crypto chart. This is a bank, right? This is like a regular bank. I think they only have like a few billion in market cap, but nevertheless, if you guys remember last year around this same time in March, we had problems where the fall of Silicon Valley Bank happened, which was kind of a weird thing. It probably didn't need to fall. It was like a stampede for the exits, and basically everyone got made whole. And they really had all the assets that they needed to make everyone whole. The whole situation was weird, and the reporting on it was weird. And honestly, maybe it was just the thing that needed to happen so that markets could pump. I don't know. Like I'm always suspicious about the wheelings and dealings happening on the inside. Anyway, so like that's where the Fed came out with their BTFD by the fucking dip or whatever thing that was probably intentionally. It was I can't remember what the actual acronym was. It was basically, they called it the discount window. It's like not a window as in period of time, but a window as in a place you go to buy something. So the discount window at the Fed offered like massively discounted rates for banks that might be in trouble, where they could like go convert some of their long-term low yielding bonds and effectively like they didn't paper over the situation too badly. They injected some extra liquidity, but most of that got paid back. So the point here is that window is ending now. I don't know the exact date. I probably should have looked it up for the show. That window is ending here in March. I think it's in like a week maybe. And so people are like kind of spooked a little bit. They're like, is this gonna once that window closes, are the banks going to collapse? I personally don't think that's going to be the case. I think that this bank is kind of like a limited, probably a limited situation. The other thing is that these guys now, after 2008, have gotten ahead of the curve when it comes to banking failures. The thing that was happening last year, like they were just all over it like flies on shit. And they took care of it. They fucking handled it. And then the markets went up. So I wouldn't be too concerned right here necessarily about a banking collapse. In fact, it could be the case that the closing of the discount window in the next week or so, if that closes and nothing bad happens, people are probably going to be like, oh my God, wow, it's okay. They saved it. And now it's time for more gains. And that would sort of be in line with the fact that we have extra reverse repos that could come out of the markets. So, we've been talking for months. I'm like, hey, I'm not chasing into these markets. I'm not going to add what I have into the markets more. I'm actually looking for exits. But as long as the direction is still up, I'm holding these assets until I think there's a good opportunity for selling. So I really am like trying to find those opportunities to sell. I've got my targets keep moving up, right? And that's a little bit dangerous, but when the macro situation still says up, you say, all right, let's keep going up. So the point is that there really could still be more juice to squeeze. There could be more number go up here to be had. That's ultimately what I'm trying to get at here. So we'll take a look at bonds. There's nothing here to look at with bonds. These are the overall rates. Each of these lines represents a different maturity linked bond, with the lighter colors being short term and then the darker colors being longer term. So the purple would be the 30-year, the purple is 30-year, the light blue, the dark blue would be 20, and on and on and on until you get to the yellow ones, which are like 3 and 6 month term bonds. Anyways, the point is that these are stable. These are flat. Nothing's happening here. We've got the yield curve inversion on bottom, which is just the overall subtracting all bonds from all other bonds to determine is the yield curve inverted or not. Yes, it is still inverted. Nothing happening here. No negative signs, except for like the overall big long-term macro situation, right? That the federal funds rate is now above basically almost all of the bonds except for the very, very short-term ones. This is a long-term chart. We're looking for violent moves in this chart. Violent moves are the thing that signal problems ahead. So right now, nothing to see there. One thing I really did want to point out today is the S&P 500. So if y'all remember, we've talked about for really a few months now that probably about 2 months that I expect to make the S&P 500. I expect to make these purple lines up here. I expect price to get into that band. That was just like the momentum was there, the liquidity was there, everything indicated that this was going to make it into these bands here. And the S&P actually did tag that right there. That to me that's a resistance area. So the S&P is just starting to get into a little bit of resistance area, although the NASDAQ still hasn't quite made it there yet, right? So again, this is kind of like looking at the overall picture, I say to myself, there still looks like there could be more gains on the way here. Yeah, you get some pullbacks here and there. I'm not saying the gains are going to happen on Monday. Maybe it takes a week or two. Maybe it pulls back a little bit. But from the perspective of like wave magic, again, standard deviation analysis, I would look at this and say that the chart would say there's more gains to be had. I also sort of redrew some of the bands here on the NASDAQ, some of the pleb lines, which I know are anathema to some people. Again, these lines, don't take them too literally. Just know that they're one way to draw quote unquote technical analysis. They work sometimes because people think they work, and they're also just good visual reference point for what a chart is doing, right? They help you keep your visual reference points to know that when okay, so you've got this big uptrend, right? We've been sitting here going up and down in between this band. That's a very clear trend, right? That's a short-term trend that's currently happening. And then when you break down or bust through that trend, you say, okay, things have broken out of the current trend, right? That's a mental point that you make. That the charts don't obey them. This is not like pleb lines are not like a hard and fast like rule about what things have to happen. Nothing like that. They're references for your eyeballs and to understand when you are in trend and out of trend. Okay, so anyways, the NASDAQ has been going up in like this channel here for a while, which is actually pretty steep if you really look. If you look at like the NASDAQ in general, that's a fairly steep movement. Although you'll notice back here that the NASDAQ spent like 2 years making that kind of like about the same slope of movement. So anyways, yeah, just something to keep an eye on, breakdown or even pumping out of that. Both of those would be not good situations where you really would just want to see things like continue slowly up. That is if you're in the gains department, right? If you're invested in the NASDAQ, maybe you're not. Maybe you don't own Tesla, or maybe you don't own some of the NASDAQ tech stocks. Nothing here. Oh, one thing I thought was interesting, Federal Reserve balance sheet has been still like steadily going down. So the M2 money supply is flat. The Federal Reserve balance sheet is slowly going down. So again, the U.S. liquidity situation is flat overall, but that's part of the calculation there. Okay, macro done. Finished with the macro. Monero, as usual, what are we going to say about Monero? We love our stablecoin. If you want stable prices, stay in Monero. One thing that I think is really good is that after the bullshit was done, and Monero came back to effectively, right, it's like its stable price, we are now establishing above these lower standard deviation bands, right? After like a fake out bullshit move to the bottom. And by the way, this was actually a W bottoming pattern, right? Down, up, down, up. That was a very clear W pattern. But the fact that we're establishing above those lower standard deviation lines here is a very good thing. So it could be possible that at some point here, probably at the tail end of this bull market, Monero is gonna make a pump. That's another thing. If y'all remember what happened, Monero's like main primary pump that happened in 2021 was at the very tail end of the bull market, or at least the first pump in the bull market, right? Bitcoin April hit its all-time high, 65,000, and then everything else pumped through the next month, and then everything crashed together on like May 11th. So it's possible that that when we see Monero pumping, that might actually be another little tiny sign for us that perhaps these markets have gotten ahead of themselves, and some kind of correction and pullback is necessary, a larger correction and pullback. Right now, with relative to Bitcoin's price, Bitcoin versus Monero, we still kind of tend to see this is the RSI on the bottom. We're still seeing this bullish divergence where RSI is making higher lows, but where price is continuing, where the XMR USD chart is continuing to make slightly lower lows. So you'll notice if we zoom in here, you'll notice that candle close right here that happened. Oh, that's actually today's candle, so it hasn't closed yet, but it will close in the next 7 hours. So it's possible that this candle will close lower than the last swing candle close. But again, that's bullish divergence, right? This is a very classic bullish divergence. And we're looking at the daily chart. So the important thing about RSI and bullish and bearish divergence is that they typically work better on the longer time frames. So anyways, there's that to consider. And again, like, we know that I think the pattern here is now that Monero does well relative to Bitcoin in bear markets. We only have one bear market to look at that, but just given the way that things develop, I think that makes a lot of sense. So that would also be another point that we would keep in our caps, that if Monero is ready to start rising against Bitcoin, we might think to ourselves, yeah, that could be a temporary hiatus or end to this big run that's happened. So earlier comment, we need sites like CoinGecko and CoinMarketCap to display daily emission rather than infinity symbol. Oh my God, yeah, that's such a good point. You know that they're doing that on purpose. You know that they do that to try and just to try and contribute to that psychology of infinite supply. Like, that's such a dishonest
Monero's supply is only infinite if you live an infinite amount of time. It's not infinite at any point in time.
Yeah, I mean, the entire point too. It's like, listen, gold has like a 2 to 3% inflation rate year over year, and that's probably kind of a good thing because that accounts for the growth of the economy as well. So as more stuff gets made, you kind of want a little bit of extra currency to represent that. Oh, and also sometimes a shitload of it gets lost at the bottom of boating accidents, both in the metaphorical and literal sense. So you do need like replacement supply, and there are only so many zeros that you can go behind the decimal point before you start having to like finagle with the protocol again. So yeah, it's not an honest argument to make, but I think everyone here knows that, so I probably don't need to stop and preach to the choir on that one.
It is a little more abstract though, right? To kind of comprehend that while there is a tail emission, it doesn't mean Monero is not scarce and it's not infinite. It takes some abstract thinking to kind of wrap your head around it.
Yeah. I mean, the supply is predictable, and that's the point. It's in fact, the monetary system that we have now would actually work if honest people ran it and made the supply and the increase predictable. But
it is capped at any moment in time, right?
Like yeah, that's a good way of putting it.
Right.
Monero has a capped supply at any moment in time.
Yeah.
Yeah, I mean, okay.
We got 350 people watching live. We got another 230 people on Twitter watching live.
Nice.
Guys, like and share. We need a Monerotopia live viewers chart. You got to add that. We got to see how that's correlating, what that's telling us.
Seems like it correlates with the transaction counts.
It's been going up, man. It's been going up.
Okay, right here, what we're looking at is the XMR divergence versus Kraken. So all of these different exchanges, we just subtract their price relative to Kraken, or really we take the percentage difference relative to Kraken. So Finex still, for whatever reason, preferring to stay on the low side. Finex also printing a shitload of Tether lately. They printed a cool billion in the past week. Bitfinex and Tether print Tether relative to the market as a percentage of market cap, print about as much as the United States government seems to be printing. The Federal Reserve seems to be printing. Anyways, yeah, this is overall somewhere around zero. We can still lull at Poloniex for being like super, super low all the time. I don't know what Justin Sun is doing, but screw that guy. Probably not much else to look here on the Monero chart. Same thing with Monero versus Ethereum. We're still looking at, like, again, this is bullish divergence. If we pulled up the Z-scores or pulled up the RSI, we would see bullish divergence on this chart. That doesn't mean that it has to come to the top immediately, but it wouldn't be a bad place to swap some Monero for Ethereum. From a bullish divergence technical perspective, this wouldn't be a bad spot. The other thing too that I look at is say that this has gone down so much, so fast, so fucking ridiculously. In terms of wave magic, you almost always see some kind of like rebound to that lower standard deviation level. This is a pattern that I see a lot, is that once you've got a big washout like this, you should see some kind of rebound reaction to that area. So again, I would say, hey, if you're holding shitcoins, if you're holding profits, if you traded ERC20s or whatever, or you're in Bitcoin, doesn't matter. Like, now is a good time in a technical sense to swap some of that into Monero with the hope of maybe getting a little bit of extra gains on that. So, okay, that would be Monero. Let's take a look at the overall crypto market, and then we will call it a day. So Bitcoin, I've kind of tried to draw some extra lines here with Bitcoin. I was trying to find a way to call this like a rising wedge. It's kind of maybe like a rising wedge. I don't know. It's there aren't any nice clean lines that you could draw, especially considering like how violent this one day drop was. How much was that? Yeah, that was like 11, almost 12% in a single day drop and then rebound. But at any rate, like, you might be able to call this in some kind of broader context a rising wedge. I really am in a lot of ways looking at the 80,000 area, at the $80,000 mark as a place for this thing to top out. You'll notice again, we're relying here on these purple bands. It's a very common thing that I see for these purple bands, especially long-term ones. When price has a big washout that lasts months or years, price will very often come up, and and it's making a new bull market. Price will often come to this level and tag it, sometimes exactly. Like sometimes I'm shocked at how price will actually tag these purple bands exactly. And again, this is when you take the moving standard deviation and then you take the you look at the moving standard deviation on different timelines. And for each of those timelines, you take the standard deviation of that data, of that moving standard deviation, and then you add that to the current standard deviation. And that's how we get these purple bands. But the thing that I want to show you guys here, and I think this looks better on the NASDAQ chart, actually, but we'll see if it looks the same here on this chart. It doesn't. So one thing that people like to do is look at the Bitcoin versus fiat price, and certainly we should do that. But there's so much volatility. There's so much like kind of messiness that happens in this chart. So this is one reason that I'll often come over here and look at Bitcoin versus the NASDAQ. And people talk about, how do you like comparing, okay, the inflation adjusted value. Okay, well, let's adjust the Bitcoin price for inflation to see if we actually made new all-time highs, which is a valid thing to do. If you want to do that, like if you want a simple, easy proxy where you don't have to calculate inflation and use all the exponential math to figure that out, one thing you can do is just take Bitcoin and divide it by the NASDAQ, because where does the primary inflation go? It goes into the NASDAQ. It goes into the hyper-financialized, high-risk tech stocks, because when people know that liquidity is flowing, that's where they put their money. So they take leverage, or businesses take out loans, right? Money is flowing. Banks are printing money. They give that money to tech stocks or to tech companies, and then they spend that money into the economy, and then their stocks go up, right? So the NASDAQ is like, if you really want to understand what inflation is doing and compare like how Bitcoin is doing really relative to inflation, divide by the NASDAQ. Because in an inflationary environment, it's not good enough just to have an asset that goes up. You need to be in the assets that go up the most. Otherwise, you're technically losing, right? If you're in an asset that barely goes up little by little, barely, but then everything else is pumping, you're losing to everyone else, because everyone else is getting mad gains that they're going to go spend into the economy, and you're not getting mad gains. So that's why we divide by the NASDAQ. Like that's one of many important reasons to divide by the NASDAQ. So let's take a look at the 2 days chart. That's a nice time frame that gives us visibility. So again, with the purple bands, I'm personally like, I will probably be top calling right around this level. Whenever we get to that level, that's probably where I'm going to be looking at saying, hey, this is a spot to take profits. This is probably where I'm personally taking profits. So if we go back to the last bull market, back in time, these charts take a long time to load because there's like, I don't know, 500 or 600 lines printed on here. So TradingView takes a little bit of time. You'll notice that those same purple bands, and I do a lot of filtering here, which is why it kind of like, you'll see it's sort of sparsely populated. Otherwise, all of these bands overlay on each other and it looks really messy. So what I do is I filter so that only when bands cluster together are they visible on the chart. Okay, so what we've got here is the top of these purple bands, and you'll notice that the very first pump, the first main major pump in 2021, was directly exactly to those purple bands, right? If you had taken profits at that level, yeah, okay, you might have felt like you were in a little bit of losses for a period of time and you didn't get the ideal exit, but that really wouldn't have been a first bad sell point. You might have sold a little bit at that top, touching those purple bands, and say, you know what, that's a good spot for my first take profit opportunity, right? That's the point that everyone is like asking, hey, should I sell my house and buy Bitcoin now? Should I sell everything I own and get into Bitcoin now? And I'm like, that's where it's like, bro, this is your first profit taking opportunity. Okay, if you're a trend trader and you really know what you're doing, then do it, right? Like, buy somewhere here on the way up, but you just have to know that you're buying on the way up and you're selling before the top happens, right? Or you're just a hodler. So right now, like, we've got the same thing where people are asking me. They're like, I have a lot of friends and people that have asked me, hey, should I sell this and buy Bitcoin now? And I'm like, man, I have no idea. I can't tell you what to do there. I wish I could, but that's not how I personally manage my money or manage my stack. I'm looking for exits, right? I've got plenty of gains from the past year to capitalize on. So that's kind of like, it's not a cop out, but it's like, sorry guys.
So Bawdy, you're looking at, if you had I know you're probably not going to like this, but if you had to put numbers to it, you're saying you think around 80K is where Bitcoin would likely top out.
Yeah, right now that's like my tentative call. As I always say, like that's tentative. We're looking into the future, right? we have to reevaluate in real time as we actually get there. Because maybe I'll change my mind.
What would be your best guess in terms of timeline as to when we might hit a top for Bitcoin? If you had to guess, like month range.
I would say within the next 1 to 2 months, Bitcoin would probably hit my 80K level. And then that could very well be a top. Again, I want to see what the macro situation looks like. I want to see what the rest of the fundamentals, right? The rest of the markets look like, just generally take in what's happening. But tentatively speaking, yeah, I would say in the next maybe 1 to 2 months for Bitcoin to hit 80K. And it would not surprise me to stay there for a while. It would not surprise me to go up, float around a little bit, up and down, and then eventually see some big washout.
And how do you feel about the theory that, Monero would, you mentioned it before, Monero could potentially follow at that point and having its little bull market later? What's your confidence level on that, given, the delistings and everything? Do you think it's likely that Monero does see a bull market at some point? Significant?
Man, that would be the pattern of what happened last time. It would be that they did the delisting. They really tried to shove Monero's price down. They did a bunch of different types of attacks. And then Bitcoin pumped, and then altcoins pumped, and Monero pumped with the altcoins, but mostly at the end. It could be the case that they've gotten better price control mechanisms, right? I don't know. It's also like we can't discount, like we like to think Kraken is honest, and sure, I would like to think that. Jesse Powell is no longer the CEO there, by the way. And we can't know what might be happening in back rooms and what kinds of things they might be doing. I would like to say that, yes, the pattern will be the same, that Bitcoin will pump. It'll hit some very key levels and some like obvious degeneracy. The macro situation will turn around. Monero will make a big, massive pump to some significant level. And then everything will crash together back to the lower, this lower regression line for Bitcoin, this lower boundary down here. That would be wonderful. Like if that happened, that would be textbook in my mind. And it's like, all right, fucking awesome. I sold the top, local top. Things crash. Maybe need some washout time for some months. Could be 6 months or something like that. Touch some like key levels, buy again, and then ride that thing to victory at the top. Right. That would be like my ideal situation. Obviously, guys, you all know here that this is a lot of speculation, right? I'm having to like give you ideas, intuition, and a lot of stuff that I say is going to end up being wrong. So, don't take that to the bank. I am not doing, like, for example, in 2021, when I was top calling, I was like, guys, it is fucking obvious. This is the top. Please listen. Like, there's so many things happening. I can't say that here, right? That is not the kind of top I would be calling. It'd be like, yeah, I think, this is a good profit taking area. So here's another logic that I used back in the day, back in 2021. I said to myself, okay, if I sell here and I'm wrong and the markets continue to pump and I don't get those gains, will I at least be able to, in the future, rebuy the level that I sold, right? After the big pump is done. And I said to myself, yeah, you know what? At a minimum, I'll be able to rebuy at this level that I'm selling here. But if I'm right and I don't sell and the market crashes, how much pain will that be for me, right? Like I said, yeah, that would be pretty painful because I just made a lot of money here. So I said, all right, that's it. I'm selling. Like I'm getting out of this market in 2021. I'm selling a lot of my stack, not all of it. I kept the Monero, but I'm selling my Bitcoin at least, and I'm selling my other stuff because the pain would have been greater than the potential extra gains, and I'll still have the opportunity to buy back this level in case I'm wrong. That was a big deal for me. I feel very similarly right now. Like if I sell this level on everything, there's a very good chance that I'll be able to rebuy the same level at some point in the future if the market just continues to pump. So that's another way of looking at it, right? That's another.
Yeah, I think of it in that way. Although I never take action, and so I just, I'm in. I'm all crypto. I'm all Monero, guys. All Monero all the time. Keep it simple around here. Bawdy, man, fantastic. Yeah, you want to wrap it up? What else you got?
Yeah. So this is the regression analysis. There was something I wanted to show you guys last week. It's a different way of looking at this data. So again, this is the upper boundary of the Bitcoin price and the lower boundary of Bitcoin price. And the yellow is sort of like, once you throw out all of the blow off top data, the yellow is what you get for sort of like the average, if you will, like the best fit line. So we're above that, but we're not like massively above that. And the other thing that's key to notice here, and you can see this on the other chart that I'm going to show you, is this chart. So this is the same thing, believe it or not. This blue line here. Oh, actually, someone told me that blue shows up terribly. Can you guys give me some feedback? Does blue show up poorly for you on these screens? If it does, I will stop using blue as a color.
We could see it. White is better.
Okay, I'll start using higher contrast. You know, another thing I said I wanted to do, I told myself was to zoom in more, because yeah, YouTube doesn't have the best resolution always. Okay, so this bottom chart here, this is the same thing as that other chart. This is the Bitcoin regression analysis, except for what you do here is you take this yellow line and you subtract the price from the yellow line. So this is basically your error, right? This is how far away is Bitcoin price from the modeled price. Hopefully that makes sense, right? So when Bitcoin price is above the yellow line, when it's above the overall model, then price is going to be positive here on this chart. And obviously when it's below the yellow line, then it's going to be below the 0 point of this chart. So you'll be able to see right here, that line that I just dropped. Let's make that line a little bit more prominent. There we go. That dotted line on the bottom there, that's the 0 point, right? So anytime we're above that line, we're above the model. And then obviously these are the blow off tops. One thing that you'll notice here is that these blow off tops, they're curving down, right? It's like the blow off tops are getting lower and lower and lower each time. The reason for this is because the upper boundary of the Bitcoin price is a different form of equation than the lower boundary. And this is the critical insight that basically everyone that I've seen try to do a Bitcoin regression analysis, like the Rainbow Log or Ben Cohen, and especially, I won't even mention the other guy, screw that guy. Ben Cohen, though, has a pretty decent model, but he's still missing the key aspect that the upper boundary has a different equation and a different form of equation than the lower boundary. So what we're seeing here is that the blow off tops are getting lower and lower. And you can see I've like sort of drawn this this curve there. So you would kind of expect that potentially, like if we're hitting this area right here, that would also, again, be potentially another blow off top. Now, technically, this area right here would be around 140,000 at the moment. So I don't think we're going to get that high without some kind of major washout. Maybe we'll get that high like next year. Maybe we'll get that high towards the end of the year, something like that. But I don't think we'll get that high. But anyways, like this is just another way of looking at that regression analysis. It's a good way of sort of visualizing where we are overall. And you'll notice, like, yes, we're high, but we're not like crazy high in terms of in terms of the Bitcoin regression. So. Just wanted to throw that at you. Last thing I'll say here today is that I'm going to repost. So I posted the regression analysis as a public script, and I posted the price divergences, the Monero price divergences on different exchanges. And TradingView removed those scripts. So they did the first thing they did was like cite a bunch of rules at me and be like, you violated these rules. And I'm like, that's like it's a wall of text, bro. But they finally got back to me and they said it's because, so apparently in the scripts, I actually put my Telegram @ which is no, you're not allowed to do that. You're allowed to put your Telegram @ in your signature line, but you're not allowed to have it in the code. So I don't know. I guess I have to remove that. And then they want some kind of master's dissertation on every single script that you post. So you have to write a shitload of text about what the script does. So I'm going to do that here probably this week. Just haven't gotten around to it, but I'll repost these scripts. I'll republish these scripts so that everyone can take a look at the Monero price divergences and of course the Bitcoin regression analysis, so that you can, keep your bearings on where we are at for every cycle. So yeah, that's what happened there. It wasn't quite as nefarious as I would, maybe have suspected on TradingView, although I've seen some other people talk about some stuff. So when it comes to corporate stuff, I always, and especially when they're trying to do social media stuff, I always like sort of default at least halfway to being like, okay, what are they doing in the background really though? Because they're a corporation and it's freaking economic warfare out there. So what are they really doing? What's the real motivations? Anyways, I'm going to republish these scripts. Hopefully they won't get removed again. And then you guys will be able to enjoy them. Although I don't publish the Wave Magic stuff. I keep it a little bit tight to the vest.
People are asking where can they see your charts? Well, I guess
you can't right now.
Okay,
you can't. So you can't see my charts right now. You're not able to access these scripts because I published them.
But for a small Monero fee.
No, I don't charge. I refuse to charge for any of these things. This
guy. You're too good to us, Bawdy. You're too good to us. What's that?
I am kind of like conflicted on the Wave Magic though. So the Wave Magic being these lines here. Let me zoom in. Maybe I don't know if y'all can see. how well y'all can see these, but it's basically the low resolution on YouTube doesn't make these charts look as beautiful as they actually are. But when you see this chart on a full resolution, you're like, wow, this is amazing. This is just overlaying all of the moving standard deviations and all of the moving averages, and then seeing how they cluster together. And those clusters are effectively psychological points in my mind. I have long thought about selling this, about like selling access to this indicator. This was something that took me probably, I mean, the bulk of it took me a few months to develop, but really it took me a year overall of thinking about it and redoing it and playing with the transparencies on the lines, et cetera, and the developing filtering. It took me almost a year to fully develop this thing, and it's been very, very useful for me. At some point, I do want to leave trading behind, and I do want to basically become a hodler, and I want to work on other projects and not pay much attention to price anymore. In which case, I would like to sell this tool to people that would like to use it, but I'm very conflicted about being the guy that sells fucking indicators. I've always kind of been outspoken against people that sell trading courses and special indicators, but this is unique. This doesn't exist in the world anywhere. I've never seen.
I mean, I don't see anything wrong with that, man. You're selling. You know, you're giving people access to a tool. They don't have to buy it from you. You're not scamming them in any way. If they see value in it, they could pay you for it. I mean, you're open source in pretty much every other way, right? You're putting all your information out there. If they want this added feature, access to this tool that you put invested a lot of time in building, I don't see why you should feel morally conflicted about that in any way.
I definitely don't feel morally conflicted about it, but there's kind of like the ethical consideration in my mind, because I do think that the world is a better place. It's unfortunate that the easiest way to make money is in a hyper-financialized casino and then learning that casino and playing it. At least, you know, from my perspective, I would have to spend another 20 minutes pontificating about my sort of ethical hangups about whether or not I should sell this indicator or not. But maybe that's for a different time. But it's all
right, man. Wait, one last point. One last point. I saw you trying to enter into a bet with Peter McCormick on the price of Bitcoin or something. What was that all about?
Oh my God. So Peter posted something about, he's like, I'll give you some other guy is like, I'll give you 5-to-1 odds that Bitcoin will hit 100,000 by the end of 2024. And he wanted to do $100,000 bet. So if Peter loses, he would pay $100,000 if Bitcoin does not hit 100. So Bitcoin does not hit a price of $100,000. Peter was going to pay $100,000 to the counterparty of this bet. But if the other guy loses, he would only have to pay 20,000, right? That's what 5-to-1 odds means. And I was like, oh my God, this is, how retarded can you be? And so Peter was like, where did you go, bro? I wanted to make this bet and we can escrow it and we can get the lawyers involved to make sure that, that both of us pay, whatever. And so nothing came of that. And I was like, my first post was, I'm your Huckleberry, but of course he didn't see that. And then someone else like referenced it. So a couple days ago, I was like, Peter, I will 100% take this bet with you. Please contact me. Because here's the problem. This is, I can't even begin to describe how mathematically retarded this is. Okay. Bitcoin is currently at 70,000. What do? You take this bet with Peter on 5-to-1 odds and you buy a Bitcoin. If Bitcoin hits $100,000, that means that I have $30,000 of profit. I pay Peter 20 and keep the other 10 for myself. If I win, I still have a Bitcoin. And then Peter owes me $100,000, right? Even if Bitcoin goes to zero, right? Let's suppose Bitcoin goes to zero and I lost $70,000. Peter still has to pay me $100,000. So that's $30,000 of pure profit. There is no way you can lose this bet. It is impossible to lose this bet.
That's fantastic. I
So
love it.
probably someone told him that and he eventually figured it out.
Awesome, man. Fantastic as always. Can you stick around? Because you also brought up some great points on Twitter with regards to potential solutions for eliminating spam on the Monero network. Hopefully you can stick around.
Definitely. I want to hear Artic's his take on that. It's not perfect. There's problems. Like it's
cool,
really like
cool
a very broad idea that would need to be refined and the numbers would have to be run. But I think it's worth talking about.
Yeah. All right, man. Anything else? Are we good?
No, I think that's it. Man, it felt like a marathon already. We still got 3 times more to go.
336 live listeners, 250 live listeners on Twitter. Dude, that's crazy. We're at like over 500 live listeners. We're approaching the essentially the 1,000 mark. Yeah, okay. you got to add this as a chart. The Monerotopia live views and subscribers.
We'll have to perform some TA, some wave magic
I'd also like to see a correlation between Monero's price and the street price of cocaine. I was doing some Googling, and it's I don't know, man. It might be something you want to look into on a chart. Bring it up next time.
Where the hell am I going to find the street price? I guess I got to get on the dark nets. Maybe someone.
You got to start collecting some data, man.
Man, now I have a reason to actually get on the dark webs and talk to some of these vendors.
Stick around, please, if you can. We're gonna bring. We're gonna bring up ArticMine. I think we'll bring him up now because he's waiting patiently. I really want to get to him. And yeah, Bawdy, please stick around if you can so you can engage with that.
Cool. All right, I'll talk to you guys later.
All right.
Thank you, Bawdy. Thank you.
Thanks. Bye.
All right.
Okay, let's get
Tony.
To that needs no introduction.
Let's do it. Special guest, ArticMine. Talking transaction count.
The Monerotopia guest segment is sponsored by Cake Wallet. Store, send, receive, and exchange your Monero and Bitcoin safely on iOS and Android too. Cake Wallet is open source, and you always control your own keys.
All right.
Hello.
Francisco, how's it going, man?
Well, I've been very busy working on this trial that I cannot talk about until it's finished.
Oh yeah, you got that going on. So
that's why I'm in Washington D.C. rather than Vancouver right now. So I have a bit of a different connection. I believe I'm being heard properly.
Yeah, your sound is pretty good. We'll take it.
Yeah, it's good. Okay, excellent.
Yeah. You want to just tell? I know we can't go into the details on what the trial is, but you want to just tell people the name and what's going on for people that are tuning in for the first time.
I would just wait till we have a final verdict on this, and then we can talk about it.
No worries. Well, the discussion for another day.
Basically, yes.
But yeah, obviously we brought you on today, not for that, but to talk about the Monero transaction count, something that is near and dear to your heart, something that you constantly have an eye on, something that you participated in terms of designing the Monero protocol to be ready for. Give us your take on what's going on right now with this Monero transaction count going through the roof.
I would go back to my talk in Mexico City at Monerotopia because there's a lot to be learned from this. Now, after listening to Bawdy's presentation, there's a couple of key items to take into consideration. The first one is the first thread and then implementation of the Binance delisting. Now, in my view, this is critical to what's going on here because when I talked in Mexico City, and I talked about particularly the concept of applying the equation of exchange to what is a hyper-Austrian currency, and I'd like to sort of go a bit over some of this because it kind of deals to a lot of what we're seeing here. So the first part about it is when you talk about gold's historical reason why it's been very good money is because it tends to have a long-term feedback loop and it kind of tracks inflation very well. So if you are going over a 100-year period, gold is a really good track of inflation. And so if you have a higher inflation rate than gold, you're essentially a Keynesian currency, and the equation of exchange applies. If you write at gold point, the equation of exchange is kind of moot because the money supply of gold is essentially tracking economic activity. In a simple way, if you think of the equation of exchange, you have the money supply M, you multiply by velocity V, and that's equal to the price of goods and services in terms of the money, P, and Q is a measure of economic activity. So what happens with gold over time is that it basically M is proportional to Q. So it kind of makes the whole thing quite uninteresting. You have essentially a price that fluctuates with velocity. And this is why I go back to my statement in Mexico City, and now that I'm in the other empire, If I go over to the Capitol, which is actually within walking distance of where I am right now, the senators who are sitting in there, their cost of a tire is roughly what a Roman senator would have paid 2,000 years ago in terms of gold. And that's a simple element. You take one empire, another empire, 2,000 years apart. You look at the senators, how much do they spend on their clothing? And that's a good indication that the prices roughly stayed the same in real terms. So what's interesting is when you then go to a hyper-Austrian currency, and I would consider the currencies with a lower inflation rate than gold, Bitcoin being the obvious example, but also Monero. Now, Monero, it was designed to have an inflation rate or tail emission that was less than the historical inflation rate of gold. But in reality, what you have with Monero is a stable money supply. I know this is not what it sounds if you just look at the maximal theoretical level. I will again go back to Peter Todd's article based on Javier Smooth's work. And what we're dealing with here is an equilibrium between the tail emission and loss costs. So over time, we would expect a stable money supply for Monero, not a growing one. And in the true spirit of Monero, we probably will not know what that money supply would be at, which is kind of really makes it interesting. So just as we're getting into that, because I want to get into what I see is going on here, is a bit more complicated. So if we have a constant money supply for a Monero, over time velocity is going to come back to the median. We're left with two factors. We're left with P and we're left with Q. Q is the size of the economy. P is the price of goods and services in terms of Monero. We can approximate this over a short period of time by using the price of the US dollar, for example, in terms of Monero as your indicator. And so what we're saying is over a relatively short period of time, the US dollar essentially, but I'm thinking within, say, a year, 2 year period, the US dollar is essentially stable. It's not inflationary. I know this sounds extreme to many members of the community, but if you think about it, I mean, I went over to Washington D.C. I actually brought some cash. I like to pay cash for a lot of things, about $2,000 worth. I spent about 70% of this in my expenses over here. And am I really going to be worried about those $1,400 that I spent, what they're going to be worth 10 years from now? I've already spent them. No, I mean, I don't care. It serves the purpose. It's stable for the period of time that I want to hold it, which is why fiat currencies have been so successful. I mean, there's a reason the US dollar is successful, and it's over a short period of time, it does a decent job of keeping its value. It's where you try to hold it for 50 years that you get into problems, big ones. But in the short period of time, a few months, a year, you're okay. It's not as bad as people think it is. But what I'm coming to is an interesting point. Is when you look at Q, then you have the size of the economy. When you're dealing with a cryptocurrency like Monero, you really want to break Q into two economies, and what I call the decentralized economy that happens on the blockchain, and the centralized economy that happens on centralized exchanges. And a great example of this. Thank you for bringing up the equation of exchange. Great idea. So you look at Q, you break Q into two. So we look at two economies. The economy that's decentralized. And by decentralized, I mean that transaction, that trade, whether it's for goods and services, or funds, or fiat, or whatever, involves activity on the Monero blockchain. That's the decentralized one. The centralized element is when it's all happened on the centralized ledgers of an exchange. So I'm going to call it QD for decentralized and QC. So what happened in the last month? Well, you have what literally is the biggest exchange that was trading Monero suddenly shuts down QC. So you have a lot of economic activity having on the books of Binance. That is a very significantly higher than what was going on the Monero blockchain. All of a sudden, you shut this down. And the initial effect is a crash in the price of Monero in terms of USD. We see that. It went down from about $170 to something about $105. So roughly a $60 to $70 drop in the price of Monero. That is not insignificant. And then what do we see? Well, we see two things. First of all, on the day of the drop, right at the bottom, there's a surge in transaction activity. And it went to about 40,000, 45,000 transactions per day from a mean of about 20. And then it drops back, but not to the mean before, and then you get this big increase. So what has happened here? Well, we had a recovery in the dollar, and the dollar value of Monero. It went back, it's trading around 150 now. So that recovered back a bit, quite a bit. Okay, so you've got QC. Where did that economic activity go? And I put it to you that a lot of it went into the decentralized exchanges, and that's what's driving this transaction count. If you shut down Binance and the economic activity that was going in Binance off-chain in Monero, and suddenly you create a vacuum there. And then you see a sharp rise in transaction activity. And take a look at something else. What is the liquidity like in some of the decentralized exchanges? So I will look at Monero. It's actually pretty decent. I was looking at this. Hey, wait a minute. There's a lot of traders going on. There's a lot of people offering stuff here. So sort of a cursory, because I really didn't spend a lot of time on this. Watch the decentralized exchanges. Has there been an improvement in liquidity? I would put it to you that yes, it has. And that we've seen a partial, yes, we've lost a partial transfer of activity from the centralized exchanges that does not show on the blockchain to the decentralized exchanges that show on the blockchain. This is the point that makes a big difference, because one of the reasons why I'm so negative on Bitcoin is because it's theoretically impossible. If you shut down the centralized exchanges on Bitcoin, Bitcoin goes to zero. There's no way for it to trade. Monero can go and shift into these decentralized exchanges. And this is what's happened. So we've seen a partial shift. Yes, some of the businesses gone to other exchanges, the Kraken, possibly Kucoin. That's happened. But we've also seen a move away from the centralized exchanges and some of this trading going into decentralized exchanges. And that can easily more than account for the kind of transaction activity that we're seeing in the blockchain right now. So I'm in the point of view that what we're seeing there is primarily organic. Wow. And yes, it was triggered in respect by the collapse, the shutdown of Binance. When you see the amount of interest, and yes, that's the chart that shows. It's a great chart, and a link to go in there. There's two humps in here, and if you're looking at the transaction time, the first hump that you see there, about 50 transactions a day, that is actually the Christmas hump, just before. And this is just before the new year. And this is people are basically using Monero for retail purposes. So it gives you an idea of what the retail market is. But it's actually quite small compared with this hidden transactional market that's coming out of exchanges. Then we see the fluctuation. Then you see a couple of humps there. And those humps there that we're seeing there was the actual delisting. People taking money out of Binance into the blockchain or moving it to a different exchange. And then we see this big rise, and it's this big rise economic activity. Well, it also coincides with a partial recovery in the price of Monero. So we've got to really take a hard look at this and say, what is going on here? Is this really a spam attack? Or are we really seeing a shift towards decentralized exchanges? Because otherwise, how can we account for the recovery in the price of Monero, or the partial recovery in the price of Monero? So it's a lot of questions here.
I got it. That's very exciting. I'm kind of almost surprised that that's your thinking there. That you think it's mostly organic, and I find that very thrilling. I mean, if that's the case, what you don't think? I mean, you don't think it's potentially somebody spamming the network, well, maybe even trying to do a flood attack, right? We've seen moments in history, right, where it was pretty clear that the Monero network was being spammed.
I mean,
right?
There are telltale signs of that. But what's interesting about this is a couple of things. First of all, a flood attack is way too small for a flood attack. You need about, I would say, 3 to 4 times as much with the rates of 16. So this is the first thing to understand. If your basis is somewhere about 30,000, excuse me, 30,000 transactions a day.
Mm-hmm.
You want to multiply by that by what, 16? Times to actually get into, we're talking somewhere in the neighborhood of 500,000. So 600,000 transactions. This is not trivial. We're even to have like a reasonable chance of getting some kind of a flood attack happening. So yes, it's a theoretical possible you could do that. You want to do a spam attack, and someone's just dribbling small amounts of Monero at the basic fee and hoping to sort of flood the network. Yes, but again, if you're testing the waters, it's a possibility. I'm not trying to discount it, but you also have to consider the fact that we have these other factors. You have all these people showing up here. We have 600 people between Twitter and the various feeds that we have here. Oh, wait a minute! Are these people not interested? Is it not an interest in the coin? We have a recovery in the price in USD, partial recovery, not a full recovery, but a partial recovery. What's going on here? A lot of the divergences that Bawdy was talking about with respect to the XMR BTC and XMR ETH trades, all these little things start to put into question: is there another theory, and are we really dealing with a spam attack, or are we dealing with a shift towards those decentralized exchanges? Now, the way to test the theory is to look at the liquidity in the decentralized exchanges. If that's going up, then I would not consider this a spam attack. Look at the spreads. Are the spreads going up or down on local Monero? This is a great question. I haven't really looked at this in detail, but I'm putting the question out there that if we're shifting from a major shutdown on a centralized exchange, followed by this rise in transaction activity, it doesn't take a lot of what was going on in Binance shifted into a DEX or DEXs, decentralized exchanges, to create that very effect. The other thing to bear in mind, and there's a big mythology around Bitcoin in particular, even Monero, but certainly Bitcoin, is that people think that Bitcoin is a decentralized cryptocurrency, and I tell you right now, it is not. There is no way you can hope to support these prices of 60 or 80,000 US dollars for Bitcoin while keeping the block size constant, unless you have a massive market, which is essentially speculative, running on the ledgers of these centralized exchanges. Whether it's ETFs, whether it's Wall Street, they're moving money around, and there's a lot of economic activity. That's tying up a lot of Bitcoin. But it ain't happening on the Bitcoin blockchain because that's limited.
We also saw a spike in Monero transaction account right before Monerotopia, actually. We like to take some credit for that, but I also think that was a time when the Bitcoin network was having super high fees.
Yes.
And then you saw people moving over to Monero. Do you think that's potentially playing a role here too, that Bitcoin's high fees are pushing people into Monero?
Well, absolutely. I mean, if you have high fee structure in the Bitcoin network, you're going to see that. But that's primarily going to be, I think, for retail transactions. Keep in mind there are other players in the market, things like Bitcoin Cash and Litecoin, that can absorb that, even Dash. Although definitely Bitcoin Cash and Litecoin and Dogecoin can potentially absorb also some of that in a temporary basis. But when we look at, and this is the thing that we have in there, when we look at the fundamentals of money, I mean, I know that Bawdy spent a lot of time on gold and trying to understand why what I think are very valid complaints of the shifts and all these people, the gold bugs, that Bitcoin doesn't have a use case. And they're right. Without a use case, it is pointless because it is not a decentralized cryptocurrency. It has to be run on the ledgers of banks. And that's the issue with Bitcoin. And this is a very legitimate criticism. It's not about gold being a commodity ahead of time, and that's the trigger effect. Fiat currency has demonstrated that you can have the state theory of money, the state can get it going. But there has to be a use case value for it. The US dollar has value if people use it because it mitigates the transaction fee. The great reference that I love on this subject is The Origins of Money by Carl Menger, which is actually Mises's mentor in a large degree. So this is kind of the origin of Austrian economics. And what he Menger book, and instead of writing a 400-page treatise by Mises, read the small monograph by Carl Menger, and it's about 40 pages. It's written about 130 years ago. And what he talks about is the saleability of money, and in modern terminology, that means the bid and ask spread, which is or the fees. So what makes Monero viable as a currency that Bitcoin is not is that we can scale and we can keep the fees low. And we can compete with alternatives in certain markets, but not in all of them. For example, credit card fees. We can undercut the credit card industry. That's where Monero wins as a cryptocurrency. And that's where you win when you certain applications where you want to pay people experiencing homelessness whilst they're experiencing homelessness. And this is the key point. You want to pay somebody whilst they're experiencing homelessness. And this is, I know there's a lot of people that have some questions as, is it an incognito market or a DNM market that is cashing out or sweeping wallets that is doing this? It's a possibility. Is it, we had the case in 2022 where we had a mining pool that went out, but I don't see a single DNN market to account for this much. But
you think that's a possibility that theory? There's some weight to that theory.
But there's some weight. It depends on the size of the market. I haven't really looked at it. It depends on how much they're doing Monero. Was there a shutdown? And then
Monero Bull is saying the transactions came in bursts, so it's presumably all done by the same entity. Is Monero Bull's hypothesis?
There's some people that say you've got to start looking at what the transaction distribution is and so on. Are we really seeing something here? Or is it just, but again, you've got to take into consideration. You've got the shutdown of Binance. You've got, people are going to say, if they were trading in Binance, where are they going to go? And are they going to abandon Monero entirely? Well, no, because the price is kind of recovering. So that's not happening. There's 600 people watching this book, watching this. So this is not happening. So what's happening here? Is there something else going on? Are they actually shifting to on-chain transactions? And that's a question that I don't think can be sort of immediately said no to. Again,
so if what you're saying is correct, which would be amazing and very exciting if the case, do you think then we would continue to see this trend of higher transaction count for some time? Or
because essentially what will happen is if you are moving into decentralized exchanges, as the bid-ask spread in those exchanges drops because there's more participants, there's going to be more people going into these exchanges to do trades. So what you want us to look at very carefully is what is the bid and ask spread in the decentralized exchanges. And look at what is the liquidity in the decentralized exchanges. Have people moved out of a centralized exchange into a decentralized exchange? Because if that happens, you will see a significant transaction increase. What most people don't realize is how overwhelming, even in Monero, the transactions that are going in centralized exchanges as a percentage of the overall economy are. In Bitcoin, it totally dominates.
Totally dominates. Yeah, everybody's moving their Bitcoin onto Coinbase or whatever, or they purchased it on Coinbase or whatever, and they've left it there. And that's the real ledger. That's where the economic activity of Bitcoin is taking place.
Coinbase and Binance and Kraken and all of them. And the real economic activity and Gemini and all these ETFs and so on and so forth, these things are traded back and forth. There's a huge amount of economic activity that's not showing on the blockchain. This is what I call this QC, the centralized economic activity. Monero is not exempt from this. Now, if you suddenly, think about it another way. What happens if you suddenly shut down Visa? What is it going to be a demand for US dollar cash?
Yeah.
Yeah, exactly. It even happened at the end of the 20th century when everyone was afraid of the 2000 bug. So what happened? People started holding cash because they were thinking there could be problems with the fiat banking system, and the U.S. government was actually had to print a lot more cash. They had the ability to do that, or they had the ability to not retire the older bills if they need to. So they have a bit of flexibility there. So why are we saying this cannot happen on the Monero network? And it's an explanation we're going to look at. So let's look at some of the data. And yes, yeah, but I'm just putting it out there that there is another explanation, and that is this business of the Texas.
That would, be extremely exciting to think about. Maybe we could have Tuxedo give us some insight at some point into what Cake is seeing on their instant exchange volume and things like that, or the instant exchanges that are being used on Cake. I'm curious. Those must be, I would think, going through the roof right now as well, just trading on instant exchanges, right? And that
those type of exchanges always means you have to take the money out into a wallet. You don't keep it in a custodial wallet. Mm-hmm. And that's the key point. Whether it's a peer-to-peer network or an instant exchange where you take the money in and out, that is going to increase the traffic on the blockchain.
Exactly. So if we saw those numbers going up, it kind of gives more credibility to this theory that you're proposing.
Absolutely. I mean, what you have to do what we have to test out is what is going on in instant exchanges, what is going on in DEX exchanges. That's exactly anything that involves going in and out and going into the blockchain is going to push up the transaction activity. And that's the fact that we have to consider. Okay, are people trading and trading instantly? These are factors that we have to take into consideration, because if that's happening, then we are driving up the transaction count simply by moving off Binance.
Well, I will say something's happening here, even on Monero. We have almost 400 live viewers on the show. Okay. And then on Twitter, we have almost 300 live viewers. I mean, a week ago, we were at like 50. Was our average of daily live viewers. What's going on here? There's been a major increase in live viewership on this show, on Twitter, on YouTube. It like almost 10x'd. So that's got to mean something. I don't think I'm not entertaining of a guy, right? They're not coming here for me. People are interested in Monero. There's some organic growth that's happening out there in the broader crypto ecosystem. People becoming aware of Monero. I think the delisting played a tremendous role in that. Streisand effect. It got a lot of attention, woke up a lot of people to the fact that Monero exists.
There's a comment here that I want to comment on. Gone Bafai. It says, Arctic is calling DEX sites like local Monero and instant exchanges. What I'm referring to here is decentralized. Is you can even do it with Kraken. Like if I go into deposit Canadian dollars into Kraken, do a couple of trades and pull the Monero rate out, that's a decentralized transaction because I'm not leaving the funds in Kraken. So it can be a totally decentralized exchange. But it can also, you could be doing peer-to-peer transactions. And you could be doing, but you could also be going in and out. And that's happening on the blockchain. So even if you go into a centralized exchange, deposit Bitcoin and buy Monero or vice versa, that transaction is happening on the blockchain, on the Monero side. And that is what I would consider part of the decentralized portion. Versus leaving the funds in the exchange and at the same time, and then engaging in a bunch of trades on the exchange. That's what I'm talking the centralized side. So if you actually deposit the money into a centralized exchange, do a trade and pull it out, that's the decentralized transaction because it's still showing up on the blockchain. So this is the point that I think we need to make. So I'm thinking he's right. I mean, I am expanding the definition of decentralized exchange to include instant exchanges and even transactions traded in and out in what I'm talking about here.
So moving on from what is causing this increase in transaction count, whether it's a spam attack or it's organic growth from the delistings, let's now talk about the effect and how the Monero network has handled this uptick. Give us your overview there on what you've seen. Was it what you expected? Do you think there's things to learn and now tweaks to be made to better handle the growth in transaction count? Give us your overall take on the effect on the Monero network.
Okay, so we're going to make a distinction between two different things: the protocol level and the wallet level. Wallets are not protocol. You can change fees, you can change fee levels, and things such as wallet. That is not consensus. Consensus is the actual adaptive block size, etc. The basic premise in Monero is very simple. What you pay in Monero as a fee, you're telling the miner, this is how far I'm willing to pay you to go into the penalty in order to add my transaction to the block. That's it. So you're telling the miner, this is how much I can pay you so that you will include my transaction and offset the penalty. That's the basic premise behind all this. So the first thing that happened, which is that a lot of people are not responding theoretically. I mean, you would expect somebody to look at it and say, well, host members of the community have said, go ahead and pay the normal fee. You don't have to go and pay the massive fee. Pay the normal fee. You're going to get your transaction mined right away because you're going to be at the lead of the bill. So there's a mass of people that simply are just taking the default fee. That's interesting. Why would a spammer do that? That kind of makes me think about the problem.
Mm-hmm.
It's a bit odd. I mean, why would they go into the penalty and leave the transactions in the transaction pool? I mean, you got to get into some of these questions. It's not the scenario where you push right up to the penalty and they want to test it out, etc. So what's the point of all this? Because what happens is if you're trying to spam the transaction like this and raise the block size, once you stop and you wait an hour and a half, the whole thing collapses and resets again. You have to keep this up for a month for over 2 months in order to trigger the long-term median. So this is, from a spam attack perspective, it's kind of a sort of okay, let's slowly spam the network. I mean, it's theoretically possible, but I see it as less likely.
So all these transactions we were seeing coming through, they were just staying at the super low fee, right?
I mean, most of them. That's why it didn't move, because people were not. If you look at this transaction fee, they're staying at the super low fee. So what it looks like is people that are just using your wallet, using the default settings, and not resetting.
Mm-hmm. And like you said, that was an issue with the wallets and not the protocol.
Absolutely.
And can you give us some insight into that? What has transpired with that? Are fixes in the works for that for the wallets?
I'm going to backtrack because when we had before the last hard fork, when we had the wallet reset to the higher level fee, and so that's what it allowed the block size to spam. Otherwise, it would have got stuck actually. And what has happened, and this has been identified in the community, and there are people that are working on getting it fixed, and it will be updated in the wallet, is that when the transaction pool is large enough, the default fee is still the lowest. And what you wanted is to pop it up to the middle one. So there was a bug in the wallets that's propagated through that's doing that. Now, it's a bug in the sense that we're not suggesting the fee that we should be used to get your transaction mined. You're suggesting the lowest fee. And that's what's driving this. Because if you look at those fees, they're all the lower fee. Mm-hmm. And in fact, you have people like Rodney, but there was another couple of people that said, go ahead. I think Bawdy said that at the beginning of it. Go ahead, and if you want your transaction mined, just use the normal fee. Go one step fee up, and you'll get ahead of this. So it looks to me very much that these transactions are that's one of the other reasons why I expect they're genuine, is that they're all at the low fee, which is what a default behavior of the wallet. If you change the behavior of the wallet and the spammer is forcing it down, then I'll believe it. Mm-hmm. But we've got to look at some of these other factors, because you have to look at these decentralized exchanges. You've got to look at these instant exchanges. We're going to see what's happening with all the transactions that are going off Binance.
So are these are the wallet changes in play to be fixed? Are people working on that?
My understanding is yes, because it's not a difficult fee, and it's going to be basically a wallet upgrade.
Mm-hmm. And wallets like Cake Wallet, we didn't see that issue. They were functioning as are
they increasing the fee? If they're increasing the fee correctly, they should be charging the normal fee rather than the low fee.
Mm-hmm.
So if a wallet is doing it properly, they should respond to the network congestion in the transaction pool by increasing it one level.
Mm-hmm.
And then that does two things. What it does is it prioritizes your transactions, but it also allows the block size to scale faster to reach an equilibrium. Now I was looking at xmrchain.net and seeing the kind of numbers you see there. And is this, I mean, we're seeing a small rise, but are we seeing the transaction group? I mean, again, well, we've got like 500 kilobytes right now.
Mm-hmm.
So it looks like it's stabilizing. And what that's saying to me is that the adaptive block size has gone up about 15-20%, and just under 20% right now. It's running at I think it's showing it at 357 or something like that. We should be pretty close to a 20%, 50, close to 20% increase, and it started to stabilize at that point. This is the other thing you got to watch. Because the spammer that's doing this is going to have to keep adding more and more transactions to keep growing the block size. It gets more and more expensive. Because the fees aren't going down. Won't go down for 2.5 months. So if you keep bloating the block sizes, you have to add more and more transactions. Even at the low fee.
So other than wallets, right? So we're seeing an issue with the wallets not appropriately adjusting in tandem with the demand for the Monero network. They should naturally be essentially raising the base transaction fee so that the transactions become more competitive. But on a protocol level, are things working as expected?
Exactly as expected.
Okay.
Yeah, because that's just working exactly as expected. We're seeing the everything working as expected. I guess if this will continue for 2.5 months, we would see a movement in the long-term median, and then we'll see a drop in fees.
So how about people that are saying, well, maybe this means we have to do something with the fees on a protocol level because of fees, it's becoming a problem, right? The fees are becoming cheaper. We always, I see it as ultimately a good thing, right? And as designed, fees become cheaper as more people use the network. But some have this kind of theory that it can lead to these too easy to spam the network.
Well, the issue you get into is if you're going to have an adaptive block size, it gets more and it's more expensive to spam the network. This is a big misconception. It gets more and more expensive to spam the network because you have bigger block sizes. So we're not turning around and saying it's cheaper to spam the network. You've got a fixed fee right now. And then you increase the number of transactions. So your cost is going up. And you're going to keep it up. And here's the other thing, the minute that you take a breather for an hour and a half if you're spamming, the whole thing resets.
Mm-hmm.
And that's the thing to understand. So, I mean, it's possible you can do a spam attack like this. I'm not saying it cannot be done. But what I'm seeing here is inconsistent with that. It's too small for a flat XMR. And increasing the fee doesn't help because all increasing the fee does is it allows the block size to grow faster. So you don't necessarily want to go crazy increasing the fee. It doesn't deter the spammer. This is actually the optimal fee for spamming, I won't get into, is actually considerably higher than where we are right now.
Mm-hmm.
So it's not optimal from a spamming perspective at all.
Are there any thoughts that come to mind in terms of adjustments that may need to be made to the protocol to deal with Monero's growing transaction count as we're seeing here?
There are basically thoughts that I have in mind for at the protocol level, which are designed to block the growth of the short-term medium before the increase of long-term medium. This was discussed. I actually had a chance to discuss this in MoneroCon with some of the people last year and get some consensus on that. But essentially, yes, there are changes. What we can do is we can lower the growth in the short-term medium before you have to allow the long-term medium to grow. And you could drop that search factor from about 50, which is right now times, to something closer to 16. There's a very good case for that. You can allow the growth of the long-term medium to grow from 1.7 to 2, which is what I'm proposing. That concept would kind of mitigate spam attacks because you're pricing them more tightly. The third one that if you're really worried about it getting totally out of control, you could do is you could put an ultra long-term medium of about 1 million blocks and peg that at essentially 2, which would do that, basically cap the rate of the growth of the blockchain to Nielsen's law after allowing for a search factor. So there's things like that that can be done on a long-term basis. But nothing in here which this is the kind of stuff that I had in mind ahead of time, quite apart from the fact that if you look at what Parker is doing, a lot of people are working on for membership proofs, which I believe for entirely separate reasons are a must for Monero. That means you're going to have to accommodate significantly larger blocks, depending on what kind of figures they get. The figures are going to be here around 10,000 bytes. And so it's an adjustment to the protocol that it needs to be done to accommodate that when you implement that change. So there is that kind of elements to it. But the kind of things we had in mind, there's a question here.
Yeah, you could finish your thought, and then I want to move on to the topic of nodes and get your response on that and what we saw with the nodes.
I mean, if you are getting into, what I was getting at, that nothing that I've seen of this would change the sort of track that I had already in mind for protocol changes.
Okay.
But when it comes to wallet, that is something that needs to be tweaked in response, and because the minimum fees may want to be raised, which some people have said, and that's the node relay fee. Below a certain point, there's some arguments for that. I mean, I don't have a huge issue around that. I mean, so you actually say, okay, fine, we're not going to drop it, or we're going to keep it in the linear or the quadratic. Where, those are changes that we can consider as we go along with fees. At the fee level, not at the protocol level, because that's all basically node relay. So the fees, yes, it's an area where we can work on how we can refine it. And this is something where we're going to have to watch and monitor. We can learn from this. Is it scaling too slow? Is it scaling too fast? Those kind of things.
Mm-hmm. Yeah. So to summarize, Francisco's basically saying he's not. This event hasn't caused him to think there needs to be any additional changes to the protocol in terms of scaling and dynamic block size and the algorithm that runs that, other than what was already kind of on the roadmap of things to be done, and that you see the changes that need to be required are really more on the wallet side, interacting with the protocol.
Well, the most obvious one is that we're going to have to respond to, which is what I thought was in the wallet code. I think that's just a bug when it was moved up, is that we have to, if you start getting a lot of transactions in the mempool, in the transaction pool, mempool is a Bitcoin term. Then what we have to do is have the wallet suggest the higher fee. What happens is people tend to just don't take what's suggested to them. They're not looking at the market and saying, this is what I need to be doing. And so suggested fees are really important because it kind of takes us default behavior. The question that has been made out, why some nodes get out of sync while others didn't, because some nodes may have a tough internet connection. So yes, that can happen. That depends on what your bandwidth is. If you're running a node and you have very tight bandwidth, that could be a problem. And that comes down to how good is your upload bandwidth on the node, or did you set a restrictions on it, and so on. Mm-hmm. So this huge variation in the bandwidth that some nodes have. And that can impact the very question that was asked, why some nodes can get out of sync. That is because they're maxing out their bandwidth.
So what is that? So just to give us more insight there, what needs to be changed and by whom to have a smoother scaling on the node side of things?
What you could do is the nodes could prioritize certain things. I mean, nodes that are lagging, they'd be better off not trying to feed a bunch of other nodes just to keep up themselves. One of the things to bear in mind, that the key bandwidth limitation in Monero is the upload bandwidth. So if you're struggling as a node to keep up, then what you do is you simply keep up, but you don't, I'm going to send transactions to 12 nodes, I'm going to send transactions to 2 nodes or something. So you prioritize, first thing you want to prioritize actually it's not relaying transactions, you want to prioritize just actually keeping up with the network itself. So you can make choices at the software level as a node, what you're going to prioritize. So if a lot of the nodes have trouble keeping up, well, you shouldn't be relaying transactions. That'd be an obvious example. You should just focus on relaying mine nodes before you focus on relaying transactions. That'd be an obvious example. So there are things you can optimize if you have a node that's marginal to make it efficient.
We have over 400 people watching now, 415 live, over 320 on Twitter. This is awesome. This is fantastic. And I love that it's happening today because this is a beautiful episode. We're watching in real time Monero dealing with a boost in transaction count. And we're talking to none other than Francisco Cabanas, a.k.a. ArticMine, who is the premier expert on Monero's scalability, I'd say.
Okay, let's take a look at what happened to the transaction pool. I just refreshed it on XMR chain.net. And again, it's holding nicely. Okay, you were saying.
Big picture. So, you've always been a proponent of Monero being able to scale on chain. In fact, you always kind of describe that as what excites you most about Monero, not even necessarily its privacy. Obviously, that's important, its fungibility, but just its architecture for its ability to scale on chain. Big picture, how are you seeing is the narrative still this? Is the thinking and theory still the same that Monero can effectively scale on chain for the foreseeable future in tandem with Nielsen's law? As internet bandwidth improves, as computing storage improves, that effectively Monero will be able to scale on chain, potentially even to Visa level network size of transactions.
That's doable. I could see Visa levels size of transactions in a decade. Are we going to see it now? It's pushing it, but definitely within 10 to 15 years, yeah, I can see Visa level transactions. If you just look at trends. Again, look at Visa. Go back when Bank America was created in 1959, when I was 2 years old. And there's a picture in my Bitcoin talk link that I still have of a warehouse full of punch cards in the United States that roughly amounted for about half a gigabyte. Although the Wikipedia article says 4 gigabytes, they forgot the fact that the punch cards, the tabulating machines at the time did not have the capacity to take the full advantage of what you can store in a punch card. I won't get into the details of that, but that purple card number was too low. And now what do? We put terabytes on a chip the size of an SD card. I mean, I've got a phone right now with a 1 terabyte memory chip in it. So, I mean, the reality that we have here is that technology will change, whether we like it or not. The question is, if you have a protocol, will the protocol be able to take advantage of the technology? The way Monero has done it, Monero can do it. The way Bitcoin has done it, no, it will not be able to take advantage of the technology. It's that simple. So we have this. Well, I mean, do we need to? I mean, this is the question. And the answer is there are solutions to peg it to something like Nielsen's law. But there isn't a point in radically reducing the size of the network, because then you destroy its raison d'etre. This is what Bitcoin has done. You have, the whole point of it is that you're going to have people using it, and large numbers of people using the technology. So you have to have a bandwidth that can support that. If you're going to say, okay, I want people experiencing homelessness to be paid in Monero because that's the only efficient way to pay them whilst they're experiencing homelessness, then you have to do the math. And I was, I say, well, you better get to be able to scale so you can do this. I mean, it's that simple. Otherwise, you become, this is what's happened to Bitcoin. They cut it down totally radically. And what does it become? It's become nothing. It doesn't have a raison d'etre. This is why people like Warren Buffett says, what's the point? Or Iron Shift says, what's the point? And they're right.
Right, exactly. That's what we were talking about earlier, right? Like it doesn't have that innate use case as digital cash on chain. So wait, Yolan, I think you were kind of starting to answer this question. Yolan was asking, so are there any solutions to radically reduce blockchain growth of Monero, or you're saying that's really not how we need to be thinking about this? Obviously, we're gonna. I hope that efficiencies will be added as we improve. Right? We saw, for example, with bulletproofs when that happened. Transaction sizes radically reduced overnight. So hopefully, maybe we'll see breakthroughs in the future. But right now, we're looking to add full membership proofs, which, if anything, is going to increase the block size. But with that, we're getting an amazing amount of privacy in return. So the cost is worth it for the benefit that we're getting in return. But yeah, to his question, any solutions theoretical?
Well, theoretically, what you want to do is to keep the block size growth in line with the growth in bandwidth. So what matters really here is not the absolute growth of the rate of Monero, but that it's growing at a lower or equal rate to the growth in bandwidth. And the key parameter here is the upward bandwidth that a consumer or a small business has, not the downward bandwidth, because that's the limiting factor. So if you want to look at what is the biggest limiting bottleneck, it's what's your upward bandwidth into the internet from a connection. That's the bottleneck. So the solution is, okay, we allow a surge factor, and then we say, okay, we're going to limit this, so say twice every 2 years. You can double it every 2 years. That you can do fairly easily through a long-term medium, which is one of the ideas I was proposing. But to say you would do it absolutely.
Go ahead, finish your thought.
Yeah. So to say what I say absolutely is the wrong thinking, because you've got to keep in mind what the cost is. Spam attacks is a totally different issue, because spam attacks, you can price them out, and we're doing a good job of pricing them out right now. Once the thing becomes a problem, it becomes prohibitively expensive to spam Monero. I mean, sure, you can sit there and hobble slightly above the bandwidth level of 300,000 bytes. But once you start pushing significantly higher than that, you're going to have a very expensive spam attack. In fact, the spam attacks, all the calculations is that a typical spam attack, you're looking at about 4 times, 8 times a 51% attack. So it's simply not cost effective once you start getting deep into the penalty. The kind of stuff we're seeing now is, sure, you can get it right up to the 300K level and maybe a bit over and say, okay, I'm going to spam it at that night. But that basically presupposes that we don't have organic growth into that area. And what I have seen is with organic growth, about half of it already on various occasions. And again, I'm far from convinced that what we're seeing right now is a spam attack. Then, I mean, once you get into the maintaining it, spam attacks become very expensive in Monero. The kind of thing that happened in Zcash is very expensive to do in Monero. So sure, you can nibble at it, but when you try to get deep into it, and this is what happened when there was an attack in, and I think the Node-RED's research lab, they went on and they identified it and looked at the profile and everything. And they gave up just when they got into the policy.
Francisco, can you talk about the pruning algo option? None your business. I just want to make sure we're properly answering his question.
No, the pruning algo, here's the thing. You can actually design...
None your business. I don't like spamming the chat. None your business. You got to work on your delivery a little bit with engaging with me. You're very rough around the edges. I mean, okay. I guess continue as you are, but we're trying over here, man. We're trying.
Okay.
We're trying to answer everybody's questions.
Let's get into the issue of pruning.
Yeah.
What can you prune from the Monero network? Well, you can do the segment approach. You can just keep all the proofs out and all that and prune all that stuff away and just keep the basic transaction information. And that will significantly reduce the volume. That is one way to do that. And then you have prune nodes. And then if you want to prove everything, you have to have the full node. So you can do that. You could do structures where each node doesn't have the whole blockchain and you grab it from different nodes. And you do pruning that way. So those are options. Pruning is a linear thing when you're starting the growth of a network. It's the most, if you look at Bitcoin, for example, most of the growth of the Bitcoin network is the most recent, not the early stuff. So pruning in a sort of an absolute sense of eliminating transactions entirely is not an option in Monero, but you can take out a lot of stuff which is not vital and have it in every node, which is essentially proofs and these kind of things, which is kind of the SegWit element of Bitcoin. So you can prune that kind of stuff and have a big impact. But again, you're going to have some nodes that have them, some that don't. So that's doable. Pruning, I think, is overblown because basically you still have growth in bandwidth, and pruning is a linear issue. But that's the answer you have. Yes, you can actually prune some stuff out that we don't really need, or it's sort of optional, and you can answer that question in that way. Let's see what else I see in the comments. If there's anybody in the comments in here. Coming in here. But
okay.
Yeah, I was just trying to see if it was coming in there. But my question, answering the pruning question, pruning is a linear problem. You have exponential growth in the bandwidth and exponential growth at the early stages in the growth of the blockchain.
None your business wants to specifically know will a spamming attack, if this were one or one to happen, will that affect the pruning algo? Is ultimately the question he's trying to get answered.
Well, a spam attack is not going to be any different than organic growth. I mean, in the sense that a spam attack, first of all, how significant is the spam attack going to be? Is it going to be sustained, or is it just going to be a nibble? I mean, if you've got a nibble at the edges of the blockchain, about the growing over 300K, then it's not going to do much. If it's significant enough to have an impact, then yes, it could in principle apply it, but then the most likely solution is to tweak your pricing, which is what we've done. We did since 2019, which is you tweak the pricing, you make the spamming attack expensive, and you design the pricing in such a way that the ham gets through and the spam gets expensive. And this is why the proposal changes that I'm looking at right now is to price more tightly, which would address that kind of question. So the way to deal with spam attacks is at the pricing level. So the idea that we have is we're going to remove the burst factor, which is 50, from the short-term medium to the long-term medium, take it down to about 16, increase the growth of the long-term medium to allow for the growth in the network, but that's a price growth. So that's the kind of thing that you can do to deter spam. You make it expensive. The only thing you can do in a private network with spam is to design the pricing so that the spam relative to the ham becomes expensive. That's what you do. And this is what we've been working on. Pruning is not the solution that people think it is. It's a nice thing to have, but pruning is not really the solution. It's pricing. It's what we should be thinking of.
All right. I guess a final thought, and then maybe we could do viewers on stage. I know other people might have things they want to discuss with regards to all this. Layer 2. I see now this is leading to discussion about potential for layer 2 on Monero. I see some people adamantly saying, don't let this be a time when Monero starts moving towards the layer 2. We've seen how that's failed on Bitcoin, and it leads to a way for essentially these decentralized currencies to be captured. Do not go down that road of layer 2. I'm seeing people say, what's your current thinking on layer 2? Do incidents like what we're seeing here with growth in transaction count have you thinking more about layer 2? Or is, like we said before, everything is working as expected? Monero's scaling beautifully on chain. Yes, there's some things to be tweaked, but we could get to Visa level transactions at some point. We really don't need to be thinking much about layer 2.
Layer 2 is not a substitute for layer 1. Layer 2 is leveraging layer 1. This is why Bitcoin is totally one sideways, because they cannot scale the growth of the layer 1. And they say, we're going to do it on layer 2. Well, no, because all you happens with layer 2 is that you get a growth factor on layer 1. I'll give you an example of a simple layer 2 solution, a Starbucks card. Now, a Starbucks card is a layer 2 on top of Visa. It's a layer 2 on top of Cash, and it's a layer 2 on top of Monero, and Bitcoin, and Dogecoin, and a whole bunch of other things you can buy with. So what does a Starbucks card do? Okay, I go to Starbucks, let's say I pay, and I give them $100, and then I buy a whole bunch of cups of coffee. Well, instead of having one transaction on the Visa network, for example, if you pay with Visa, instead of having 20 Visa transactions of $5 each, which is going to cost you a bunch of fees on the Visa network, now you have a single transaction at $100 each. That's a layer 2 solution. You do the same thing with Monero. You put in a certain amount of Monero, you buy a prepaid Starbucks card, and then you transfer the value into the Starbucks card. You've done the same thing. That's a layer 2 solution. It's a simple one. So there's a place for layer 2, particularly at the merchant level, to eliminate large numbers of transactions. Let's say you want to pay for microtransactions or something. Well, a simple centralized ledger could be a very good layer 2. And you're way below any kind of possible threshold for KYC and all that kind of stuff. We deal with prepaid value, that kind of stuff. So there's a role for layer 2. But layer 2 is not a substitute for layer 1. And this is where Bitcoin has failed on this. Lightning Network, by the way, and I'm going to be, this may sound controversial, but Lightning Network is money transmission, when you really get down to it. When you're doing it as a, for other people, because essentially you have to balance the channels. So at the point you have to balance the channels, you have to reset that on the main chain. And that's where your money transition comes in. It is no different from when Western Union started in the mid-19th century.
Right.
So
we don't talk about that enough. We've mentioned it in episodes.
Yeah, if you think about Western Union in the 19th century, so what did they do? Up comes the telegraph lines. So you're going to send money from Chicago to San Francisco. And initially it was the Pony Express and then the railroad. So what happens is Western Union sets up an account in Chicago and an account in San Francisco. So you go to the Western Union in Chicago. I say, I want to send an X amount of dollars to somebody in San Francisco. They go ahead. They write up the fee. They charge you a fee. They send a telegram to their San Francisco office and tell them, pay this guy $100 in cash. Well, in those days, it would be $20. That's what it is. And that's money transmission. And then you have to balance it out somewhere. If you have a one-way traffic, what you've done if you built a layer 2 on top of the Stagecoach or the Pony Express. So you have to have somebody back, ship the cash back by Stagecoach to Chicago or by railroad. So you built a layer 2 using the telegraph line on top of the Stagecoach. If you balance your channels, then you can move them back and forth, so you get a gain on that. But that's the basic essence of money transmission.
Right, which becomes an attack vector, a regulatory attack vector for the state.
Exactly. Lightning Network is no different. You have to balance the channels. Now, you're balancing on the main chain, which again is slower than the so-called layer 2. So you go back to the same model that we had in 1850. In this case,
do you think we'll start to see that attack vector play out, where regulators come in and start to consider Lightning Network a money transmission network?
I think it's a matter of time before they figure it out. The Lightning Network, when you're doing it, not even just opening a channel with the merchant, but when you start doing it, it becomes money transmission. Because you got to balance those channels, and then they got to try and regulate it. And this is where you start getting in all these gray areas. There's a lot of gray areas in this. So it's a lot of layer 2s. If you do it just with a merchant, like the example of the Starbucks card that I gave, that is a simple model because there's no money transmission because it's just prepaid value with a merchant. And using prepaid value as a way of doing a layer 2 on a network. I can see that be very effective. But when you
I'm sorry. And what would that look like for Monero? What do you like?
It's a very simple example. I mean, you could go today and you could buy a Starbucks card with Monero.
Right, the gift cards with Monero.
The gift card, yeah. So you transfer the gift. Starbucks allows you to transfer. You buy a gift card.
That's effectively acting as a layer 2. You're buying this card where you now could operate outside of the network to do your Monero transactions.
When you buy a gift card for say $100 worth of Monero, you transfer it onto your Starbucks card. Now what you've done is a layer 2 on the Monero network, and it's no different than the layer 2 on the Visa network if you pay $500 with Visa. My point is that this approach, the merchant approach, is a great example of layer 2 and a very effective one. This is why we're seeing that peak in transaction activity just before Christmas, which we saw in the chart that we put out earlier. We have this peak, a lot of these people buying gift cards. And what they'll do, because they're digital now, you can actually buy the gift card and make a payment, or you can store it in the gift card, create a layer 2, and then multiple payments with the merchant. So you're buying prepaid value with Monero. Well, that takes pressure off the main chain, and you avoid the money transmission issue because now you're just dealing with the merchant. So you're not doing it on. So that's a simple example of a layer 2. I mean, we've got to sometimes think out of the box and look at not complicated solutions, but simple solutions to a problem. Where we'll get into trouble with Bitcoin is they create this routing over the Lightning Network. And Lightning is a great technology. Don't get me wrong, but it's a great technology for certain applications. You open a Lightning channel with a merchant. Yeah, the Serai writer says so. Add on top of it the attack package, so you will have regulation. I totally agree with the Bawdyanarchist on this. Right back on the money, because when you're doing routing over the layer network, then you have money transmission. If all you're doing is opening a Lightning channel with a merchant that allows you to cash out, that's a very efficient solution. But then you don't have routing. That's different. So you could design a Starbucks card model using Lightning Network. You could do that, but that's not routing. But Lightning Network right now, when you're doing routers, you end up with money transmission, which is exactly what Bawdyanarchist put in it. I totally agree with that. It's a routing element that's the problem. It's not the channel between the customer and the merchant. That's the distinction that has to be made. Okay, CK roll-ups. I'm not exactly sure what that means. Maybe someone could clarify. Hello? Yeah, I'm not exactly sure what that means.
Oh, looks like you're muted, Doug.
Yeah, you wanna?
Oh, whoops. Yeah, we could have Bawdy pop up later.
Yeah,
and
maybe
explain-
we can explain exactly what it means.
We could talk about zero ZK rollups. Somebody else is asking, what does Arctic think the effect of setting a 2-cent minimum fee would be? I think you kind of covered this already.
Well, you wouldn't do it in terms of fee. We already have essentially a minimum node relay fee, and it's done through node relay. And it really should be set. If you did it higher than we are, what you would do is you would accelerate the rate at which the block, if you set too high a minimum fee, what can happen is you get instability, because what can happen then is you get surge and then stop and surge and then stop. So there's a danger to that. 2-cent minimum fee would actually create a fast growth, and then it's sort of an underdamped situation if you think of it in terms of physics. You grow and then you stop growing and then it drops again. So that's what that kind of a too high a minimum fee would do.
Right, and as you were saying earlier, you don't really see a need to start adjusting with the fees on a protocol level at this.
Well, no, you don't do it. No, this would be a node relay fee, what's being suggested here.
Mm-hmm.
And what happens is if you get it too high, then you get instability. You get like fluctuation. It goes up and down and up and down. What you want is you want to keep the node relay fee low, but then you want to have the suggested fee go higher, which is why you could do that. But there's a more elegant way to do it is to say, okay, you keep the low fee, but then if there's demand in the network, then you have the suggested fee go higher. Can you do it dynamically? That you look at the yeah, I mean, you could do it in some principle. You could take it to the point where the node relay fee becomes dynamic in the sense that if it's too small, you look at the transaction pool and then set a minimum fee based on the size of the transaction pool. So you could do that. You could make the minimum node relay fee dynamic. That could be doable, which is kind of similar to what was suggested, but the difference is you're responding to the network. You're not just doing it arbitrarily. So you could do that. You could, in principle, do a dynamic node relay fee based on the size of the memory pool. That's an interesting idea. It's something, so it's definitely doable if it's necessary. Right now, we're just doing a suggested fee, and it isn't working because it's not triggered. I think if we do a suggested fee, it will do the job. But because keep in mind, there are people who might say, hey, I don't mind waiting a day to get my transaction cleared. Maybe all I'm doing is I'm rethinking my wallets. And I don't really care if I get this done. If I get it done in a day, I'm fine. Why would I want to pay the higher fee? So that's the flip side to that. The other thing you can do if you worry about spam attacks, spamming that, is you could also have a timeout in your transaction pool. So if a transaction sits in the transaction pool more than a certain amount of time, then it's going to time out.
None of your business. Okay, guys, almost 3 hours. Great job. I'll try to be nicer to Doug in the future. Actually, we would have we definitely have a great time having a beer together. Come down to Monerotopia, and would love to meet you in person. I'm sure you're a good guy. You're just a little rough around the edges with the questions. We don't mind. We're used to your character at this point. We are at 440 live viewers.
Yeah, that's exciting.
380 on Twitter. So we are literally approaching 1,000 live views collectively, which is pretty incredible. Guys, like and share. Then now's the time to do it. We'll go exponential over here. Like and share, subscribe, do it all. Grow the channel. Most importantly, for purposes of getting the word out there further, so people can come and learn about Monero. I do feel like Monero is, the attack that's being done against Monero is a censorship attack. Essentially, they don't want people to know about Monero. It's being delisted from exchanges. You don't see people that should be talking about Monero. They want to keep it hush hush. Those that can. They don't want to let the cat out of the bag. Obviously, it's having the opposite effect. We're seeing the Streisand effect come into effect, but that only happens if we continue to push the word out to people and use our resources to grow Monero and awareness of it. Arctic, anything else you want to get out before we move to viewers on stage? And I'm sure there'll be lots of discussion there. People might be asking you more questions at that point, but anything else you want to get out at this point?
One thing I would get out is I suspect if it's going to be ever a flip of Bitcoin, Monero flipping Bitcoin, it's not going to happen in the bull market. It's going to happen in the bear market. The scenario where I would see a flip could be in the depths of a bear market. I know how that sounds. But if you look at the history of it, the stock market, for example, when did Amazon flip AOL? It wasn't in the bull market, it was in the bear market. And that's the kind of thing you want to look at. So if we're talking about Monero becoming dominant, and in fact, if you look at some of Bawdy's numbers, I would expect it to be in a deep bear market, not in a bull market.
For a moment where we start to see Monero really climb against Bitcoin in terms of adoption.
Yes, but here's the thing. I mean, what I'm saying is I am a big bear. I'm a very, very bearish on Bitcoin. And the fundamentals are just not there because for the very reason that people like Peter Schiff or Warren Buffett about the fundamentals are there. You've restricted, it is a centralized cryptocurrency. It is not decentralized because the economic activity that to support the price that Bitcoin has can only occur in centralized ledgers. So in order to support that price, you need decentralized ledgers. So if the rug is pulled out of this, the whole thing could crash. And that's the point where Monero would turn. But it would be a lower price than we are right now.
But there does seem to be this momentum, of this group of bankers and deep pockets saying, okay, we're interested in using Bitcoin as a store of value. Obviously, that's kind of teetering on. Do one day they no longer decide to consider it a store of value? But the collective seems to be in that direction on a large level with deep pockets.
You need to use something as a store of value. You have to have a fundamental use case for the something.
I agree.
And the fundamental use case, and you go back to Karl Menger's The Origin of Money. If you want to use the 19th century term as sibyllinness, in the 21st century, we're talking bid-ask spread and friction. But the reason people want to use Monero is because you can do payments with Monero, you cannot do with Visa, or you cannot do with MasterCard, or you can do it more efficient. And that's the real reason you want it. The value in it lies in the lower transaction fee. And that lower transaction fee is not for every transaction. This is why a lot of people think, we're going to replace the whole economy. I won't agree with that. If I go to a hotel and stay at a hotel in Canada, and I'm well off thanks to my bond with crypto, Visa is incredibly competitive there. I mean, the merchant gets a 1.5% cost or something like that. And I get 1.5% cash back. That transaction is really efficient. But the same transaction across an international border, the merchant gets charged like 2.5% or 3%, and I get charged 4% spread on the exchange rate. All of a sudden, it does not make cost effective. And then if you go with somebody, how do you pay a poor person or somebody who's experiencing homelessness half around the world? Well, you can't even do it with electronic payments. So there are transactions where Monero beats the fiat banking system because of friction costs. And the volatility is an issue because it costs maybe about 1% to hedge that. That's easy. So what you're left with is, can we compete with cross-border transactions that are for small amounts of money, especially if they involve people that are disadvantaged, homeless, discriminated against, marginalized, whatever you want to have. And that is where this thing shines. International transactions, particularly involving marginalized people for small amounts of money. That's where you win. And that's why there's an economic value. You can't do that with Bitcoin. El Salvador is a great example is to look at. El Salvador went for Bitcoin. Why did they take a look at Bitcoin? I'll tell you why. 24 to 25% of the gross national product of El Salvador is people remitting money to El Salvador from outside of El Salvador. That's 25% of the GDP. It's remittances. Mm-hmm. So they got to figure out a way, can we remove friction on this? Or we'll use Bitcoin. The trouble is that it can cost more money to send it over the Bitcoin network than to use a traditional payment player such as Western Union or money transmitter business. It might cost like $5 in one case, or $6 in one case, and $50 over the Bitcoin network. Well, they're not competitive.
Right.
Because
unless they use custodial options for Bitcoin.
Well, but the point is, if you're going to use custodial options for Bitcoin, why not just use custodial options for USD?
Mm-hmm.
And you avoid your volatility. The whole point of Bitcoin is that you don't use custodial options.
Mm-hmm.
And so the whole thing becomes pointless. That's the point that people like Warren Buffett are making. That's the point that people like Schiff are making.
Right. They actually get it on a deeper level than this is what I'm saying on the outset. I totally agree with that, right? And which is why I think if they're gonna make a jump to crypto, it's gonna be understanding that oh wait, there is actually a crypto that does do this, and it's
exactly
Monero.
The thing has to be a cypherpunk currency.
Mm-hmm. Mm-hmm.
And one of the biggest problems that I have in this business, and I'll tell you what it is. I have no problem dealing with banks. Unlike many members of Mercury, I don't have a problem. I don't have a problem dealing with cypherpunks. What I don't have patience for is insolvent banks masquerading as cypherpunks. And there's a lot of them around. That's what I have a problem with.
Wait, explain that. Insolvent banks acting as cypherpunks.
Masquerading as cypherpunks. Great example, FTX. What was that? Massive insolvent bank masquerading as a cypherpunk.
Mm-hmm.
That's bottom line. That's what it is. Empty blocks. Same thing.
Mm-hmm.
How many cases do we have of failed exchanges, failed cryptocurrencies that when you get down to the bottom of it, someone comes up with a brilliant idea to create a smart contract to mimic the economic behavior of the Reserve Bank of Zimbabwe or the Reichsbank and the Weimar Republic. You can do that. You can write a smart contract that will mimic the behavior of a failing fiat currency. And what you do is you print more and more of the currency as the price goes down. And we see that. Oh, we're putting it in a smart contract. All you've done is you've made the economic behavior of the Reserve Bank of Zimbabwe. But you programmed it to a smart contract, and I'm going to run the thing on the Ethereum blockchain. Sure, you can do that, but that's kind of the stuff that we're seeing around here.
Amazing. I'm just blown away by the amount of live viewers we've had, and it's been consistent. Sticking with the whole show, only climbing throughout. I mean, collectively, if you look at Twitter live views and YouTube live views combined, we're at like over 800 live viewers right now, which
really
is
exciting.
Yeah, we're at like 850 live viewers right now. Guys, keep liking and sharing. This is awesome. So now we're gonna move on for people who are viewing for the first time. Part of the show is the special guests, which we've just done. We've done price report. Then we have viewers on stage. That's where anybody can jump up on stage. We put a link out there. I imagine we might have more than we can handle today. We can only handle 12 people in the back room, and only so many that are up on stage at once.
I can stay around for that if need be.
No, please stick around. Please stick around. People want to, want to ask you questions. I think we'll move to that now. We'll move to the live stage segment of the show, and then we'll do news at some point. We'll try to make the news fast, since I think people are more interested in talking about this topic with Arctic right now today.
Yeah.
All right, so. Tux, are you on board? You're around?
Yeah.
Okay, we got Tux. Yeah. Tux is live. Tux, how you doing, man? You jumped in mid-show.
Yes, a co-host swap with Tony there.
That was smooth.
Yeah. So this past week has been crazy. I've been putting out some fires over at Cake. We've seen what happened where everything was chill, everything was fine. 30,000 TXs per day. And then suddenly it just went to I think from 30K to 80K within the span of a day. And then the last day, it's 140,000 transactions in a day, which is crazy. Mm-hmm. And the biggest issue for us, obviously the wallet client, which Cake does use wallet too. It does use that part of the Monero code to estimate fee. So we were affected by that, unfortunately. If the fee was set to automatic, it would have had a really low fee, way lower than it should have been. Mm-hmm. So that's a problem. That's going to be patched very, very soon. But one of the bigger issues is we've come to notice some major design issues. And I don't know specifically what, but there are some issues with Monero D itself with the node. Our nodes were having such a hard time keeping up with whether it was just the mempool or the flow of transactions, the influx of transactions coming in. But the Monero nodes were having a hard time doing that while keeping its network performance optimal. And the response times for RPC were going up to like 10 to 20 seconds. And by that point, over 10 seconds, our nodes are marked as unhealthy by our load balancer. So for a lot of the time, the nodes just weren't available to people for syncing, which caused a massive issue with support. So while the wallet issue is one thing with the fees, there's some things that should probably be looked at in Monero D itself. There's probably a lot of optimizations that could be made. Maybe the networking code could be rewritten because it's not scaling well with hardware either. We had bumped the hardware up. We gave it 4 times the amount of cores it had. We gave it more RAM, and it wasn't scaling with the hardware well either. So,
can I ask a couple of questions on that?
Yep.
Because that's a direct experience situation. There's a couple of things that I can see being an issue here, and I'm going to say, what was the bottleneck? Was it bandwidth or was it processing power? Where did you feel the biggest bandwidth block was?
It's definitely not bandwidth. These VPSs are on. They're hosted on Linode, and they have like 2.5 to 5 gigabit connections. And we were getting nowhere close to that. It looked initially like there was a bottleneck with the amount of CPU performance that they had because we only had the 2 cores, which for what was happening for the past several years, that was more than enough, and it was starting to use a lot of that CPU, and so we bumped it up to 8 cores, and it spread the load out a little more, but unfortunately, it didn't seem to really take advantage of the performance that we had available.
Okay, let me tell you what I think is a major potential for upgrading here for Monero D. And that's we need to be looking at parallel processing for Monero, and we need to be looking at using GPUs as opposed to CPUs to process and do transaction verification. This is one of the things that if we've got to optimize the network, what you told me seemed to indicate exactly the area of concern. We have to look at using the GPU style parallel processing approach for Monero D, make a parallel process so you can optimize with 8 cores and you can optimize with the GPU. There were tests done, I know, at a couple of years ago by some of the, and it scales very well for parallel processing. The transaction verification does. That is definitely a bottleneck, and a bottleneck that can be handled by moving towards GPU processing of verification for transactions. And that, from what you just told me, that seems to be where the bottleneck is. But maybe I want to get your thoughts on that, because if it's bottlenecking on the CPU power and it's not load balancing properly, it's because you're not getting proper parallel processing. And that is definitely a change in Monero D. It's not a core change. In a sense, it's not a consensus change. It's a processing change. But that we recode that so that it actually does GPU verification. So it's like going from mining on a CPU to mining on a GPU, but we're not dealing with random X here. We're dealing with something more along the lines of the old Bitcoin code. And so you want to be able to parallel process it. And when you do that, then you open the door to a lot of unused GPU power that can be used for this. So that's my thought on that. I don't know what the comments are going to be in the community, but I sense from what Tuxedo has told me that is definitely, I can see the bottleneck there. In my opinion, the answer is no. It's not making use of multi-threading. Effectively, yes, that's essentially the point that I'm making.
Yeah, based on my own what I could see myself, it wasn't doing a very good job at parallelization, which was then affecting the networking stack part of Monero D, which was causing it to be unresponsive or respond extremely slow. Which by the point that it responds beyond 10 seconds, takes 10 seconds to respond, which is a really long time. Our own in-house load balancer that one of our guys developed, it marks it as unhealthy.
No,
So even if the node was working, most of the time the nodes were getting marked as unhealthy, often due to the load and their network performance being bad, so which is preventing people from syncing overall. So the nodes were still working, but they were getting basically turned off from being used due to their low performance.
You were getting bogged down in transaction verification. If I was going to look at that, that is it, what's going on. And that is definitely an optimization that is going to be needed in Monero. That we have to move to GPU parallel processing. And that just doesn't just apply to using a GPU, because the other thing to bear in mind with processing power is that where the growth in processing power has occurred, i.e. Moore's law, is not in the speed of processes, but in the parallelization of processes. So now you go from 4 cores to 128 cores. And that's where your growth in computing power is occurring. Well, in order to take advantage of that, you've got to be able to take advantage of parallel processing. And there's no reason why Monero transaction verification cannot be parallelized.
Mm-hmm. And there's still a lot of, I'm sure there's a lot of like enhancements that can be made with, it currently works with CPUs, right? Like I know with GPUs, you're going from a few cores to hundreds and sometimes thousands of cores that can all do, individual operations. But I know I would imagine there's probably tweaks that can be made to use more than just like the couple cores it was using.
If you write the code for using multiple cores in CPUs, you effectively also writing the code for using multiple cores in GPUs. I mean, in fact, some of it's not that different. So, but essentially, what you're doing is you're writing the code for parallelization on a large scale. And with CPUs, you could have CPUs with 64 cores and maybe 128 threads. Because you're getting the extra thread from essentially what the Intel processors and AMD processors are doing is to start the processor one part of the CPU, and then the second thread starts the processor the second part of the CPU, so you get twice as many threads out of the CPU. That's what it does. So, but parallelization, we're talking about, is the same process, whether you're going to do for a multi-core CPU, which is what's out there, or whether you're going to go to GPU. And then the choice becomes what's the optimal hardware to use. But the coding change that you need to do is going to should support both.
All right, Tux, any insight in terms of transaction volume that was happening with the integrated instant swaps that are on Cake, where we're seeing an uptick there?
That's a pretty good question. I did ask Vic. I haven't gotten an answer back on that because we can see for some of our partners, we can't see. Obviously, we don't, see like where the money's going or who has what, but we can see like, oh, there's this many trades made with Monero being a part of the trading pair. I don't know specific numbers, but last week, and I think we showed it last week, Vic had actually tweeted out that there was a sudden surge, like a huge surge in exchanges related to Monero. So there was something happening around last week where there was exchanges, just like people using it in Cake.
And by a sudden surge, how much?
I don't know specifically yet, unfortunately.
Okay, but that's going to answer the question that I raised about transaction activity. Because if you're shifting part of the Binance, because last week is right where the shutdown of Binance. If you're shifting that trading of Binance on the centralized exchange onto Cake Wallet through Monero pairs, that is actually going to do exactly the kind of increase in transaction activity that we're seeing in the network. And not just Cake Wallet, but a whole bunch of other similar situations.
MV equals PQ, recalibrating.
But this is what I'm saying. Because basically what we're doing is we're shifting from the centralized queue to the decentralized queue. Mm-hmm. Because every time you do it on something like Cake Wallet, what's going to happen is you're going to hit the network. You're going to hit the Monero network. You're not storing it in a centralized exchange in a custodial wallet anymore. You're doing an instant transfer, an instant exchange. And that shows up on the network, and that pushes the transaction activity. But that'll be great data to get, because it's going to answer the very question that I raised with respect to what's happening. I'm looking at it from the macro perspective, but this can be looked at from the micro perspective. With great information to get down on this.
We'll definitely keep an eye on that on this show. And
yeah, what Tuxedo has just told me, it just basically is exactly what I was suspecting.
Fantastic. Tux, keep us updated on that end. Any insight you guys can give us. It's exciting. This entire segment has been extremely exciting, with Francisco basically theorizing that he thinks this uptick we're seeing in transaction count is essentially organic, is what he's hypothesizing, especially given the delisting with Binance and that traffic moving over to the protocol from the centralized ledger of Binance, and now those transactions essentially being pushed over to the protocol itself. Is exciting to think about. We don't know what's really happening, and then extremely exciting to hear Arctic's take. It hasn't changed. Anybody who's been listening to this and listening closely, he's been saying the same thing for years in describing Monero and how it's built to scale, and now we've seen it scale as designed. Yeah, there were some hiccups, primarily with the wallets integrating with the protocol, not so much the protocol itself. So beautiful to see and beautiful to hear that things are working as designed. And Arctic is as bullish as ever in essentially where, in terms of Monero and the fact that it has true utility as a decentralized system for sending value without censorship, without surveillance, and that's really where the value prop is for crypto, and people are perhaps becoming aware of that. As we're seeing with approaching 500 live viewers here on YouTube, 380 on Twitter, we're approaching that 1,000 mark, guys, and this is, I'm certainly not I don't have the capacity to fake this live viewership, so something's going on. Tux, what do you think? You think we should do news now or viewers on stage? My only concern is with viewers on stage is we'll never get to news.
Exactly. Let's pull Tony up so he can cover at least a few things, and then we can decide to go from there. So I'll go ahead and switch to news.
Yeah, we'll switch to news. Guys, hang tight, and then we'll do viewers on stage, and we can continue the discussion.
And now for our weekly news segment.
Hey,
Welcome
guys.
back, Tony.
Hey.
All right.
Okay. Let me share my screen.
Go ahead, Tony. Yeah, try to run through things today, just because we want to get to viewers on stage, and we're already well over 3 hours in here.
Yes. So I think I'm going to skip over the ones about transactions and all this stuff.
Yeah, this untraceable one is good, just to kind of remind us of where we're currently at, right? So we hit almost 140K transactions.
In one day, which is crazy.
In one day was kind of the peak of all this.
It's crazy how we just went up just like that in a short amount of time.
All while fees staying super low, if anything, getting lower.
Yes.
All right.
Then people... they're discussing about who's profiting from spamming the transactions, and then Nano has an interesting view. The answer is simple: they need a Monero that isn't functioning properly. CBDCs are coming fast, and they don't want an exit route open for humanity. Trust must be destroyed in Monero. Good luck with that. Long transactions, waiting lines are just a part of the full-scale attack on Monero by banksters. The attack is extremely well coordinated. He said we need to see them as one massive attack. The Monero delisting is the denial by crypto tracking sites, the complete silence about Monero in the media, price manipulation, etc., etc. Monero is in the middle of a war, which honestly, it's really good that Monero is being attacked from all angles, because if Monero resists and persists through all this, which it does, and it thrives really well, and it actually becomes even better, that just shows how potent it is. Like, for example, 16 ring signatures. Okay, we're going to have Seraphis, 128, I think it's going to be. And even more upgrades, and it's just going to become better and better and better.
Full membership proofs, right? We spoke to Luke a week or so ago, and he thinks full membership proofs might be able to get implemented with the Seraphis upgrade, which would be amazing.
What
Just
should
a
that
little question there. Did you ask
ahead.
him how big the transactions would be?
Yeah, I forget offhand, but they're certainly going to be larger.
I know. This is my question for Luke. Because that's the only number I need a number so I can know what to work on for the scaling side of it. That's just my comment on the subject.
Awesome. Yeah, well, Luke, if you're listening, jump on up, please, for viewers on stage. We'd love to get you chatting with Arctic live here. Go ahead, Tony. Keep going.
Yes. I do want to say, Arctic, I'm still reading over your presentation from the first Monerotopia. It's just, your work is so amazing, and I still go over it.
Thank you.
Yeah. There's some people, they say this could be a massive dark market operation.
Like a shutdown of the dark market is one of the theories that's been presented, if I understand. Similar to what happened with the pool that shut down. That would be the case if it was transitory. But again, I mean, I already just got anecdotal evidence that this could be a shift to on-chain decentralized transactions.
Mm-hmm.
That's the thing. But again, the dark market shutdown would be very similar to what happened with that pool just before the hard fork, where you get the same sort of result, a surge in transactions. The question is, that would be fine for a period of time. If it stops, that could be an explanation. But if it continues, then, and especially if you start getting the anecdotal information from instant wallet transfers and decentralized exchanges and so on, then we would see that is the shift. And it could be both too.
Could certainly be a combination.
Yeah.
Go ahead, Tony. Keep rolling.
I actually want to go back and just wanted to let you guys know that Serai's testnet is now live and has started to produce blocks. So that's very exciting as well.
Beautiful. Just in the nick of time. For people who don't know what Serai is, Serai Dex is going to be a decentralized exchange. It's going to function kind of similar to Thorchain based off liquidity pools. If things work out as intended, and I see no reason why they shouldn't, it could lead to Monero having an easy way to go in and out with other cryptos in a decentralized manner, in a very usable, user-friendly way. Eventually integrated into Cake itself and others, I'm sure, where it will feel like you're using a centralized exchange, and effectively you'll be able to swap in and out of Bitcoin to Monero, other cryptos as well that will be connected to Monero through the Serai Dex, all decentralized. So super exciting there, and it's not theoretical, guys. It's happening. It's been launched. The testnet's been launched, and I don't know, any day now we'll all be actually using Serai. So extremely exciting news there.
I'm so happy about this. It's so cool and so exciting.
Which is also Luke Parker, by the way, for people who are listening in. Yep,
Luke Parker. Then we can touch about this. Manually increase your transaction fee if you want a quick confirmation from Rockingham, which is going to speak to that Monerotopia. So what he's basically saying is that you can set the fee in the Monero GUI to normal X1 fee instead of what it is usually automatic, which will be slow 0.2x fee. Now,
well, actually, if I may say that was the old numbers. I believe that the low one is X1, and then the next one is like X4.
Mm-hmm. Okay.
Because we scaled everything, and I think that's probably the reason why we got the bug. When we did the last hard fork, we went from 0.2 to 1 for the low fee, and then we added a second tier fee. And that might be what threw off the so we don't want to you don't want to go at the lowest tier. You want to go the one above. But what used to be the normal is now the lowest. So that's I think where the confusion lies.
Mm-hmm.
So they were shifted. So what happened is we used to have a 0.2 times fee. That's gone. 1 is the lowest fee. But now what we need to be doing is we need to scale it to the next level, which is the times 4.
Mm.
And that's what wasn't happening. And that's what solves the problem. So you can't just go from to the times one. We're at the times one. And I think some issues also has displayed in the wallet. So that's what needs to be cleaned up. But effectively, the lowest fee right now what used to be the normal fee before the last hard fork.
Interesting. Okay.
Because we raised it already. And so the scaling, I think what may be happening in the bug is it thinks it's already at 1, so it doesn't grow it anything.
All right.
Okay.
So that's just the point that we had to watch. So when you look at your wallet, just go to one tier, not the X1, go to the next tier up. That's what you want to be using.
And your transaction will go through it right away.
So if you don't go to the automatic. Look at all the tiers that you have. The lowest one is the one that we're getting right now. You go one tier up, which I think is 4 times what you're paying right now.
Okay, well, that's just medium. So just switch to medium. I know Monero GUI, it's normal.
And what is that fee right now? It's like still like
it should be 4 times. It should be 4 times instead of 0.25 cents.
Amazing. Still a cent.
Wow.
So yes. So that's the one you need to be using. You need to go above 1, and I think it's normal. This is what I'm trying to remember the terminologies that we use. Normal was the low. I think is now the normal, and then the next level is medium, and then there's high and very high. There's 4 levels. We need to be on the second level from the bottom.
I mean, it's just amazing when you think about it. We're doing what right now, like 20% of Bitcoin's transactions, or 10%?
Something like that. Well, it's it's closer to 30%.
We're closer to 30%, and right now it costs 1 cent. That's with bumping up your fee, so you have a very seamless transaction. It basically instantly, effectively confirms, right? There's a block every 2 minutes, but it
paying a quarter of a cent, we should be paying 1 cent.
Amazing. 1 cent to send a Monero transaction. Yeah. We're doing 20% of Bitcoin's network transactions.
But in the meantime, if you do want to spend high fees for some reason, like this person paid 16 fees for a Lightning transaction, you can on Bitcoin.
That doesn't even make it. I don't even want to try to understand that. I mean, we talk about all the criticism of the Lightning Network. The one thing that you should be getting is super cheap fees all the time.
Not if you have to sync your money. Not if you have to sync the thing.
Yeah, so that's just wild. Watching kind of LN fail in real time.
That medium block size is still pretty high. All the most recent blocks have been the section of 1 have been 370 kilobytes. Which earlier this week it was around 305, 315 kilobytes. So it's gone up a decent amount.
So Bitcoin blocks are around 400 something, 429. Monero is showing at about 180 or something like that. And this, 17. No, let me see if I can read this. 120. It's roughly about a third in transaction rates.
Wow, that's incredible. The flippening might happen sooner than we think in terms of transaction count.
Well, that means it's very bearish, but the transaction count in Bitcoin is limited.
Exactly. All right, Tony, keep moving.
Somebody wrote in the comment section, ArticMine, I think many people have the wrong idea about fee adjustments. May I request clarification that no fee adjustment has occurred? My understanding is that minimum fees only decrease when the long-term median increases, meaning they have not lowered. It will not be lowering for the next 70 days, no matter what happens. It's on YouTube.
That's correct. In order to lower the adjustment of the fee, you have to move the long-term medium, and that's 100,000 blocks, which is approximately somewhere about 70 days, so 80 days from now, somewhere in that range. Yeah, that's correct. That's totally correct statement.
Right. So we haven't even seen the lower fees kick in yet.
But what's going to happen there? I mean, we're like 20% above, so we're going to drop it down by maybe 30% or something, 40%.
Amazing. Wow.
So we're not going to drop it down drastically. Sorry, yeah, it's in that kind of range. So we're going to have a small drop, but we're not going to have a huge drop. And all that does is it restricts the growth of the block size at the lower fee. So again, I go back. We have to go one fee up. But again, what can happen if it stabilizes around some level like that? Then you go back to the low fee. It's just a slightly larger block size.
Mm-hmm. Mm-hmm.
So again, once that long-term medium triggers, which is going to be, then you can see a small reduction in fees, but then we have to see what's happening. Is it still growing? Or is it just sort of flattening out or maybe dropping a bit? And if it's stabilized, then you don't need the higher fee. Because it's the rate of growth that matters here. That determines not the block size. So the rate of growth is what you pay the penalty on.
It's just when it comes to Monero, yeah, the privacy is amazing, but the moment we discuss fees and dynamic block size and everything, it's just as interesting and amazing. But let's move on. Let's it's gonna get really interesting now. So kind of stepping away from transactions, and now we're gonna talk about more international stuff. So let's discuss the EU Parliament officially approving the European Digital Identity wallet. So they said it's going to be voluntary, but just like they said with the digital vaccine passports, that they would be voluntary. They're essentially want to force a Chinese social credit style digital surveillance state. So they're saying that it's voluntary, but then they have target goals of how many people would use it, and they want 80% of the population of Europeans to use it by 2030 for almost all areas of life. Travel, social media, and other online logins, doctor's appointments, public transport. You'll need your digital wallet for basically everything. What could possibly go wrong from there? So let's watch this video. It's 48 seconds.
Oh, no sound, no sound.
Oh, really? Okay. Give me 1 second. Okay, there we go.
The digital identity is not just a passport that you will have on your iPhone in a digital form. It entails just about everything the government would like to know about you. The best way to get to a modern person's heart is to say that it's convenient for them. So yes, you won't have to carry all your different papers and your passports. But the downside of it is, and I hope that people will start to see this, that the government can shut you down. So you know, if you want to buy a burger, red screen, no mark, not for you. That flight, not for you. Oh, but you can just buy it if you have enough money, right? So they're being very open and honest to what their goal is here. So we should take their words seriously and say, hell no. I would say we should cancel these communists immediately and say, get the hell out of my private life. I'm not having you track me and decide what I eat and where I go. The digital.
She is a Monero woman for sure. I don't know if she's quite realized it yet. We're waiting for her to discover Monero. She has a tremendous following.
Oh, she does. It would be awesome if we got her on the show. Somehow that would be awesome. But yeah, it's just interesting how they're saying that. Yeah, this is going to be voluntary, and then we want 80% of the population by 2030. And at that point, they're going to control. And you can watch the WF talks, and then you can see what they're planning. They want to control how much meat you're eating and all this stuff. Traveling, how much are you traveling? Because carbon emission and all this stuff, but they're using their private jets, so that's cool. Okay, so let's move on. This piece of news is actually really big, and I encourage everybody to read it. So it's about Argentina. Argentina has been with the FATF, which is the Financial Action Task Force for decades, and what they essentially do is that they enforce anti-money laundering regulations on the countries. March 6th, which I think today is the 9th, yeah, so 3 days ago, they arrived in Argentina, and they're going to conduct a 2-week assessment on whether Argentina is going to be blacklisted or if it's still going to be on the gray list. So what is the gray list? Essentially, Argentina is right now on the gray list, meaning that it serves as a warning for the countries to be compliant in the direction, and which, if they're found that they're not, then they're gonna end up being blacklisted. And Argentina is very cash dominant. Cash is being used strongly, and you can do all sorts of stuff. In contracts, you can pay more in cash, less digitally, and all this stuff. So what is going to happen with Argentina in the next 2 weeks? How is Milei going to respond? It's going to be very, very interesting.
Yeah, basically, we spoke about this last week. Financial Action Task Force putting pressure on Milei and the Argentinian government to essentially clean up their black markets, their gray markets, so one of the things Milei is doing is passing an executive order, which will lead to more regulation on crypto, essentially creating kind of like a bit license for companies that are crypto based in Argentina, forcing the regulation of crypto. So these companies will have to obtain essentially a bit license to operate. One of the other things that was being discussed is creating regulations where citizens of Argentina are forced to declare their crypto holdings. So interesting to watch this. As anybody who's watching this knows, we're doing Monerotopia down in Argentina. We're very excited about Argentina and Milei as being a place where crypto is naturally blossoming, or has already naturally blossomed, because of the situation out there down there with regards to fiat failing and people using other means and finding themselves using crypto. There's a whole the society basically already has opted out in Argentina. People are used to functioning through black markets, using cash for everything, moving out of their cash anonymously into things like cryptocurrency because of how quickly their local currency loses value. So actually, most, if anything, they're using the US dollar down there. But what has made Argentina this kind of petri dish for crypto to naturally blossom is the fact that fiat is hurting the local population so badly that they've moved over to alternative means. So it will be interesting to see what happens there, how these things transpire. But hopefully we don't ironically end up in a situation where Argentina becomes less of the ideal crypto place because of the ushering in of these regulations through the Financial Action Task Force. Arctic, I don't know if you're following these things. Or if you
I am following some
of
this.
Yep.
Yeah, I have an interesting comment. It's a bit of an interesting one. There was during COVID, there was an article in CBC News, which is the government sponsored television and radio and website. And what they did is they went to 6 supermarkets and they tested a whole bunch of surfaces for COVID-19. Card handles, door handles, a whole bunch of different things. And the price went, and you're going to love this, the ship and pin machine. It was the dirtiest surface in all these 6 supermarkets for COVID-19 and a whole bunch of other viruses. And when you think about it, credit card transactions are not contactless. That's a big myth, especially in restaurants, because you have to touch the machine to enter your tip and you enter the amount and stuff like that. A lot of places, you have to touch the machine in order to do a credit card transaction. Well, here's where it gets interesting. If you look at how many times a machine in, say, a busy store or like a coffee shop, those buttons are touched by different people in a day, and you compare with the touch frequency of cash, it turns out that cash wins on a COVID basis. So a very simple strategy is, when presented with the debit machine, refuse to touch it because of COVID and pay cash instead. It shocks people. I mean, I've done this, and it's really quite fascinating. You simply say, they give you the debit machine, I'm not touching that because of COVID, and you pay cash. And then the rationale is very straightforward. is that the amount of time a $20 bill gets touched in a day, or a $5 bill is way less than the amount of time those buttons on the chip and pin machine get touched every day.
Mm-hmm.
So that's kind of my thing about this. I think we need to start moving a lot more towards cash for small transactions. Not the big stuff, let them track that. But it's the coffee shop and the small transactions where they're real advanced. Same thing with the European thing. I mean, what happens if you start paying cash? And in fact, I remember at MoneroCon in Lisbon, not the previous one, I convinced everybody to go out of a restaurant because they wouldn't take cash. No, I'm serious. I mean, they wouldn't take cash. Fine, walk out.
But so, Arctic, what do you think about Argentina and Malay? Do you think that the use of cash has essentially peaked, and ironically, Malay may move the society towards being less cash based?
Well, that's what they're trying to do. I mean, this is what they're trying to do in the European Union. In some countries, it's been successful, and some it hasn't.
But
I mean,
Malay is supposed to be an anarcho-capitalist, right? I mean, he should be pro-cash, right?
Well, we don't know whether he's going to do it or not. But the message that we can send people is say, well, don't touch the machine because of COVID. It's just one of those that people haven't thought of, because there was this big push during COVID. Oh, no, go to digital time. I said, safer. No, it's not. And it's a simple thing you can do. Just refuse to pay with debit cards and credit cards for small transactions. And set the threshold at, $100 or 100 euros. You can raise it if it's a particularly restrictive country that they have a cap of whatever the cap is. Fine, you can't use it over 1,000 euros. Fine, anything under 1,000 euros, I'm paying cash. You're compliant, and you totally defeat the surveillance. And if enough people, it's a simple way around it.
Mm-hmm, mm-hmm. I mean, now, my understanding is you could go into Argentina and you could buy, most property now is purchased with cash, with actually U.S. dollars cash.
Yeah,
well, that's most property is currently purchased in Argentina, which is crazy.
But I mean, when you're talking about tracking people with money, it's not the big transaction. If you buy a house, the government's going to know that you bought that house, which is registered on the land title of the registry, etc.
Of course. But the idea that they're currently not asking you where did that money come from. They don't have strong anti-money laundering laws down there. You could buy. In fact, most real estate deals are done with cash, and when you do it, you're not asked, hey, prove to us that money is not dirty. Is really an ideal, right? It's the same with Monero right now. You could essentially go down there, go to one of these cuevas, trade your Monero for cash, and go buy real estate with cash, no questions asked.
That kind of thing I see happening at Crackdown. I can see that happening. But whether it gets more, the real harm is actually not in the big transaction. It's in the small transaction. I'm far more concerned about the cup of coffee than I am about the house. Because the cup of coffee is where you actually are surveilling the population. Mm-hmm. So it's where you say to people, you go to a restaurant, we only take electronic payments, I walk out. And I've done that. Or I've enforced the currency laws. I've done that too. And I don't have a problem paying for a $2,000 item with a credit card. I have a problem paying for a cup of coffee with a credit card. Mm-hmm. And that's where the fight needs to be, because that's where you're controlling the population. You're not controlling it by tracking the one time you buy a house.
Yeah, well, but freedom to transact, right? It would be beautiful to live in a world, in a country where you can pay with your Monero, no questions asked, whether you're buying a coffee, a car, a piece of real estate. That's kind of in my mind, that's the anarcho-capitalist libertarian dream.
Absolutely, but the fact of the matter is, it's a lot easier to fight the fight with the small stuff than the big stuff.
Which I also want to add, when it comes to small transactions, they are able to profile you as an individual, because your small transactions that you do every single day kind of make up who you are.
Exactly.
So that's very important for sure. That's very.
By the way, the guy who wrote this article, Bowtied Maria, was on the show a couple of months ago, right after the Malay election. He really follows Malay very closely, and he's lives down there, but communicates very well in English. We will most likely have him as a speaker at Monerotopia, by the way.
And my theory about not using cash versus credit cards, I'll go further. If you have U.S. currency, COVID-19 lives shorter on U.S. currency than on Canadian currencies. Canadian currency is made out of plastic. U.S. currency is made out of fiber paper. So it dries out the virus faster. So there's a scientific basis behind this, and it works even better in the United States than in Canada, even though the origin of the idea is in Canada. So just refuse to make small transactions with credit cards.
Which is so interesting because now they're at war on cash, but it just shows that they don't care about the scientific data and about.
Well, it was a sales pitch because they tried to push, and this came out. They pushed. This is why someone tries to sell me something that I don't buy, that I used to rebel against it. And in this particular example, a lot of people jumped on the bandwagon and started banning cash all over the place. And then everybody's backtracked. A lot of people are backtracked. And in fact, New York, I understand, is a city where you have to pay cash. You have a business, you have to accept cash. Maybe Doug can correct me on this. So there are some places that are coming to the sanity on this issue because it's discriminatory. And in the European Union, there are countries like Spain, I think it's 1,000 euros, and Germany is like 10,000. There's some countries that are very supportive of cash, Germany being one of them, and the others are not. To depending on where in the European Union you go, you get a different response on this.
Also,
but
Romania
again,
positive
sorry?
as well.
I know that in Italy, there's been a big backlash over this issue of credit card fees. And the other problem you get into is that you can charge, sure, the European Union restricted the fees for domestic transactions, but not for international transactions. When I go to the EU, I take cash in euros, and I pay most of my stuff in cash.
What do you want? Give me a seltzer with lemon. All right, Tony, moving on. Let's keep going so we get viewers on stage over here.
Yes, I do want to mention we have a really good like to views ratio on YouTube, 74 to 67, and we still have 74 people, so that's amazing. Thank you, everybody. And
well, we have almost 500 live viewers if you include Twitter.
Beautiful.
Right now,
yeah.
Beautiful.
That's really good.
That's really good. I want to say, somebody said in the comments, my friend who lives in Europe said his country released a digital passport on their app yesterday. It's coming fast. Interesting. It is coming fast.
Crazy.
Don't trace me, bro. Untraceable. Posted this picture, gold at ATH for the first time in over a decade. You know what that means.
I love that. Arctic, just real quick, this uptick in gold, do you think it might be indicative of something happening behind the scenes, that we're going to see some big, large global event?
I mean, I kind of an investor. I do hold some gold myself. I haven't really followed it that closely, but I do buy gold. Gold is interesting because in some circumstances, if you want something you can withdraw from the bank, I know how this sounds. It's a lot easier to buy gold if you want than to get cash, and it's a lot easier to move gold around than to move cash around. So we've gone full circle on this. If you look at the weight of an ounce of gold in a coin, how much cash it takes to buy that, and the weight of the cash, now it's getting to the point where the cash, anything under $100 bill, the gold is more efficient by weight than the cash.
But do you see gold as a canary in the coal mine in terms of seeing like a large spike in interest in gold? Is it potentially indicative of something a large event that might happen?
It can be. I mean, on the small scale, I think people are starting to look at gold a lot, also because of a lot of the cash restrictions. There could be issues with. There's been a lot of money printing after COVID. There are a lot of concerns about inflation and all that kind of stuff. We've seen the aftermath of that. It's something that I would suggest. I hold some gold. I don't make any hide of it. It has a certain historical appeal, but also you're not going to become a millionaire holding gold. But what you will do is you'll preserve value very effectively over a long period of time. That's what gold has proven itself. I come back to what I said. I mean, the U.S. senator, they spend the same amount of clothes in terms of gold as the Roman senator did 2,000 years ago.
Yep.
That's
beautiful.
That's a simple value. It's there. It could move out again because there's a lot of inflation. There's a lot of debt in the world. There's a lot of risk in the world. I mean, the stock market has been very, very hot, and it could get a hit. Look at the bubble we're seeing with Bitcoin right now, which I think is totally unfounded. There's a lot of hot money running around, so I can see why people are looking at gold.
All right, Tony, keep moving along here.
This one, really quick. Monero is at war, and this is how it looks like. And then he posted a picture of CoinGecko listing top privacy blockchains by market cap. Monero not making the list, but of course, Ironfish makes it. I've never even heard of it, to be honest.
What's this?
Ironfish. Okay, so number 1 is Mina Protocol. Number 2, OSIS Network. 3, Aleph Zero, Dust Network, Secret Network, and Ironfish. Now,
and they're not putting Monero in the list. That's pretty odd.
Yeah, no. So
no. This happened like last week. CoinGecko sent out a tweet: top blockchains by privacy. Yeah, Monero wasn't mentioned. Zk. It was whatever. But overall, Mano is listing all the attacks that he's seeing on Monero here, right? Like it's odd that Monero is being left out of the discussion for best privacy coins when it is the number 1 privacy coin. We saw he's referencing the ASIC miners that were supposedly being created, but that hasn't proven to right. Essentially, those were just CPUs at the end of the day. The Binance delisting, which was a big event, as being another attack on Monero. Monero no longer listed on centralized exchanges.
Well, that's not true. There's a lot of centralized exchanges that are still list Monero.
Well, but there's less than there were, right? And we've seen
but this is a topic that I really have to wait till after this litigation before I can comment on.
Okay,
perfect.
That's the reason I'm in Washington D.C. and it's got to do exactly with that.
Yeah.
Perfect.
So,
let's discuss Kucoin really fast. Kucoin halting transactions or XMR withdrawals are closed. Again, don't use these platforms. Don't use centralized exchanges. And last thing that I want to discuss is AllArc introduces cash in person for Monero exchanges in the EU. That is for Berlin, Stuttgart, Dusseldorf, Frankfurt, Paris, Cannes, Rome, Milan, Barcelona, Madrid, Amsterdam. So essentially, he said, "Hi everyone, Tommy reaching out from AllArc. Our journey since 2022 has been dedicated to offering a simplified solution for converting Bitcoin Cash into traditional currency via bank transfers, mailed cash debit card methods. Though it is focused, it is coming to Europe."
So I can go to Madrid and actually get some euros for some Monero? How does that work?
Allegedly. Not really sure. He said our recent beta tests have been successful with positive feedback that we're excited to build on. Yeah, I'm not sure. This is the first time that I'm hearing about it. So
if anybody has any more info on this, jump up on stage.
For sure, but that'll be cool. I mean, go to Madrid and do euro.
I could just buy the euros in Canada, and I've got enough Canadian Canada dollars. I don't have to worry about it, but it's kind of nice to know.
Mm-hmm. What's currently the best way to obtain Monero in Canada? Okay,
I am trading because I'm a sort of a very successful Monero holder, and also I go through a private OTC desk, because I do trade significant amounts. If you're dealing small amounts, they're the best options to go through Kraken. Now, there isn't a direct CAD XMR pair, but you basically what you do is you deposit money into Kraken, and then you buy Bitcoin and then trade the Bitcoin for Monero, buy a stable coin and trade that for Monero.
Wait, but you're saying you can trade you can't buy Monero directly on Kraken in Canada?
Not from, well, you can, but you have to deposit your Canadian dollars and find a pair for Canadian dollars, and you do it all within Kraken. You don't have to go to a different exchange.
Oh, okay.
Yeah, what I'm saying. So you deposit you are buying directly from Kraken. You deposit your CAD into Kraken, and then what you would do is you would have to trade it for something else, and then within Kraken trade it for XMR, and then withdraw that. If you want to go through a centralized exchange.
Now, is that the case on Kraken in the U.S. too? Because I've never in New York we don't have access to Kraken.
No, this Kraken, this direct USD.
Okay, I thought so.
XMR pass. I don't.
But
think
in Canada, there's not. That's interesting.
You may have to buy Bitcoin and then flip the Bitcoin for.
Okay.
For Monero and Kraken itself.
Okay.
That's where you may have to do. Or you may be able to deposit USD directly because Canada, you can get very easy access to USD in Canada and deposit USD into Kraken and trade that for money. That's the other way to do it. And then again, you really ask the question: what am I spread? Am I going to pay on CAD USD versus CAD PTC? That's essentially the question you need to ask. The other way to do it is you would buy Bitcoin through one of the local exchanges and transfer it over the Bitcoin network into Kraken and do it that way. I've done that. The thing to watch out for is you make sure that you don't commingle. You take the Bitcoin out of one exchange, withdraw it to one address that's never been used before, and then move it into the second exchange. So they can trace it from one exchange to the other.
Right.
And then
otherwise,
you don't get into it. Yeah.
Otherwise, it'd be flagged.
And it really depends on the amount of the spreads versus the Bitcoin network fee. So you got to figure out the amount of money that you have, which is the more efficient way to do it. But if you're going to move Bitcoin, the way I would suggest doing it is not get the exchanges to do it, but rather create a new Bitcoin address that's never been used before, withdraw out of the exchange into the Bitcoin address, take that Bitcoin address to the second exchange. And you KYC at both ends, so the tunnel is totally KYC. But that way, you avoid any kind of allegations.
Right.
That's what I'm getting at. So that's one way to do it.
All right, Tony, keep moving.
That was it. So that was it for this week. We don't have.
That was it. Okay. All right. Let's keep moving.
Yep.
Is Tux? You want to get viewers on stage? Let's get people up.
Yeah, let's do it.
It's the Viewers on Stage segment. It's that time where we invite you, the viewers, up on stage to comment on anything you've heard so far today, ask the guest a question, or maybe talk about one of the news topics. Come on down.
All right.
I added everyone up as much as I can. There's a 10 limit, so we may have to switch out at some point.
Yeah, we'll try to get some new faces up here. I gotta say, guys, I don't know. Maybe we are getting spam with viewers because it doesn't even make sense, right? We have 426 on Twitter live viewers. So I don't know. Maybe it's just a Twitter thing that's going on.
It's because you have ArticMine on, man. That's what the people
Well,
want.
I don't want to.
Yeah. No, there's a lot of reason why we might be getting a lot of hits, but I don't know.
My wife gets excited enough when he's on the show where I start to get a little jealous. You know what I'm saying?
I try to do my best to do my part for this network, but anyway.
Do you guys mind if I say some things that I think really back up the ArticMine thesis here? That I just thought would be. So the first thing is, I wish I would have archived it. Maybe somebody can find it still, but CoinsPipe had an article, and there is also an article on CNN.com right now about how, because of some things that happened with the South Korean government and the tax system and stuff, at first it was a slow trickle, but the last couple of days there's been this massive spike in people trying to buy Monero. And the thing is this spike would line up perfectly with from the point of them trying to get into Monero to the point of them trying to add it to their own wallets and circulate it amongst themselves. Now, would that account for all of it? No, but I think when you hear the rest of it, you'll see why I think it's important. But that's a huge, huge surge in just user base, by the way, because the thing is we're talking like tens of thousands, provably minimum, of people that are interested in using Monero as a currency, and not like an investment vehicle, but like a legit currency. And then the second thing that I wanted to point out is if you look at price dip buying, and most of the way that people calculate the floor of a price of something, once people see it hit that number and then the trend reverses, that would normally be a time that you would start to buy. Now, if you pair that up with people who may have been interested in getting into Monero for a while and then seeing the price spike, and then they're probably assuming that a Monero price increase would naturally follow Bitcoin. So this would be a time you would expect people to start trying to buy into Monero. The third thing that I think can't be underestimated for, if you think of coin management, and then what people might do as far as this ransomware attack for Black Cat and L5. Well, the thing is you got 22 million worth of Monero. And what's the first, or well, not of Monero, but 22 million of crypto that then has to be swapped and churned. Well, the thing is if you have to split that up amongst a couple dozen hackers or more, you got to churn it all. And then they're also going to probably buy stuff with it. And that's not the only example, but it's just kind of the big one. Well, there's another huge chunk of transaction volume that all just happened. And these are all happening within like 5 days. But then another thing is, whenever I see transaction volumes start to go up, well, that is until the boating accident. But before the boating accident, I would always churn my coins, right? Because that's a good time to prevent, if there was a spike in transactions, it will further mitigate the ability of a person to just do a whole bunch of transactions and de-anonymize somebody, right? Which is still, it doesn't actually de-anonymize them, but lower the plausible deniability if they're also have other reasons to believe that so I churn my coins regularly when I see the price spike, or not the price, but the transaction spike till the boating accident. But I know other people do as well, right? I mean, I've heard Bawdy talk about it before, and Monero users are very conscientious about their coin management, especially since a lot of us who used to use Bitcoin, we know about coin management, and we know about how the spending and the UTXOs work and why you would want to, or pocket change, right? This is something that the Monero community is particularly interested in. So you put all of those together, but then the other thing is all of these people that are trying to buy into Bitcoin, right? And are now learning about transaction fees. You're seeing a lot of people become very interested in Bitcoin Cash and Monero for the exact reason that transaction fees are a really big issue. Well, if those people bought Bitcoin and now the price is up and they want to spend some of it, they also would be moving into Monero for the purposes of a transaction. So you have multiple transactions. You've got your atomic swap, then you've got your few purchases here and there. Then you have the consolidation of the UTXOs. Well, then the next thing, and this is one that I've only heard on Monero Talk. You remember how Slave Blocker was talking about transaction volumes as a function of price? Well, we just saw a huge drop followed by a huge spike compared to the stable coin it usually is in Monero. You would, by his theory, expect to see a massive surge in transaction volumes. And he predicted that, 2 months ago? And then it happened. And it happened exactly the way he said it would. But then the other thing is, I was actually talking to Tux Not on the show when the delisting started, and I had mentioned how this is actually a perfect storm for seeing a spike in transactions, because you've got people taking it off of the exchange, you got people trying to do something with it, and then you got people, you know, putting in a different wallet because they want a different block height and so on. I regularly change, before the boating accident, I regularly change my wallet addresses. And times like this are times that I would have, if it weren't for the boating accident, be looking to change to a different wallet, right? So that, but then on top of that, people pulling things off of exchanges, looking for, you know, decentralized exchanges and so on, which is ArticMine's whole conjecture. There's a lot of reasons why a person might be doing a lot of organic transactions. But then this, so all of those are provable on a large scale. All of those are things that most of us should already kind of know about, with a couple of exceptions. But another thing that I personally have noticed from my situation in Alaska, I have had more than one person in the last 3 days ask if they could trade me an ounce of gold for Monero at prices north of $175 a coin. Okay. Gold is at all-time highs, and they want to swap into Monero, and they want no KYC. They want, and they're not technically savvy people. And then you've seen it, Doug, when you were interviewing, for example, the Health Ranger and these other guys, kind of like, let's call it the boomer crowd. Their interest in Monero is getting very, very high. And this is right about the point in which the fear and greed index would move favorably into people wanting to buy into Monero on small increments, which once again, you would see a spike in transactions, and it would be a big one, because boomer money is way bigger than like all of the people who have been buying in up until now. And then on top of that, the few remaining centralized exchanges that we have right now, we just saw it with, I don't know, I hate centralized exchanges, so I never remember what their names are and what they're doing and all that. I don't even touch them. But that we see, again, even with a smaller pool of centralized exchanges, the ones that are suspect for basically trading paper Monero are again closing down their transactions, but only for withdrawals. We're seeing it again, right? Like, which once again would lead to the thesis that there's going to be lots of transactions. They're going into the market trying to buy little Monero here, little Monero there, and they're trading amongst themselves. And then the last one is, and I think this is the best market by far, and I wish Bawdy was on right now, but everybody's looking at the transaction volumes linearly because Monero has been so consistent for so long. But if we've learned anything from silver or gold, it would be wiser to figure out logarithmically whether or not this is outside of a range of a spike in transactions. So what I mean by that is, if there's pent-up demand for transactions, the way there would be pent-up demand for prices. Is everybody following me here? You normally use logarithmic scales. You do not use linear scales. Why would we not do that for the transaction volume? Well, if you go back to the last two volume transaction spikes, like the volumes of transactions, the last two spikes, and you just draw out the curve logarithmically instead of linearly, because it's been a long time, people. Okay, we are actually right at the peak of the range that you would expect for like the top of a logarithmic chart. So the other thing is to suspect that this is a spam attack just because there's a lot of transactions and just because they're concentrated around a certain point. And then the other thing is the Monero wallet bug would actually contribute to that spike looking the way it does. In other words, them coming through in bursts and waves. That's what you would expect with the bug, right? So in other words, the only evidence that we have for it being a spam attack, nobody has claimed it. Nobody is talking about like, oh, if we could, we have that guy from forever ago, I want to start a fund to jam the network or whatever. But other than that, which is obviously bull, right? You would see what people are claiming is evidence of a spam attack. Oh, they're coming in bursts, right? Well, the thing is, you would see that with the bug too. So it doesn't prove shit. You see what I'm saying? Like, we have no reason to think that this is a spam attack other than just the fact that it happened a lot all at once. But it lines up and I'm not taking one side or the other. I'm just saying everybody who is sold on the idea that this is a spam attack is not using the scientific method. They are not checking their bias for whether or not this is organic. And the other thing is, I think the evidence actually leans toward the idea that there would be a large organic increase. And even if there was a spam attack waiting in the wings, wouldn't you kind of wait for there to be an organic spike in transactions and then do your spam attack? You see what I mean? Like, the time to do a spam attack would be when you have an increase in volume of transactions, and not just like a little bit. You would be looking for a large spike in transaction volumes in order to then try your spam attack. So that's my piece, and I'm glad that you guys.
Well, I'd like to comment on a couple of the points that you made, which there's some I can't comment on because of the, as I mentioned earlier, the pending litigation, and until that's resolved, I'm not getting into specifics on mixing and so on. But the question of that you raised with respect to spam attacks, in theory, yes, it could be optimal for a spammer to go into, once the Bawdy transactions has increased the block size, and then launch the spam attack. That actually would make some sense. I mean, there is some sense to that. But the rest of the other stuff is very much organic support. It's based on all these factors. I mean, people trading gold for Monero. Keep in mind, in terms of Bitcoin, Monero is at really low prices. I mean, we saw a breakdown from about 0.004 to 0.002. That has been a major drop. So that's a point in which you could see people taking profits out of Bitcoin into Monero. I can see that happening.
So you would expect them to want to profit take in Monero if they're aware of this divergence.
Because basically what we have right now is prices. I mean, I won't go as far as saying it's bear pig territory. As I said back in 2014, when it was about half the price in terms of Bitcoin that it is right now. But it is definitely getting to a point where Monero, in terms of Bitcoin, is very attractive because of the drop in price. It's sort of an opportunity coin in that respect. The other things, anecdotal information. I mean, the interest in peer-to-peer trading, that kind of thing. If someone is trading gold for Monero, is precisely the kind of effect that you would see on the chain right now. That's driving the transaction activity. The delisting in Binance is another factor. So a lot of what you mentioned tends to indicate that. I mean, the comment from Tuxedo about what they're seeing with respect to Kick Wallet and the type of action in that area. All of these are very interesting factors with respect to what's happening. The other question is, are people, if you shut down a big centralized exchange, which is kind of what I got back to, you get the pressure on the network. Now, the exponential way, there's an easy way to measure exponential on Monero. Go to Bidinfo charts, and they have a log tool on there, and you can actually do the trends instead of the log approach. And what you will find is that we have had about a 3 to 4 year period when Monero transactions have been totally flat. So the type of transaction levels that we're seeing right now are not out of line with an extrapolation going back to 2016 on a log scale. So a log scale definitely will predict the type of transactions that we're now if you were to extrapolate. And we saw a big surge in 2016, which then was followed by a major surge in price in transactions. So, but go to Bidinfo charts and check it in there. you can actually use the tool that it has log. And if you actually extrapolate back to 2016, and you draw a line through the race, you actually start hitting that trend, because you had a flat approach from 2000 all the way to 2004 in transactions in Monero.
One thing that I'm hoping, especially since he's up, that Slave Blocker will go into his transactions volume thesis. But I just wanted to say that with the South Korean thing, okay.
Oh, that was the other thing I was going to
ahead.
mention. Sorry about that. South Korea was the first place where there's a major delisting of Monero. And I believe that happened in 2018, 2019. So we had this big delisting of Monero over in South Korea. It used to be a huge market for Monero. And it was one of the first major delistings of Monero was in South Korea.
I'd like to say that the total volume in the crypto market has gone up. And it's been kind of weird because we've seen volume kind of go up and down, but Monero's transactions hasn't changed. And so it's not just the Binance part of ArticMine's equation that's changing. It's also the total amount of volume within the market that could be causing a giant spike instead of a more gradual look.
Well,
yeah, where's the more logical place for that steam valve in transactions to eventually blow out? There's nowhere more likely to find that than Monero. Not even close. Like there's literally even the stable coins, you would still expect to see Monero take a vast percentage of that spike in transactions that should theoretically follow.
Yeah, I see some of the other ones.
Hello, sir. ArticMine, what an honor to talk to you.
Thank you.
I have lots of questions, and it doesn't have to be all today. When I think of a spam attack, I think like data centers. So the question is for me now, if I had a data center and I could 51% attack the chain, in terms of absolute size of the chain, if I don't have any capital, I just have hardware, and I mine the first block, that is mine, and then I wait 10.
So you're saying a 51% attack with hardware?
It's not how many blocks? 60 blocks, right? Until I can spend the coins that I have mined, right? Is it 60? I mean, is it 60 blocks?
10.
No. If I mine a block, how long do I have to wait?
It's only 10, bro. I think, yeah, but the issue there is
it 100 blocks or 60 blocks? Doesn't matter. That's a flaw of mine. That's embarrassing. But however, so imagine I mine the first block and I mine all that until I can spend the coins which I have mined. So in which power will that grow if I am churning it all the time to myself, right? I mine the blocks and I transact, I fill the blocks as maximum as possible, and I send it all the time to myself. How fast would the chain grow? In which power? Maximally, okay. That's my question.
Now here's the thing. There's a whole bunch of different things that were going on here. If you try to spam Monero, it's a lot cheaper to 51% attack Monero. That's the first thing that people really realize. Because then if you're going to, because the cost of, if you're the miner that is basically filling up the spam, in a flat out attack on Monero, you need to basically pay the miner 3 times in profits. So if you can 51% attack it, it's cheaper to 51% and then do the spam attack on the basis. But 51% attacking Monero is not cheap. I mean, you've got to basically double the hash rate, which essentially you're looking at 0.6 XMR every, actually 1.2 Monero every 2 minutes. That's going to add up pretty fast. whether you have a massive amount of hardware that you're not using, or whether you're going to rent it, or whatever you're going to do, that's not a cheap attack. And then if you want to do a spam attack on top of that, then you pay a premium for the spam attack. But it's actually cheaper to 51% and then spam it than to spam it right from the get-go.
No, I would consider like a state-owned data center. And the question was only on the spatial.
I would like to give my spot up to Bawdy. I'll continue to listen.
Yeah, so I would.
Do you hear me good?
If you're gonna state attacks in some cases like this, I mean, it's possible.
Do you hear me good?
Yeah, I hear you good. Yeah.
No, the question was only on the if I can self-feed myself by mining that, regardless of the cost of mining. Imagine I have
it's cheaper to mine than spam than to spam without mining. That's a given.
From the first point I start doing that, how does the chain grow in polynomial terms? Is it like n squared or n cubed or?
Well, the thing that happens if you start spamming the chain,
yes,
regardless of how you do
question.
it, is that there's a whole bunch of blocks in it. Because essentially what happens right now is you spam, and then you have to go up. You can go 50 times, but then you're blocked by the long-term median. So you have to wait till that resets, and you have to maintain it. And if you let it go at any point in that 2.5 months, then you have to start all over again. So one of the checks and balances that we have in Monero right now is you can't just spam it. You hit a barrier, and once you hit 50 times the size, then you can't go any further. But you have to still maintain the spam for 2.5 months roughly. And then if you stop spamming for about an hour and a half, then you reset the whole thing and you start all over again. Now,
because the other miners would reject that block, or what?
Well, no. What happens is you reset the short-term median.
No, not the reset. Imagine you are always continuing and you want to raise the block size.
No, I know, but what I'm saying is you raise the block size, you raise the short-term median, but you got to keep it up constantly. Once you hit the 50 maximum.
Yeah, because the other nodes will reject it. That's what you're saying.
No. What happens is you have to keep spamming, because otherwise what happens is if you stop spamming at that point, you wait an hour, a little over 100 blocks, the thing drops back down again. 50 blocks. You have 50 blocks. So it's about roughly about 100 minutes. If you wait that long, the median resets itself to 0 again. And you have to start all over again. So you have to maintain it for not even grow. You have to maintain the spam attack for a little over 2 months in order to continue to reset the long-term median and then start the process again. Now, that's one of the safety factors that was built. So you can't just spam, doubling it every maxing it out and doubling it every 100 blocks. Every 50 blocks. You can't do that. Once you hit the twice as many, once you get 50 times the short-term median, then it's capped. It won't let you do that. The protocol won't let you do that. And then you have to keep that spam attack up, because if you don't keep it up, then it crashes back down to 0. You have to start all over again.
But regardless from the software I'm running, the other nodes will reject a higher sized block. That's what you're saying, right?
Well, yes.
The protocol will.
The protocol will. Now, one of the changes that I'm looking at changing is to cut that down to 16. You need a search factor to deal with things like Christmas transactions and so on. But one of the changes that I'm looking at proposing is to cut that down to 16. And then increase the rate of growth of the long-term median to compensate for that. So you're pricing it a lot tighter. So it looks easy to spam Monero initially, but then all of a sudden...
No, I'm not saying it's easy. I just asked the question.
Yeah, so the question I'm getting at is this a block, and then you have to wait 2 months, and you have to keep it up, and then you start it up again?
Exactly. The other question is that regardless of the size of the block, which will not be accepted by the other nodes if I make it too big. What about okay, there are fees.
Well, you can only double it.
No, I mean ArticMine. If I'm in charge of my block, like, can I just say no? I want higher fees, for example, and will I propagate that block good? Like you know what I mean? Everyone else is saying pay me cheap, but by some reason everyone pays me more, and I mine that block and I propagate it. Will it propagate or not?
Well, sure will. There's no reason you go and say there's no obligation for you to take the fee. That's a minimum node relay fee. It's not even a mining fee. You can say I'm not going to mine the transaction unless you give me a lot more money. and you'll end up mining, and if less people want to pay you, you propagate an empty block, or you propagate a smaller block. Nobody's going to stop you. There's no requirement.
I didn't know that.
There's no requirement that you charge a minute. There's no requirement. There's no cap on how much you can charge as a miner. You can say I'm not going to mine it unless you give me this amount of money. Yeah, you're right though to do that.
What's the current cost to attack Monero per day? Like let's just say the 100,000 transactions we're seeing, hypothetically, if it was spam, if it truly was a spam attack, how much would it cost per day to do that?
Well, it depends what you want to do. If you want to if you want to max it out, you're looking at 4 times. Okay, yeah, because you have to go 4 times so it'd be 2.4 Monero per block. And you have to keep that up as long as you want to keep the spam attack up. So it's every 2 minutes, you're looking at 2.4 Monero.
So
that's basically max.
I don't understand how you get those numbers, 2.4
Well,
Monero.
when you have to go 4 times. So what happens is you max it out. You pay the maximum fee, which doubles it. And then you're paying it. So what you're doing is
But this is assuming you're not mining it, right?
Yes, assuming you're not mining. So let's say that you just want to spam it. If you want to spam it, then you have to offer the miner 2.4 times. So you have to 4 times the number of transactions. So you want to double the size of the block, and you pay the maximum fee in order to do that. And so what it would cost you per block is 2.4 Monero. If you are mining it, you could cut that down to you would pay the cost of the 51% attack, and then you forego your transaction. So you're looking closer to about half of that, 1.2 Monero. I'm trying to remember the top of my head on that. But there is an advantage if you mine it because you're not taking the profit. You're just taking the loss. So in the outright attack, you're paying 1x to actually do the attack and 3x in profit to the other miners. So if you're doing it just as a 51% attack, if you're mining it yourself, you're still foregoing your revenue, and you still have to launch the attack, but the cost is 1/4. So it'd be like 0.6 Monero per block instead of 2.4 Monero per block if you're mining it yourself.
So
because you're giving the other 1.8 to the other miner, basically, in the attack. The other miners.
At 2.4 Monero per block, if I'm doing the math approximately right, that would be about $241,000 per day. I might have done that wrong, but if it's 2.4 Monero per block to do that.
Yeah, so it's 2.4 Monero.
I did times 30 times 24, and then multiplied by 140, which is the price.
Yeah, that's what you're okay. It's not cheap.
Pretty high cost.
Yeah, but it's deceiving because if you start small, you can do a small spam attack. It's very cheap. That's what's deceiving about it. But if you want to do it more efficiently, you would launch a 51% attack, but then you need the hardware to do it up front, and then you can get it down to 0.6.
So if you're doing 0.6,
but you need the capital for the hardware.
Let's see, if we're doing 0.6, oh, I did something wrong here.
That's a 51% attack, basically.
That'd be $60,000 at current Monero prices.
Yeah.
Per day.
Yeah.
So even if they were they were buying. So you're saying they could buy the hash power and then mine their
Well,
own.
is anybody going to buy you the hash power? See, that's the other. Who's going to sell you that amount of hash power? You're going to have to buy the equipment, or you're going to have to need like a massive data center that, which I think was originally suggested, that you have idle or something, and you're using that to attack.
So I had this idea last night about, and probably you would, given how difficult this actually looks to do, if that's really true, if I have those numbers right, $60,000 per day or $240,000 per day. So yesterday I had this idea about using CPU proof of work, kind of like Tor does to help their DDoS. Could we have a transaction proof of work where the network won't accept a transaction that doesn't come with a tiny little proof? So, right, you hash the transaction, you add a nonce section to the transaction.
Well, yeah, I know what you're suggesting, but the trouble with that is that's why you have proof of work, and is that it's not efficient to the user. A miner is somebody who, one of the reasons why Monero is getting expensive to attack. And the other thing is, to bear in mind, there's another issue there that's a theoretical, assuming that there's no value to the heat. And one of the concerns that you've got to consider with attacking Monero is that you have what I would call as environmentalist miners or environmental miners. And what they're doing, you're living in Alaska, you've got a cold house, instead of using electric heat, you mine Monero to heat the place. Well, the minute you do that, what you're doing is you're driving up the hash rate, because and it costs more to bite that hash rate than theoretically the 0.6 Monero, because the person who's mining is actually taking a loss because they're taking their profit in the form of heat. So one factor to consider with Monero attacks is that it really favors the CPU mining, favors what I call decentralized mining, where what you're really doing is to say, I'm heating my house with electricity and I'm getting a rebate of, say, 40 or 50% of my cost paid in Monero. The minute you do that, now you double the cost of the attacker.
Yeah, so that's kind of my question or my thinking there is that hypothetically, if you asked users to do a small proof of work and you don't change it with difficulty, you would just keep it flat the entire time, that might take them, say, 2 to 5 seconds on a 2 or 3 generation old cell phone, right, mobile device. And so to the user, that's basically a zero cost, but to an attacker, now they've got to come up with the CPU power to actually try and spam transactions.
It's not a zero cost to the user, because you're putting the cost where it's not effective. Mining, this is one of the things it's not. It's better to have a system like we have in Monero right now. But what you want to encourage people to do is to heat their houses by mining, or to use excess solar power that would otherwise go to waste, or you don't in the summer, or that you get very little money from the utility company to mine. So this is where the attack cost is actually higher, because if you have this kind of opportunistic, or what I call environmental or green mining, that actually gives you an advantage to the network over and above the theoretically no value to the heat issue.
This wouldn't be a miner thing, though. It would be a user thing. The user would compete.
No, I know what you're suggesting. What you're suggesting is that in order to make a transaction, you put in the process of work on the individual user. What I'm saying is, depending on the circumstances, that could be quite costly to the user, because you don't know if that person is sitting in 40-degree heat in Australia and they want to put a transaction through. And you not know if they've got a device that's overheating already. And that proof of work is going to stress them over. It's the same thing people who've argued for mining to pay for advertising and stuff like that. It's an approach that can really hurt a lot of users. So it's an assumption that it's no cost to the users. It's totally wrong. It can be costly to the user to do that.
Hypothetically, if they needed to submit a bunch of transactions, you're saying that now they'd have to spin up their own CPU farm for a minute.
But yeah, exactly. And it may not be optimal for them to do that. Like, the beauty of proof of work, why you have in Monero, is, let's say, I call it let's say you're sitting in Australia and it's in the middle of January. And it's 100, well, in US it will be like 120 in the shade, and in Celsius it's over 40 in the shade, or whatever. It's really hot. You can send that transaction, and someone in Winnipeg was 40 below could turn around and mine it for you. So that person who is sending the transaction in the middle of the outback in Australia their cost to mine is way higher than the person in Canada who's freezing to death and they're getting the heat out of the mining. So the beauty of proof of work is that the miner doesn't have to be the sender. And this changes the dynamics of the economics. And one of the biggest myths about proof of work, and it's also true about Bitcoin, but even more about Monero, is the assumption that there's no value associated with the heat, that all the electricity costs are the same, which they're not. All of these assumptions are wrong. Like if I am heating my house with electricity and I decide to mine Monero, I have no cost to mine Monero. But I can only do it up to it's cost effective me to heat my house. So that really favors decentralization. If I got a certain amount of solar power in the summer that's going to go to waste because I don't have a market for it, and I sell it to the Monero by mining, that power is still. I'm not going to pay. I'm not going to pay the same guy that the guy who's trying to attack. I'm going to pay a lot less.
So you're suggesting that under construction like this, you might see centralized transaction processing where users just send their transactions off of their device to get mined.
Well, they would have to. They would have to. It'd be very centralizing. This is where the system we have right now is way better, because that's essentially what the miner is doing. The node who's mining doesn't have to mine all the time. They can mine when it's cost effective for them to mine. But what that does is it drives down the cost of the user, but it increases the cost of the attacker.
Yeah, exactly. That was kind of the idea.
See, that's the distinction. But because like if I've actually mined Monero to stay warm with no intention of making any money off it. I've done that.
I guess I'm having a hard time seeing why a user, like personally, I wouldn't send my transaction to a miner to get mined so that it could be broadcast. I would just take the 2 seconds on my device to do
Bawdy, but the thing is, sorry, in the case of a 51% attack, that the center owned by the state is churning to itself and is profiting from the self-mined blocks. If he can do that, he will also. The argument would then be that it's negligible, that extra cost of sending the transaction with comparison of the 51% attack. I don't know. That's complicated.
I would tend to agree that the state actor using a centralized data center to try to attack a network, I mean, that's possible. I would think a lot of states would have the revenue to do that. Would they want to be seen doing that? It's an entirely separate issue. I mean, they'd be far better off just trying to restrict it or ban it than they would be trying to attack it like that, to be blunt.
Like if anything, it would raise the bar a little bit for an attacker, right? That's an extra little bit of work, of proof of work they're going to have to acquire.
I think that's a good idea, Bawdy. I just don't know what are the parameters.
It certainly helps the situation a little bit. There.
Well, I mean,
I
think it really. I'm not like I said. I have a problem with these kind of things because people that come up with it don't realize that everybody's uses conditions aren't the same. Not everybody has the same opportunity to do that and have the same cost. And that's the issue. And in fact, one of the advantages of the current system is that those whose cost is too high, they don't have to mine. And those whose cost is low, they want to mine. And those whose cost is low up to a certain point, which is actually the majority, have a real advantage for decentralization. That's the distinction. If I'm heating my house by mining, it's a great example. I have zero cost until I hit a certain threshold. And then above that, it becomes really expensive because now I got more heat than I need to heat the house. So I have a freebie and then I stop. And that forces decentralization because it lowers the cost in a decentralized manner over a centralized manner. It's the same thing with the example of the solar power. If I got a certain amount of solar power that I cannot find a market for, well, up till I consume that solar power, it's cost effective for me to mine, even though I may be losing theoretically money versus the theoretical electricity rate. And then I stop when it's no longer cost effective for me. But what you've done is you've decentralized the whole thing because now you favor the decentralized network, which is what you want to do with proof of work mining. If you impose it on everybody the same, regardless of the circumstance, then it's actually negative, centralizing, because people are going to want to shift that to somebody whose cost is low. And that's why the difficulty with these kind of I just put a little thing on my device kind of thing approach, it doesn't recognize the fact that the cost of doing that is not the same for everybody. And so then you encourage the centralization.
Sorry, Bawdy, that I interrupted you.
No.
ArticMine, that's a thing that I don't really like. There is this argument that although it is polynomial, the cost of bandwidth and computing power, that or like it's square the computing power in terms of n being the number of transactions, and then it's all hopeless. And why can't we just have higher system requirements for running a node, for example? Of course it's going to centralize, of course it's, but we are running the backbone of the financial system in a few years if Monero succeeds. And long live the ED 25919.
Well, again, the question here is, why don't we design the software to optimize what a node could do? Because again, the system requirements are going to be set by the demand on the network. But do you have to broadcast to 12 other nodes? Not necessarily. You may just want to just keep up with the network if you don't have the capability. The biggest one that was coming up before that came up is this business of doing GPU or parallel processing for running a node, which will drastically reduce the system requirements. But there's no reason why you cannot have a more graceful failover for nodes that are marginal. And not every node has to be broadcasting to 12 other nodes. Maybe all they can do is keep up with the network and broadcast to 2 nodes. Well, they're still contributing. So you can design it so that you have a fallback system, or just relay the blocks but not relay their transactions. If you're running out of capability for whatever reason, there should be a graceful scale down that you can use in a node. There's no reason you have to be an all or nothing situation. It's like saying you have to do the maximum for everybody. No, there's no reason for that.
No, I'm just saying that to hire the lower bound on system requirements. And,
but how are you going to enforce that? How are you going to enforce that?
Well, everyone should be incentivized to run a Monero node, right? So the system requirements will rise anyway. So when are we talking about when we talk in a decade about Visa-like transaction levels? First, I have my own theory about, and I don't know why not, and all that jazz, slave blocks and all that stuff. Like in a year, if we do 50K transactions per second, in 10 years, if we do 50K transactions per second,
that would be a peak for Visa.
Yeah, and the 23rd of December. But I mean, in that case, the requirements for the nodes will be very high. Like I don't know about Nielsen's law, but the Moore's law is not. We are not exponentially or polynomially growing the amount of cores on the CPU. In 10 years, having 100 cores on a CPU will still be a great thing, right?
But if we listen to what who was it, the fellow from Quick Wallet? The problem there is that we're not parallel processing properly. Processing power is not going to be the limiting factor once you go into a GPU. You can use a 10-year-old GPU on an old Bitcoin miner from 2010. That was a computer to process a kind of Monero transactions. So the problem is not CPU power, because what happens there is that we haven't really tapped the ability of parallel processing on GPUs. So I don't see that as the barrier. The biggest barrier that I've identified is upward bandwidth, and Nielsen's law.
Do you mind if I throw something in here too, which is
sure.
We have there's a lot of really interesting speculation going on here. It's a lot of really good ideas and stuff, but I just wanted to throw it out there. For one, now that we have this test that has just taken place. I have a sneaking suspicion we're going to see a lot of interesting optimizations out of the devs, as well as we're going to see a lot of people coming up with, I mean, just on this panel alone, we're seeing all kinds of different ideas for like, okay, what if we did this? What if we did that? And it's come up on this show a few times in a row. It's going to be very interesting to see what happens as a result of the increased interest in merge mining, especially with some of these smart contracts that are planning on doing merge mining with Monero. It's going to be very interesting to see what happens when those things start and when modifications to the network are made based on that information. And we may, in fact, discover, I mean, ArticMine has been saying for a while, it would be really cool to find a way to preserve a lot of the things that Monero has going for it while being able to tap into the parallel processing power of GPUs. I mean, just in my house right now, I mean, I do a lot of Monero mining. I have really good CPUs for Monero mining and some of these things. But I have so many GPUs in this house that are not mining Monero for obvious reasons. And I, too, would think that it would be really cool to see if somebody could find a way to deploy this horsepower, especially if it was able to improve the throughput of Monero without affecting the things that I think most of us love about it. Yeah,
okay,
go ahead.
Let me stop you there for a second. If you've got idle GPUs, that's exactly my point, that could be used for transaction verification, which I believe is one of the major bottlenecks we've had with this growth in transactions. So that's the answer to the question. The idle GPU can be verifying transactions while the CPUs are doing the mining.
Yeah, and it would be really cool, especially since if you could find a way to use older GPUs that aren't necessarily the best for 4K gaming anymore, but still have so much capacity for parallel processing.
That's what I've been saying all along, that I think the push is going to have to be to develop the parallel processing code, which would allow you to do exactly that. And that would address the issue of the nodes falling behind because they can't keep up the use using a single thread or a GPU.
So I hope you guys don't mind, but I've said this before, but I think that, you know, especially now that we've had the kind of audience growth, which, by the way, supports the idea that there might be organic adoption, because even Monero Talk is getting the same increase in transactions of the show to the brain. But, you know,
we're currently at 536 live viewers. We've been over 500 all day. I don't know. I don't know. It might be too good to be true, guys.
It matches the growth in the transactions. You see
well, that's exactly my point. I mean, and I agree with you.
But the other thing is, Luke Parker has said and he's kind of skittish about saying it, and I think he should be, because he stands to benefit immensely if it were to happen. So there's probably a little bias, but, you know, if every single person that's passionate about Monero that was listening right now were to allocate, like, let's say $30 a paycheck or something like that to paying developers, right? I mean, even if you could squeeze another 2 hours a day out of the core team, like if they all of a sudden could work a little bit less at their main jobs or whatever and a little bit more on Monero, I mean, just the stuff that people would like to work on to improve Monero, it is almost cost prohibitive for them to do it right now, because as far as funding, Monero has probably the most underfunded dev team compared to how many people want to work on it and the talent pool that is working on it. And I would love to see if everybody is, what can I do about Monero? Well, number one, when was the last time you told somebody about Monero? Because if it's more than a few hours ago, you're failing, okay? Like, just watch some Doug videos. He'll show you how to get it done. You can be ugly like me. Even I do it, all right? But the other thing is, it would not take very much money for all of us to start contributing to dev funds on a regular basis. Just start making bug bounties. And by the way, Shortwave Surfer has been doing this for a while. throwing out money for this bug bounty. And then when he comes on the show, he's like, anybody want to throw in for my bug bounty? Like, we need to think about the fact that we just watched all of this data coming out of this transaction spike. We have all of this research that could be done. I mean, let's all put together enough to hire a really good mathematical, like physics type guy to look at the transactions and pay him for an analysis.
What I want to see in this, because one of the things that has happened up to now is that there's one source, and then Magic came along, which I really support, but for the reasons that most people were surprised of. We just have what's called the Community Contribution System, the CCS, for donations to Monero. What we really need to do is have a diversified ways of funding Monero that could be everything from different countries, different KYC requirements, whatever, all this kind of stuff. So there's options for donors and options for devs. And not just rely, and Magic is a great first step. Yeah, and Magic is a great first step. But what we need is we need to start diversifying the funding process. There's no reason that needs to be centralized. I would like to see multiple different charitable organizations, non-profits, etc., dedicated to this issue, independent of each other, based in different countries. Some will provide tax receipts, some cannot. Some do it in this country, some do it in that country, to meet the different requirements of different developers and different donors. And that's one of the things that would really help the project, is to diversify the funding for development. And how we do the actual, and that means different people getting out there and starting doing what Justin did with Magic, creating more Magics in different places, in different ways, and different forms. I mean, that's what I'm saying, rather than just relying on the community contribution system.
Arctic, I have a question.
Yes, please.
Do you have like an optimal in-out ratio for peers? Because when I've set my peers like outbound too high a couple of times, where too many people were trying to connect to me, and what I've noticed is that my ping times to the system go absolutely crazy, and I can't like SSH in and everything else to the system because the system is lagging. So I was wondering if there's an optimal in-out ratio.
What's your optimal bandwidth? I mean, this is not difficult to calculate. But what, in my view, is the limiting bandwidth that is your upload bandwidth. So you need to take a look at what your upload bandwidth is, and then you calculate how much you're sending and how many peers you want to connect to. And then you optimize that, and depending on how much resources of that device you want to dedicate to the node. So that really depends on your upload bandwidth and your capability of servicing them. This is what I'm getting at. It depends on the node. You can't say this number, because it depends on how much bandwidth you have. If you've got, for example, 3 gigabits, you're going to have a different support for peers than if you have 300 megabits, or if you have 30 megabits. So that's the question. Depends on what bandwidth you have. Now, what you're going to keep in mind is if you look at your throughput, you're sending up the block, and then you're sending up the transaction. So you're sending it twice. So you figure it out. How many transactions can I send? How many blocks can I send? And to how many people can I do this optimally? And then you set the number of peers accordingly. But if you set it too high, then you'll choke the node because you don't have the upward bandwidth, and that's your limiting factor. And so not every node can do the same thing. So that's the answer. It depends on the node.
All right, that's all I needed to know. Thank you. Appreciate it.
Yeah, you're welcome.
Hey, I was just now looking at the Bitcoin Cash transactions because they implemented a dynamic, or they call it adaptive block size. I don't think it necessarily steals a whole lot from Monero, or I mean, steals. It's open source, just colloquially. But anyways, their transaction counts are vacillating between 10,000 and 100,000, or sometimes 200,000 per day. And they're doing it on the order of like every week or every few weeks.
Take a look and see what's going on with BCH.
Yeah.
Okay, so they're all over the place.
Yeah.
BCH has always had. Okay, well, there are a whole bunch of reasons, and I'll explain what it is. And I don't want to go into a criticism of BCH right now, but BCH has a fundamental problem which Bitcoin has, which basically every other chain has, and that is they do not have the long-term security. Because here's the thing of how the math works with spam attacks on Monero. It's proportional to the block reward. If your block reward goes to 0, the cost of spamming, attacking the network goes to 0. The idea that transaction fees will replace falling block rewards is simply false. It hasn't been proven. I'm sorry. I haven't seen any evidence. Satoshi put it out in the white paper. I know what it is. But there's nothing to back this up. So why coins like Bitcoin Cash and Bitcoin SV is even more wild as they got a big block size. They have no pricing to get it into it. And so you get these wild fluctuations. Bitcoin SV is even more wild. Take a look at the Bitcoin SV transaction structure. You see how wild it gets. I mean, you have no pricing to get in there. This is the problem. In Monero, up to the first, yes, you have limited pricing till you get to the 300,000 bytes. But then you're pricing the process. But what you're doing with Bitcoin Cash is that they're not pricing the process. And Bitcoin is they're not pricing at all. That's where they get these wild gyrations. You have to have a penalty system that when you increase your transaction, you have to penalize the miner. So then they're going to require a fee to pay for it. And then there's a cost to increase. And we don't have, and Bitcoin Cash hasn't done that. I know what they proposed. I've seen their mathematics on this. They'll get spammed. As is what happened to Zcash. Zcash got spammed brutally over a 6-month period last year.
So I have a question about that. So if this seems to be kind of an inevitable thing, we have the halving coming up. Is it going to happen this cycle, or is it going to happen next cycle for Bitcoin, or when is it going to happen? For the miners are charging too much.
I mean, basically, what's going to happen eventually is it'll become insecure. I hate to say it, but that's my prediction. Bitcoin Cash will fall before Bitcoin. I know it works for Monero. I mean, I know I saw Bitcoin, which was based on the same Monero protocol, but they had a really fast halving, effectively halving. It's not a halving, but it's like Monero's old structure. And they went basically to oblivion. But the fundamental problem is if you do the mathematics of the penalty in Monero, if you take away the penalty, i.e. the cost of paying that fee to increase the block size, well, then the cost to spam the network is 0. So you can't increase the block size. So then you do what Bitcoin did, which is the only sensible thing to do, to create a super small block size as a way of securing the network. In the hope, let's say hope, that the fees will replace the falling block rewards. But I mean, I've said this for a long time. This is the reason why I sold my Bitcoin for Monero in 2014, 2015.
ArticMine,
I don't have an answer to that.
Would you agree that I was thinking about this, and I think that block space is not scarce. Block space is just costly from the perspective of the miner. So if the miner says, for this block space, I will charge you X, or for that block space, I will charge you Z. So it's all relative, but it depends on the cost that the miner is telling us to. It's not the thing that 1 megabyte is the holy rule. You know what I mean?
No, but the point that I'm getting at is you're dealing with a competitive market. So a miner doesn't have a monopoly. Miners are dealing in a competitive market of miners and users. So if a miner prices themselves right out of the market, you end up with a cartel. This is some of the arguments that people have said. And this is why when you do the analysis of what it costs to spam Monero, you do your formulas and everything, and it becomes proportional to the block reward. So the cost of spamming Monero is proportional to this block reward, which is now fixed at 0.6 Monero. And you say, okay, it's going to be 200,000 under this scenario. Now, if you take that 0.6 Monero and you drop it to 0.06, well, guess what? It's now 20,000. And if you make it 0.006, it's 2,000. So you keep dropping that block reward the cost to attack goes down, and the cost of 51% goes down. And so, so what they're saying is, oh, we're going to make the block really, really big. Well, actually, if you do the mathematics for fees in Monero, the fee and reward can actually fall in Monero as you increase the block size. It can, if you don't have a huge pressure on growth, because if you're not trying to grow the block size, you don't have a need to grow the block size. You don't have a need to pay big fees. So the larger the block size, excuse me, the lower the fees that you get paid. Because the minimum fee is basically the minimum amount that you could do to, the minimum amount that you can have in order to get any kind of scaling right now.
What's it going to take to get Elias and Dusty to say something?
Yeah, let's get some new voices up here. I see these people
come
hanging
on.
out.
And Drunk Dial Me, you're not on very often too. Let's hear something. Let's go. Come on, guys.
Don't be shy.
Is my audio?
Hey guys, I actually just had one thing to add. It was totally unrelated, but I feel like I've added 5 new wrinkles to my brain today. This is an epic call.
I just want to say, Drunk Dial Me, before you get started. Elias, I think we weren't able to hear your mic was just super low, so just work on that, and you can jump up after Drunk Dial Me.
Yeah, Doug, I just wanted to add something totally tangential. I think you should have commercial breaks for sponsors, like, I don't know, Monero Noto advertisements, because you've got a ton of people listening, new listeners, and we're talking about all sorts of topics related to the Monero Noto. So just a minor suggestion, but
beautiful idea.
This is an amazing conversation today. Thank you.
For those of you who have not bought a Monero Noto, shame on you. Okay. The value proposition is incredible. Just saying. In fact, I bought more than I need, because how could you not? You'd be a fool. I mean, it's cheaper than the hardware, people. Look at these incredible pieces of machinery. Drunk Dial Me is right. The only thing I'm worried about is, now that y'all know, we're going to run out. Right, Doug? I mean, in fact,
we actually
one more right now before everybody buys one.
We're approaching 60 sold, and the initial run will be 100. So yeah, we are actually
60. Have you people lost your mind? Only 60 have been sold.
I'm happy with 60, but yeah, would love to get to 100. That would be amazing, and then we could start producing the next batch. Arctic, go ahead. You were going to chime in.
What was I saying about the Noto? The Noto has a certain degree of. I mean, I was quite involved in sort of its design, and some of the.
Yes,
I
thank you for that. By the way,
advised in that. But the thing about the Noto is that you also have the opportunity to sort of expand it if you need to. You can run, I think it's 2.5 gigabits per second for the Ethernet, and you can push about 5 gigs over the USB 3s. So it does have some ability to expand. But again, one of the interesting things about the Noto is that it's got a very powerful GPU in there that we need to get working. So if there's one thing about the Noto that I would say is, we need to get the code to get the GPU in that thing working. And that means what I'm saying about parallel processing, because the Noto really has an idle GPU sitting in it.
Yes, I was just talking to Abdullah about that as this convo was taking place. So yeah, we're
that's been my point about, because I
has more I/O than an Apple AirBook or whatever that garbage that they're selling these days. They decided to call it. This thing has a headphone jack, all right? 3.5 millimeter headphone jack and 2 USB-C ports. Plus, it's got look at how much I/O is on that thing. People, are you seeing what's on your screen right now? I mean, and the price. I mean,
well, I push for the I/O because I want to be able to have that upper bandwidth. But I mean, but that's why it's designed.
Value proposition here. I mean, a MacBook Air is what, $7,000, $9,000 USD or something like that. I mean, you get more I/O than a MacBook Air, and for less money. Okay, you are absolutely sick in the head if you do not already own one of these things. Get on it, people.
Appreciate that. Let's let drunk dial me continue, and then we'll continue to go around the room here.
Is my mic working right
Oh, sorry. I was in the middle of doing field
You're
research
quiet,
on
Dusty.
the.
You're a little quiet, Dusty.
Hello, is my mic working right now?
Is that who is that? Dusty or Elias? Is that Dusty?
Yeah, Dusty, you just got to raise the volume a little bit, but we can hear you.
Dusty, go to the settings on here and put the volume up.
Hey, ironically, I was in the middle of doing some, I guess you could call it field research with my neighbor on what the new Monero versus nose powder peg is.
We're getting an echo, guys. Everybody who's not talking, keep yourselves muted.
Okay.
I'm sorry, Drunk Diamond. What are you referring to? Are you referring to the street price of?
Yeah, sorry. When you called on me, I was in the middle of doing some field research into the street price of the peg between Monero and nose powder.
Okay, that's not going to hold very long.
I was telling Bawdy, that might be something to look at historically.
That's not going to hold very long.
That would be a cheeky, negativism to say to Monero, like, "Oh, your price, that's the only cryptocurrency backed by something real, cocaine."
Exactly.
I mean, it's because you're assuming that the price of Monero in any kind of significant adoption is unsustainable at what it is. And this is the other thing that people need to realize. This is what we had with this. The minute you increase, you got a fixed money supply. So if you increase Q, where there's the decentralized or the centralized version of it, or both, then your price has to go up. So the price of USD in terms of Monero has to go down. That's the math of the equation of exchange that I was talking about. But it's precisely the reason why I got out of Bitcoin long time ago, like 10 years ago. Started getting out of Bitcoin.
Hey guys, is the speakerphone better?
Yeah, you're okay. I mean, if you can make it a little make it louder, that'd be great. But go for it.
All right, I had an idea about nonces.
Okay.
Go for it.
So basically, rather than use a nonce, which is contributes to the majority of the energy and heat, right? Miners try to create a new block that is most similar to the previous block, calling it like nostalgic proof of work or something like that.
Oh boy.
You understand?
It's kind of outside of my area, but my instinct is what we have is probably optimal.
Well, what are you proposing that would do? I understand what it is that you're saying to do, but what are you saying it would improve?
Yeah, that's what I'm wondering.
Well, because right now when we receive a transaction, I guess we'd have to graph out the amount of transactions received by miners versus the amount of blocks created via the nonce.
It's
in a given second.
I mean, I still, like I said, I'm a call me a proof of work purist if it's truly decentralized. The solution to the environmental problem, the solution to the environmental problem, and I'm of those to take the point of view that it's real, actually, is to truly decentralize the network so that you're using energy that otherwise would have gone to waste, or that it could be repurposed, but only works in a decentralized fashion. And this is why I like the idea of people heating things with crypto, right? Because that only makes sense economically as long as you have something to heat.
I mean, I can vouch for the fact that my wife was saying earlier about how, thanks to ArticMine's idea, we heat our baby's room, we heat the crib, we heat all kinds of stuff with mining Monero. But the thing is I can attest, because I mean, it's in the name, right? Alaska Non. I mean, even in the summer, I can use the heat up here. But the other thing is, in the summer, solar energy in Alaska is unbelievably cheap because you have the 20 plus hours of sun for most of the summer. And I can tell you, like, I think that the idea that you know, the heat is a problem or the energy usage is a problem, I just don't buy it. But the thing is it's interesting for other reasons, because I'm wondering if there actually wouldn't be efficiency improvements in that. But I don't know enough about what the processing, or like how much the difference of the processing power that.
No, it's not efficiency improvements. The point is, and I've kind of felt people always say you're going to heat the baby's room. Well, you have a finite number of babies. You're not going to ask him.
I'm trying to
serious.
fix that.
I'm serious, but this is the point that I'm getting at here, because if you are using it for something else, then that's finite in nature, and that means it only works if it's decentralized. And that's the beauty of it. And same thing with the solar power. Yeah, you can put a certain finite number of solar panels on your Alaskan property. And guess what?
I mean, I do have a lot of property, bro. That would be like.
But still, you have a finite amount of property in which you could put solar panels on.
I would run out of solar panels way before I'd run.
Okay, fine, fair enough. I mean, so you have a real solar farm opportunity there.
My question wasn't really about the environmental issue. It was more so just making it more efficient for the sake of efficiency.
But how can you make it? It's not about efficiency.
So
it's about deterring cost.
Well, hold on a second, though.
If
Keep
the
going.
network
I'm
only
listening
contains 5 transactions, like if miners are only receiving, say, 5 transactions of 2 minutes, which is completely, obviously ridiculous, but just then they only have 5 to the 2 possible outcomes for the transaction hash.
Okay. So
which would make it more efficient, because
yeah, it would eliminate the
only
need to explore all of the different block options. So you reduce
nonsense,
yeah. And as long as somebody,
but there is an efficiency. There's an efficiency in increasing the transaction throughput, because you're spending the same amount of energy to process larger numbers of transactions.
Well,
So
here's my question though: what if you had, in the same way we have dynamic block size, what if you had dynamic block times, and when you have low transaction volumes relative to the size of the network generally, you were to switch to that system, since that it would be more efficient? You see what I'm saying? Like, that's what he's saying, is because in theory you could take like a 2-minute block time and drop it down to, like, I don't know, 10 seconds or something during super slow throughput. But the other thing is, if you scale it with processing power over time, like would be expected, I mean, you could reduce the block times amazingly well if somebody were to implement this correctly. I mean, somebody
you would have to have a constant size. You would have to have a constant size in the difficulty. If you would vary the difficulty, then that would be confusing, right?
Okay, and here's the problem that you have. You're running a worldwide network.
Mm-hmm.
The minute you lower your block times, in fact, you start getting offer blocks. If you start going into the 10 seconds and this kind of stuff, you get into relativistic effects. The speed of light on fiber. So the issue you get into,
so you'd have to set a hard cap for like a hard, not floor, I guess. You'd have to have it first to even entertain it.
Realistically, I mean, Monero used to have 1-minute blocks, and we were getting a lot of over blocks. And we had to go to 2 minutes to avoid the problem. So we were pretty close to optimal there. Ethereum has tons of uncle blocks. That's why but they also have to concentrate the distance between all the validators. Because the way Ethereum with proof of stake is going, is going to have very small.
Before you move on, I have a question though. What if you did this in the context of like sharding, right? So maybe Bawdy might have something to say about this, but what if you took this idea of when you have low transaction volumes you were to use this, lower your block times and shard the network. So then my question would be, there's probably some kind of attack surface I'm not thinking about.
Sharding is a great idea, but the biggest issue you have with sharding is that the most efficient, the optimal use of the network is actually the far apart transactions, not local transactions. At the local level, you can pay with cash. You don't even need Monero. Or you have very efficient debit systems in certain countries. It's when you start talking about international transactions and synchronizing the network across the whole world that you get the advantages of cryptocurrency. So the problem that I have with sharding is a great idea for something like Ethereum. If you got a whole bunch of different chains on there and you shard each chain separately, I can see that. But for something like Monero, sharding becomes an issue because you still have this business of, well, the optimal transaction is not I'm paying somebody local, it's I'm paying someone half around the world. So you've got a network whose primary purpose is big international transactions in small amounts, not localized transactions. So sharding,
that is a good point.
You know, there's another coin. There's some coins that have near protocol. In fact, I heard a talk from them in Vancouver on that. And sure, you got all this sharding, but that's great. But what you want to be doing is you want to be interacting on a worldwide basis and not on a local basis, because the advantage is on a worldwide basis. And so when we talk about sharding, I always get very skeptical. I mean, there are places where it makes sense, but I don't see it here. And so on a worldwide basis, I mean, let me give you an example. Has anybody here been to the Chaos Computer Conference in Germany before?
No, but what is a shard in this consideration?
Well, the idea is that you shard locally, and so then you limit the latency associated with transferring data with fiber optics, which it can be in the range of 300 or 400 milliseconds, or even 500 milliseconds. So it starts to get very significant, and so you shard.
But what is the data structure of the shard? Is it a block? Is it transaction?
Well, no,
the
data structure would be that you would have some networks that only communicate less commonly, and the localized.
Have you ever heard of SplinterNet, slave blocker? Have you ever heard of the SplinterNet concept?
Yeah, we went over that. So it's sort of a sharded network. That's what you're saying.
In fact, Ethereum is current. I don't know. I don't play with Ethereum, but I'm pretty sure they're doing it now. It's working pretty good. The problem is there's always the consideration of number one, orphan blocks, and then number two, would you lose some privacy if you had localized transactions?
Well, you have to. But Ethereum has massive amounts of uncle blocks. They call them uncle blocks rather than orphan blocks.
So hey, can you touch on that more? What uncle blocks are?
Yeah. In Ethereum, basically, uncle blocks are orphan blocks. And they have a real issue with orphan. They have a way of dealing with them, trying to mitigate it.
Yeah, because they're so centralized, they have tricks that they can use that Monero would not have available to them. But we wouldn't want those available to us.
One of the advantages, sorry. One of the advantages. You think that using the depot to go out to Binance? No, I think that's a matter for individual users. But I'm not going in there because that's part of the question, the reason I'm here. But no, the debt fund shouldn't be doing that. I think individual people that are hurt should be doing that. That's my answer to that.
But back on the idea of what Dusty is suggesting, the first thing that would have to be done before we started using an idea like, I can see how, though, if you could implement it correctly, this could be used for a lot of interest. In fact, it might even help as far as reducing the size of the blocks. But we won't even go there right now. But the thing is what's very interesting to me is if somebody could find a way to make it work, right? There's the possibility.
That's interesting. That's interesting.
But
because
what's make it work mean? I mean, and what is your application? I mean, this is the question.
Like, as an example, okay, right now we have a 10 block lock for purposes of security and ring signatures and all of that stuff, which is great. But 10 blocks is going to be less relevant when we have the ability, you know, the full membership proofs that are going into Seraphis right now, hopefully, and all that. We probably won't need a 10 block lock. But then the next question becomes, what about orphan blocks and what about other, you know? But
well, I mean,
you could put together these ideas where if you did reduce the size of the chain by using this idea for whenever transaction volumes are relatively low, combined with the idea of we don't necessarily need 10 whole blocks anymore, you could end up in a situation where instead of 10 blocks at an average of 2 minutes a block, you could have like 7 blocks at an average of like 1.3 minutes a block.
But how does that make it smaller? Because you have less transactions. Most of the volume in the blocks are transactions.
Well,
if you have less transactions, you have smaller blocks.
But the thing is if you have where some blocks are calculated differently, okay, then it would theoretically be possible to reduce the size of the block. I mean, not a lot, but it would.
It seems to me, I mean, if you want to reduce the size of blocks from a storage perspective or prune stuff, then you start looking at, do we need to store all the witness information and the proofs and stuff like that? Once you're deep enough in the market, and that's
the size of the blocks is completely over. Like, the fear mongering is hilarious to me because it's kind of a ridiculous argument. But the thing is, from Monero's perspective, as devices get larger compatibility, like maybe one day, for example, Apple will start adding more than 8 gigs of RAM and maybe even 512 is the default for their hard drives, right? But the thing is the larger
small Apple devices are 512 for the hard drive.
I don't know. I've never bought an Apple device since like
I haven't either.
But like and when I did that, it wasn't even for me. But the thing is like as you have this ever increasing pool of like mini devices, it would be cool to be able to integrate them into the Monero ecosystem. And if you combine this idea with what you're saying about there's a lot of data that we store right now that probably doesn't need to be stored on the blocks, and all of a sudden you open it up to more and more devices participating in the network. And here's where I think that this is so interesting, though. If you were able to reduce the size in the growth of the Monero blockchain, if you were able to reduce it over time, then what that would also make possible is now sharding might not reduce your privacy. And what I mean by that is if you have more devices participating, more of them doing it automatically.
Yeah, but how would you do sharding in Monero?
Transactions. What's that?
How would you do sharding in Monero? Let's stop at that point. How would you do sharding? Forget about privacy. How would you do sharding?
That's the tough. I mean, the thing is I'm just now thinking about it.
Okay, but this is the problem because if you don't, so if you focus on the problem with sharding is, and I give you why it can make sense in Ethereum. Ethereum is supposed to a whole bunch of different projects. So you're running USDC and USDT. Do you have to put them on the same chart? No. You could put all the USDC on one chart and all the USDT on a different chart. So you have the opportunity to break by functionality, but something like Monero, where is your sharding opportunity?
So
that's the question. That's what's more basic than that.
Just off the top of my head, right? And once again, like I am far from having thought all of this through, but let me give you an example. So let's say you had a community in a rural place with bandwidth and internet connectivity issues. Okay. And let's say you were using, maybe it's like RFID technology or camera technology or whatever. If you pull through this lane for cars and you grab a coffee from an automatic coffee machine or something like that, and you were paying with Monero, right? And you just show them a QR code and then maybe that transaction is processed outside of the location in which the transaction took place. Does that make sense? So now you have, hold on, let me mute. I got a cough. But like, it might, for example, allow for something similar to a cold wallet to make a transaction on a local network that then just at a better location for using the internet.
Okay, so it's a geographical chart that you're talking about.
Yeah, like, so, and this is a real problem. Like, I live in Alaska, as everybody knows, right? And the thing is, it's like, there are tons of places where even like the town that you're in has great cell phone service, except for between two mountains. Or like where if you started a business and you wanted to do Monero transactions or whatever, I mean, wouldn't it be kind of cool to be able to, you know, collect payments from people and then put the payments through later? Or, you know, it's...
Well, I mean, to a point, you could segregate the network and then process them. I mean, and not connect to the network. But I mean, but this type of situation, this is why, you know, one has to look at what Monero can do. That could be the case where you may want to have a second tier network to handle something like that. Or you may want to have a level 2 of some kind. That's kind of what I'm getting at, because those are the kind of situations where it's a very localized, and is that really the best solution to the problem? I don't see Monero as a solution for everything. I mean, if you have a very localized need, is Monero even the best option? Are you better off with some sort of localized currency that you can use for that on a second level? I mean, my question. Or are you willing to fund this thing with, say, a limited number of transactions and then you trade on the second level? I mean, you don't have to have, for a localized currency, Monero may not be the best solution. It may be a way to on-ramp onto it, but it may not necessarily be the best solution. And this is one of the things is to realize it's not an end-all be-all for everything. It's,
I mean,
something
Monero actually is technically an L2. Because allow me to show everybody, there is an L1 local payment solution. It's right here. They're called gold backs. And it is physical gold in thousandths of an ounce denominations. But, you know,
which you on-ramp back and off from Monero, and you use that in the area with poor connectivity. I mean, that to me makes more sense, because what you're dealing with Monero, this is one of the things. I'll give you another example, because there's a town, and it's similar to what you described. I drive to from Vancouver to Prince George, and I stop at a place called Clinton, and it's got lousy internet access. And you stop at this place called Clinton Inn, I think it's called. And for a while, they had a centralized piece of point of sale service that was used to communicate between the dining room and the kitchen that are like 10 feet apart, through a satellite connection to a server in the States and back to the dining room. And you order your bacon and eggs or whatever, and they couldn't tell it to the kitchen because they have to route it through to a server in the States and back again. Why? Why don't you just write it on a piece of paper and hand it up to the cook? I mean, sometimes a simple solution is a better solution. That's what I'm saying. So if you have a physical tool like a gold bar, like what you showed me, that is a great solution for that local area. And then you turn around and say, now we're going to on-ramp on and off from Monero, and you only need one connectivity in the place where you have good cell service. There's your answer. You have it right in your hand. I mean, see, so all you need is an on-ramp.
There's other reasons why the idea that Dusty is suggesting might be interesting too, though. Because we also don't know necessarily, because a study would have to be done to see just what areas the efficiency would improve the most. But it might be interesting to see this as a solution, even in a larger transaction pool, just at which point the number of transactions stands to have a reduced processing overhead. Like, how many transactions does it take before it's no longer gaining the kind of efficiencies you would expect it to?
My thought on this, and this is why you get the ridiculous thing that I saw in Clinton, where people were communicating through a server in the States or a satellite connection to deal with some POS system, where they could just communicate it locally. It's that some of these things are better handled at the local level and create a local solution to it, as opposed to, because for that, and then you have your on-ramp, which is where someone like Monero can come in, and you have a good exchange mechanism between the two. It's really an advantage to try to do everything on an international blockchain, which is what Monero is designed to do, when you have a very localized need with maybe that is not the best solution.
Can I jump in for a second?
Sure.
So Alaskanon kind of has issues because of how remote he is, but
yes,
the place where Monero has one of the greatest opportunities and use cases is in the global south, where connectivity might even be worse or not much better. And then just kind of a second point, he brought up goldbacks. One of the advantages of strong trading pairs between goldbacks and Monero, and just gold and silver in general, is that if you travel abroad or just kind of going about your business, you can't be subject to a $5. This is a kind of a tangent, but you can't be as subject to a $5 wrench attack if you are storing your wealth or diversifying into gold and silver as you could with a digital asset, where they can basically twist your arm and make you give up your keys, or AI can somehow take advantage of you. So there's a strong case for what you're saying, doing local commerce in goldbacks or something like that. But also, that's where Monero is most needed, and it has the greatest opportunity for adoption, in my opinion. So there's kind of like
another thing that I just wanted
but
to
it
say.
can be the link, though. This is the thing. It can be the link between those local currencies. So you have a good on and off ramp that could be a way to move from one local currency in one town to the local currency in the next town. So you can, in that sense, turn these local things into a level 2. Like a classic example
One thing that we ran into up here. So I had been working on running a Monero ATM, which are now becoming a little more popular, but it's because I was trying to automate. I had basically become the only local Monero of Alaska. But the thing is the feasibility of trying to pull it off with the Monero ATM was, it is such a colossal pain in the ass to get enough Monero that it was literally like my largest expense was trying to get enough Monero into the Alaskan ecosystem. I've never ever had a problem having enough fiat. I've never ever had enough problem having enough gold up here. It was literally always getting enough Monero. And
what was the reason for that?
Well, for one, people hate KYC. They hate, up in Alaska, people don't like to go to gun stores because they ask for your ID up here. This is not acceptable to the Alaskan culture to be asked for your identity information. But the other thing is the technical proficiency of people in Alaska is in even larger, is even more disparate than you would find somewhere else, where there are people who know an absolutely incredible amount of all things tech, and there are people who they still do not know how to use a smartphone. And that's the thing is, most people who want to on-ramp to Monero, they want to download a wallet and have a physical person physically trade with them physical currencies for Monero.
What kind of numbers are we talking in terms of,
the price arbitrage is ridiculous. I get 175 all day up here for 1 XMR. But the thing is I run out immediately, right? Most of it is because I just don't want to rip people off. I don't want to start a bidding war and all that.
No, you don't want to do that.
But the thing is I will get a certain amount of Monero and then immediately turn it around for 175 all day, every day, until I've hit a point where I'm not willing to part with any more Monero. And that
you don't have an easy access to the Monero because...
What's that?
You don't have an easy access to the Monero because of the KYC rules that you have to get it in there. That's essentially the block.
Yeah, and the other thing is, so I do banking with basically every bank you can find in Alaska and banks you can't find in Alaska, right?
Yeah.
Like, and the thing is pairing. If you try to pair your bank accounts to say something like Kraken, I don't know why, but I have not met a single person in Alaska who has successfully paired a bank account with an exchange that you can just buy Monero. So then your next opportunity is you buy a different crypto on an exchange and you try to swap and all that other stuff. And then the next question is, well, the earning power of a person's hours in Alaska, right? Like the floor for being paid in Alaska, if you have like a halfway decent skill set, is like $30 an hour. So basically the Alaskan minimum wage is like $25 an hour. If you have to spend more than an hour, if you want to buy one Monero, if you have to spend more than an hour versus somebody just has Monero and you can buy it for cash, you've already pushed the price up past $175. It's literally an economic calculation. We're trying to secure Monero and taking the risk. The premium on Monero is over $30 per XMR.
Well, if it takes an hour,
why isn't Kraken available? I thought Kraken's not available in Alaska. You're saying it's available, but
nobody that I know of has tried harder than me, and I've literally paid a professional banker to try to link my existing bank accounts to Kraken, and the farthest they got was, we need even more ID verification. We don't have enough ID verification.
And this is from what, Kraken or the Alaskan bank?
Business stuff. I gave him like everything you could theoretically need. And I've gotten to the point where it is literally faster, better, cheaper, and easier for me to just mail cash or gold to people in the lower 48, which I don't do anymore because I had a horrible boating accident and I have no cash, gold, or Monero if anybody's listening. But the point is like, it is literally cheaper and easier to just mail gold, cash, silver, whatever out of the state and then wait for it to arrive. And the funny thing is, I have never been ripped off, not one time. I've done it allegedly maybe more than once and maybe a lot more than once. Okay, like the thing is you can mail it just a ridiculous amount out, but then you run into a cash flow problem. If you send out $15,000, $20,000 in cash in the mail, you're already on a list by that point. But you know, if you start,
okay, but what about a gold dealer in Alaska that sells gold for Monero?
I mean, literally everybody's a gold dealer in Alaska because
okay, so it's a lot of gold in Alaska. Why not set up a gold dealership company and take payments in Monero?
Because nobody wants to get rid of their Monero.
No. You sell it to the people
will
in the
sell
south.
their Monero in Alaska.
Because what you're doing is you make it available to people in this lower 48. You're a gold dealer.
That's what I do now.
And you ship the gold down to the lower 48. And even to parts of Canada, and people will pay you a Monero. That's your answer.
Yeah, like no, that's literally what I do right now. Is
because if you have set up a gold exchange and sell gold coins and gold bars or whatever.
But Monero. Then you run into this other thing where if you become a gold dealer, then you have to do all of this stuff about like tracking where the gold went and the names of the people you sent.
Oh yeah, no. But you do the same. I mean, there are a lot of people in the lower 48 and in Canada who will quite gladly buy gold, KYC themselves for Monero. And then you have a supply of gold locally.
That is what we do. But then the thing is now I'm also obligated to keep all of these records, and it's a huge pain in the ass.
Oh, I realize that. I understand that. But that's kind of the way around these issues, because what you're dealing with is likely bankers.
And what I'll tell anybody listening right now, if anybody wants an ounce of gold, I'll even give you a fancy one. I'll give you like an American gold coin that's like verifiably, provably. You can hit me up. If you got Monero, I got gold. Well, I used to until the boating accident. It was horrible. We lost everything. But, you know, you hit me up because it may happen again. I'm just saying, you know.
No, but think about it. I mean, there are ways around. One of the issues that you get into with KYC stuff, and I mean, I'm kind of more, because I tend to operate between the two. Like, I believe in the bank and I believe in the cypherpunk. I just don't like insolvent banks masquerading as cypherpunks. But the answer rely in the simple fact, and Alaska is obviously a net exporter of gold. There's a lot of gold mines there.
Oh, by person, it's like hundreds and hundreds of ounces. It's a lot.
Okay, so people around the world want gold.
I got, for example, guys from Coldfoot that own massive private gold mines.
Okay, so there's a business opportunity
that they would love to turn into Monero. Right
there is a business opportunity. Set up a gold dealership, sell gold for Monero.
It sounds like the solution here is that when we have Alaska Monerotopia 2025, we just put a lot of effort into doing all our Christmas shopping in Alaska. Just like we should do in Argentina in 2024.
We all come back with bars of
Let me
gold.
tell you my own experience on this because this is quite interesting. If I go to my bank, let me tell
I
you
went
something.
to Mexico with a backpack full of gold, silver, and cash. A backpack full, okay? And I could not leave with Monero. I offered people crazy prices, all right? And I swear I offered people ridiculous exchange rates. And I still didn't even leave with hardly any more Monero than I had. And I got all that Monero from selling graphene phones. I didn't even get it from the gold, silver, dollars or pesos.
But keep in mind, people that are going to a place like Monerotopia, like I don't take all my Monero because I don't want to cross international boundaries with it. So I
crossed international boundaries with a grip of everything, and nobody would sell me their Monero. I tried so hard, and nobody would sell me their Monero.
Maybe not in Monerotopia. You'll find people willing to sell Monero. You might find people wanting to buy it.
Yeah, and that was the thing. I went there willing to pay way more than what I think. I offered one vendor like $250 a coin or something like that. I was like, you can mix and match. I'll do gold, silver, dollars, pesos, and all of the Monero I was able to buy were people just trying to sell just enough to pay their month's rent. They just wanted their rent money, and that was all they were willing to part with. It was actually quite frustrating because I spent a whole bunch of money on exchanges and then I ended up taking a loss on the exchanges for pesos to dollars to pesos.
Listen, guys, I gotta cut in here for a minute. We are at over 5.5 hours.
Yeah, I'm actually starting to want to get a meal and take a break here.
We have broken records in time, way more than ever in amount of viewership. Although I gotta say something must be broken because it just keeps showing we're at over 600 live viewers according to Twitter plus YouTube.
Yeah. So anyway,
hey Doug.
Yeah,
Doug. One last thing.
Yeah.
So in between your segments, make sure you're sponsoring the segments with Monerotopia, Moneronoto, and set that up as a thing, and then also cut some commercials with Sonita for Monerotopia and Moneronoto.
Dude, you are like a marketer extraordinaire, man, and the ideas you've thrown out there with regards to Monero adoption, keep it going, man. Keep it flowing. I'll probably reach out to you, drunk dial me for more particular ideas on what we should be doing on our end.
I'm not interested in selling Monero right now, so I can't help you.
Do you think that could
no one answers either? It's quite frustrating.
Wait, hold on. We have somebody that wants to. Who's trying to chime in here?
Hi, it was me. Do you hear me now?
Okay, you waited 5.5 hours. Go for it, man.
Yeah, sorry. I'll try to be quick, but it's about this block time issue. You talked a bit about it, but now I figure it like this: that you want Monero to function as digital cash, and cash is quick, right? It doesn't take 2 minutes to pay with cash, so it's a real problem from a user side. So you would like to get that down, I think, and then ArticMine described that there was an attempt to move it to 1 minute, and there were problems.
But no, it's the other way around. It was originally 1 minute, and there were problems. It was moved to 2 minutes.
I see, but and I understand that those problems were perhaps related to orphan blocks or reorganizations of the chain that happen more often. But my question is, why are you so afraid of that? Can't you just have a system where that happens? Okay, it happens a little bit all the time, but it happens at a level that you control. It's like you're trying to set a block time that will cause it to almost never happen, but it will anyway happen.
Because we're talking about a problem that is actually not as serious as you think. Most credit card transactions are not processed in real time. And if you think they are, you're very naive. Most credit card transactions are batched and take 2 to 3 days to process on a worldwide network. What they do is they take a risk. The merchant takes a risk that a certain percentage of them will go bad. That's why you get the tap. The tap, they can reverse those. So the merchant is taking a risk to get the fast transaction. A typical tap transaction is riskier to the merchant than a zero confirmation Monero transaction. So it's the double spend attack chance is not that high.
Because the reality is this problem will fix itself. Because Monero is a newer technology, a lot of people are more skittish about trusting it.
Yes.
But the reality is when people get used to the idea that Monero transactions, after you see them in your wallet within 2 minutes, there's like a 99.99% chance that it went through. And people will become much more comfortable with that risk, especially when they realize that they're saving 2.9% on the transaction versus using a Visa. Like as soon as people realize that they're actually saving money by taking that risk, even if it's you pay with the Monero and then you just leave. If people get used to the idea that the transaction was sent and then that's all they need to see, that risk becomes palatable.
Guys, I'm hitting a hard stop here, unfortunately.
Well, I think you should because I'm starving.
Okay, Tux, you could close it out. You could let them finish up if they like, but I gotta sign off on my end over here.
Yeah, so
Tux, are you there?
I think I'm gonna have to go also, so I will leave you guys.
All right, Elias, check in next time. Sorry we didn't get you up here until the bitter end. Next time, please jump up on stage and open your mouth sooner.
Not too harsh on the mellow, but I do have a discovery. Unfortunately, the live viewer count is false. The Twitter count is the total amount of views, not the total concurrent live viewers.
Right.
There you
go. Well,
it
was fun to watch it climb.
Yeah.
Still breaking records nonetheless. Thanks everybody who joined. We do these shows every Saturday at 11 a.m. Arctic, thank you so much for hanging with us all day and walking through everything and dropping so much knowledge. And thanks to everybody else that participated, obviously. See you guys next week, Saturday, 11 a.m. Eastern. Ciao.
Okay, bye. Ciao.
Thank you for joining us on this week's Monerotopia episode. We stream live shows every Saturday at 11 a.m. Thank you for joining us on this week's Monerotopia episode. We stream live shows every Saturday at 11 a.m. Eastern. You can find and subscribe to our show on YouTube and Odyssey, or listen to the podcast on iTunes, Spotify, or Stitcher. Don't forget to follow us on Twitter or join us in the Monerotopia Telegram group. See you all next week.